Welcome back. You're watching us here on Bazaar Morning Call. The Gift Nifty indicates that the start could be a good one for the bulls. The question is whether it sustains and do we see any sort of formidable recovery. All eyes will be on geopolitical developments. But amidst all of this, our research team standing by with CNBC TV18's list of top stocks for the day. A lot of them impacted by the geopolitical tensions itself. First, let's go across to Sonal. You have a bunch of stocks that you're tracking.
Yes, the entire gas chain, the listed gas plays, because Qatar has now announced a force majeure after announcing a halt in production that we got to know over the weekend. Now remember, when force majeure is invoked, the supplier can suspend deliveries without penalties because the conditions are beyond their control. Qatar has formally notified the buyers now that it may be unable to meet supply commitments due to circumstances which is outside their control. Now remember, Qatar basically supplies 50% or the total imported gas needs that the country has. Additionally, Gujarat Gas has also confirmed that they have cut supplies to their industrial customers with effect from 6th of March. They say that act of war is not covered by the insurance taken by the company. So the impact could be material. However, they are not able to quantify it yet because the situation is very uncertain. But if it continues, it could be a big impact on the company's EBITDA. So all these companies will continue to be under our radar.
Got it. All right, Sonal, thanks a lot for that. Let's hop across to Sudarshan. He's here because he's tracking Bharat Forge. Morning, Sudarshan.
Good morning, Nigel. So amid West Asia tensions, one stock that might react positively on the back of positive news flow is Bharat Forge. We have Class A truck orders for the month of February, and this is for North America. And only one stock, Indian company, that is in the focus because of this is Bharat Forge. None of the other companies have any exposure to that. Now talking about the headline numbers. So Class A truck orders have increased 47% month on month and almost 160% YOY. And the total number is 47,200 units, which is the highest that we have seen since September of 2022, and 20% YOY growth. More than that, we have seen for the third straight month. Now, there are majorly two segments. On highway, basically those trucks which are used in public use, and second is vocational market where trucks are made for specific use. Both these segments have seen healthy growth. Why Bharat Forge is in focus? It supplies forged components and drivelines parts to Class A trucks, and Class A trucks form almost 16% of their standalone revenue. So on the back of huge growth in the month of February, we are going with green for Bharat Forge.
Thank you very much for that. More stocks and news with Ria.
Well, yes, let's start off with fertilizer companies, the likes of Chambal Fertilizers, RCF, as well as GNFC that will be in focus today, as their impact can be, the output can be impacted as we face supply shortages for LNG. Now, remember that LNG is the primary feedstock for the production of ammonia and urea. And also important to know that Qatar is India's largest LNG supplier, accounting for roughly 40% of India's LNG imports. Now, any further supply shortages in LNG and also the higher prices may lead to some reduced operating rates for these companies, as well as temporary shutdowns in extreme cases. Apart from this, BSE will also remain in focus today, as SEBI has given its nod to launch derivative contracts on the Sensex Next 30 index, and they will be launching monthly futures and options contracts. Keep an eye on Vodafone Idea, as well as ICRA has upgraded the rating to BBB from BBB- with a positive outlook.
All right, Ria, thanks a lot for that. So those were a bunch of stocks that we are tracking today. In case you missed it, a recap. Stocks with positive news flow, we have Bharat Forge, BSE and Vodafone Idea. Stocks with negative news flow, we have the entire gas value chain, Petronet, LNG, IGL, MGL, GAIL, Aegis, Vopak Terminals, Gujarat Gas, and some of the fertilizer stocks. All of them commodity linked. So obviously, let's go across to Manisha Gupta for a quick roundup of all the action from the commodities market overnight. Manisha.
Thank you for that, Mangalam. I want to start with aluminum because that clearly has been surging in the last couple of sessions. With the kind of gains that we have seen overnight, we are now trading at a 4-year highs for this one. Aluminum prices have gained up by 7% on a weekly basis as well. This is after the major GCC producers have stopped aluminum refining activity, and the smelting activity also seems to be taking a hit. So supply disruptions and force majeure declarations coming in from the Middle East have led to aluminum prices on the higher side right now, with most of the banks and brokerages also talking about much higher prices from here on for the rest of 2026. But it's not just aluminum. Take a look at the gold and silver prices. The decline in US dollar index, which is off its 6-week highs, has been supportive for gold and silver both. U.S. confirming global 15% tariffs to begin this week has supported markets. And in any case, the higher oil and gas prices have revived the inflation concerns that usually leads to buying in the inflation hedge, which is gold and silver. And finally, about the crude oil prices, well, that seems to be holding above that $82 a barrel mark, with the West Asia tensions entering day 6 and the commercial shipping through the Strait of Hormuz halted. You are looking at further gains continuing here as well.
Thank you very much for that. Important as always, Manisha. We will slip into a break. On the other side, we'll connect with the management of Sarda Energy to discuss the impact of US-Iran conflict and steel demand.
Welcome back. You're tuned into Bazaar Morning Call. Well, let's focus on Sarda Energy and Minerals. We have with us Mr. P.K. Jain, the Group CFO, who joins us on the show. Hi, Mr. Jain. Good morning and good to see you. Well, before we come to you, just highlighting to our viewers the three main points where we're going to be focusing on. The impact of the US-Iran conflict, steel demand and pricing situation here in India, and what's the outlook for SKS Power? Well, Mr. Jain, thanks a lot for joining in, sir. Let's start off with the first point. The geopolitical issue has thrown the world into a bit of a tizzy. Not just demand and supply, but also the logistic front has become a little bit challenging. Anything that you have observed? I don't think exports are very large for you, but you could clarify on that. And also in terms of raw material imports, have you got hurt a little bit?
Good morning, Nigel. Definitely, the Iran and US war has an impact, particularly on the logistics side. Logistics are affected. That has a bearing on the ocean freight as well as the energy pricing, including the coal and coke. Coal and coke has also firmed up a little, maybe around $10 a ton. So far as our exports are concerned, we are not exporting anything to Iran. Our exports are spread across the world and particularly higher on the Japan. So it may not materially affect, but yes, export freight will have a bearing on the export realizations.
Got it.
But
All right.
ultimately, that will get adjusted on the domestic price.
Okay, so just one quick point. As a percentage of your mix, how much is exports?
Exports is in total sales, it's around 20%.
20% of your total steel sales are to the export market?
Yeah, total sales.
Oh, that's
we are exporting only ferroalloys. No,
ferroalloys. Okay.
yeah, ferroalloys. We are exporting about 50% of our total production is exported, and if you see on the revenue side, 20% of the total revenue is export revenue.
20% of total steel and ferroalloys revenue, or the total revenue of the company?
Total revenue of the company I'm talking about.
All right, so that's a fairly large number. So as of now, have any of your exported quantity got stuck anywhere, or has it gone to its destination? If you could help us out with that. And also, how much of a raw material is imported? You said coal and coke prices have moved up. How much of it is imported, because you have a captive block as well?
Yeah, we are not importing much of the coal and coke, but definitely magnesium we are importing a substantial, maybe around 70% of our requirement, 70-75% of requirement is made from the imported magnesium. Coal and coke, mostly we are meeting from the domestic, or even from the imported also. Some RB2 quantity is imported, but that is not material enough.
Got it. All right. Let's focus on pricing then, sir. Could you tell us how is steel demand here in India? Because the talk for the last many months has been we are outperforming the globe. Is demand strong enough? Has it bounced back? And also, we had the safeguard duty that was imposed. So if you have to give us a number, the average pricing in Q4 in comparison to Q3, what is it? You are into long products, and I believe the price hikes have been higher over there.
Yeah, the demand has been reasonably good, and that is reflected even in the pricing. When we compare the price of the Q4 with the Q3, there have been increase of around 10 to 15%. In case of pellet and sponge, means the intermediary products, the price increase is in the range of 5 to 10%. But in case of finished product, including billet and downstream products, finished products, it is in the range of 10 to 15% as compared to the third quarter.
All right. So long per ton should be up by around 7,000 rupees. Will that be fair?
Long, no, it's around 5,000 rupees.
5,000 rupees. And you're predominantly into longs, right?
Yeah, we are predominantly in the longs.
And demand is good?
Yeah, demand is good.
Okay. All right. Now, Q3, the numbers were weak because you had a shutdown. Everything is up and running now, functioning as of normal?
Yeah, the power plant was under shutdown. The IPP power plant of SKS, what we acquired, that is restarted production from 17th January. So for about 15-16 days of January also it was under shutdown.
Got it. All right.
But that was part of the normal shutdown. And whatever we had projected for the annual, we had projected 400 crore plus units, and we will be crossing that comfortably.
400 crores of what, sir? EBITDA?
400 crores of units of the power generation from IPP. And because of shutdown in the third quarter, generation was on lower side. But annual target, we had given 400 crore units, and we will be crossing that with a comfortable margin.
Got it. All right. And for the next year, from this unit, what is the total target? Of last year it was 400 crore units. From the power plant for the next year, since it should be operational for most of it, what will it be?
It will be in the range of 425 crore units.
420.
Every year we get one unit under shutdown. Alternate year, one of the units is taken under shutdown. So that was part of the normal shutdown. There was nothing abnormal.
Okay, got it. Now, since you're saying long product prices are up, the power unit as well has restarted. Q4 back of the envelope calculation suggests that maybe we could have one of the best quarterly numbers. Your previous best was around 617 crores, which was in Q1 FY26. Q4 could be as strong as Q1?
may not be higher than the quarter one because the quarter one is June quarter where you get the best of the realization in case of power.
Okay.
So that may not be the best one because this quarter prices are not as good as in the what we get in the first quarter of the uh, year.
So about 550 crores or it should be doable of EBITDA.
It should be reasonably good. Giving any specific figure will be difficult. It
Okay.
may not cross the. Yeah.
Okay. SKS, what's the next plan? All clear now? The Supreme Court has ruled in your favor, so it's all clear?
Yeah, everything is clear. Definitely now we will moving ahead with our expansion plans.
By when?
And,
By when can we hear about this expansion plan from 600 megawatt? What does it go to? What is the capex you need and how will you fund it?
We will be doubling the capacity. Exact configuration is being examined whether we will go for 600 megawatt, 300 or 660 megawatt or 800 megawatt. We are evaluating all those permutations and combinations depending upon which is most suitable configuration for our plant. And immediately we are going ahead with the government approvals. So it should take about 1.5 to 2 years for getting all the approvals, including public hearing, environmental clearance, then and consent to establish everything. It should take 1.5 to 2 years. Then establishing it may take another 2.5 to 3 years. So we assume 5 years period to start the generation from the expanded capacity.
Okay, 5 years period. And capex per megawatt would be?
Capex should be in the range of 8 crore plus, depends upon which configuration we go for. If we are going for the supercritical, it will be on the other side. If we are going for the subcritical of 300 megawatt units, then it will be substantially low. So it will depend upon the final configuration.
So in the next 5 years, can Sarda do an EBITDA of 4,000 crores, 3,500 or 4,000 crores post these expansions?
Yes, because there are other expansion projects are also in the pipeline.
Okay.
So we should be able. This itself with the expanded capacity of power plant, it should add about 50% of the present EBITDA level. So
4,000 crores by FY30 is a reasonable estimate in terms of EBITDA.
Post commissioning of the IPP expansion capacity.
Got it. All right. We look forward to hearing more from you because that's going to be the big trigger. Execution is going to be important, Mr. Jain. But congratulations on getting this SKS power unit at least all clear. We'll have to see how you go about funding this expansion. Thanks a lot for joining in.
Yeah, thank you. Thank you.
Let's get in Deepan Mehta. Deepan, Sarda Energy or other ferrous companies as well in yesterday's trade, suddenly they got spooked. Most analysts said that it's routine profit taking, some kind of demand destruction could have taken place. You have normally not liked the ferrous names, but any view?
Yeah, good morning and thank you for having me on your show, Nigel. I think that there are a lot of tailwinds around these ferrous, non-ferrous stocks, but these are all moving trains and they are well discovered. The prices also have rallied. In fact, recently, HR coil prices were at multi-year highs. So some of the positives have got discounted. And why they fall, I think the whole market is falling. So the sentiment is down, which is why sometimes from point to point you will see even steel stocks, non-ferrous and ferrous stocks going down. But typically, I think at best these stocks will give market-related returns. I don't expect them to outperform. And a great time to buy would be when the cycle also dips for the entire industry. So I would say it's better to just wait and watch at this point of time and maybe look for other good quality businesses which you have missed out so far. Look at those companies within your portfolio to take advantage of this correction which is there.
And what would those be?
Well, for one, if you don't have L&T, I think there's a lot of negative sentiment in L&T. But if you are a long-term investor, 3-5 year type of a view, then this is kind of a must-own stock to be part of your core holdings. Having said that, it's there in all our investor portfolios, our model portfolios, our family portfolios. So our views could be biased to that extent. So it's a great story to chase. In fact, within the Nifty 50, there are only a handful of stocks, you can count them on your fingertips, which have the capability to grow at least at mid-teens, and L&T is one of them. The second company which comes to mind is Indigo. I know that it is not liked at this point of time, and there's a lot of controversy post what happened recently. But end of the day, it's a great play, and its market share means something. In a good year, they can do almost 10,000 crores of net profit, which translates to about 15-16 times its price earning multiple. I think that's attractive. Massive capacity coming on stream as well, and international routes can be highly profitable and new growth engine. So like that, I think, these are two good quality stocks come to mind. And then there are, of course, a few mid-cap stocks as well. But this is a great time to look at businesses which you always missed out. You wanted to buy because they were expensive. But now I think because of valuations, the risk return profile favors you and there's margin of safety.
Oil and gas has not been a favorite of yours for the fact that it's a regulated business. Is that true?
That's right, but they also have their moments in the sun, and end of the day, these companies also have delivered decent returns. Look at the 5-year, 10-year kind of returns, stock price returns; they've been pretty decent. And corrections like this also are a good opportunity. I think whether it's BPCL, HPCL, IOC, the full benefit of refining margins because a lot of capacity is going on stream will start getting reflected in the next few quarters or so. And also these companies are great dividend yields as well. So sure, I think such times are great times because you have to see beyond this crisis. You have to see beyond this oil spike and this disruption which we are taking place, and then see how these companies can do in a kind of a stable scenario. And if you're prepared for 2-3 soft quarters and have the patience to play it out, then it's a good time to even buy oil marketing companies.
Got that. Oil marketing companies in the last 2 days, Monday and Wednesday together, have lost about 8-9%. So there has been a sharp correction with the rise in crude prices. Dipan, stay on. Need to slip into a very short break. On the other side, we'll continue our chat with Dipan. We'll also invite our technical analysts, Sudarshan Sukhani and Mitesh Thakkar, for a few trading ideas. Welcome back. The implied open for the Nifty is a positive start of about 100 odd points. Just a bit disappointing, right? You've got the rest of the Asian markets up 2, 3, 4%. And the Indian markets are suggesting an opening with a gain of about 0.5%. And this is after the 1,000-point fall that we had in the prior 3 trading sessions. But what about the big movers that we had yesterday? Hormus joins in with stocks which saw heavy volumes yesterday. And perhaps there could be momentum in those stocks today as well.
Morning, Rima. And the big stock that has been spoken about ever since the US-Iran war broke out over the weekend has been Larsen Toubro. The stock has been on a 4-day losing streak and continues to remain among the top underperformers on the Nifty during this period, down 12% now in the last 6 sessions. In the F&O space yesterday as well, the 3800 put options saw premium surge up to over 150% as well. Volumes yesterday were the highest since July of last year. So fall as well on significant volumes. Was close to 80 lakh shares were traded yesterday, a 20-day average of around about 20 odd lakh shares, and more than half of those shares were marked for delivery. So close to 40 lakh shares marked for delivery, 20-day average of around 14.5 lakh shares. So fall on significant volumes and on significant delivery volumes as well. And the stock was the 4th most traded stock on the Nifty 50 yesterday. The defense is one theme that has continued to do well. Paras Defense is one such name. The 4th straight day of gains yesterday, but over the last 2 sessions is when the stock has managed to gain up to 13%. But the only issue is that it has not managed to sustain at those intraday highs that it has been making, neither yesterday nor on Monday as well. Wednesday's volumes were the highest since June of 2024. Over 2 crore shares that were traded. The 20-day average is only close to 12 lakh shares, and 11% of those shares only were marked for delivery. So which means around about 25 lakh shares marked for delivery, a 20-day average of close to 2 lakh shares, and the turnover on Wednesday, close to 1,700 crore rupees, was close to 2/3 of its free float market cap. And lastly, sugar as a theme did well yesterday. Balrampur Chini was among the top names. Of course, not the most heavily traded names, but so stick to the big one. Biggest single day gain in 3 months. Wednesday's volumes were the highest in September of 2024. Close to 70 lakh shares were traded. That is well over 20 times its 20-day average. And here too, only 11% of those shares were marked for delivery. So close to 7.5 lakh shares for delivery, the 20-day average being 1.5 lakh. So delivery volumes, yes, on Balrampur Chini, but substantially lower compared to the total traded volumes. The stock still down over 20% from its 52-week highs.
Take that point, Hormas. Thanks a lot for putting those into perspective. Dipan, you did speak about a couple of these large cap names. Did say that a few mid caps look attractive as well. What's your sense on what kind of sector, what kind of stock looks attractive after the correction? And specifically on sugar, do you think that rising crude prices, and as a result of which the possibility of increased ethanol prices could support them, especially after the correction that we've seen?
Mangalam, I think that I read somewhere that now the ethanol capacity also is causing a bit of a problem because it is significantly higher than the demand. And pricing always remains a problem with sugar companies, with the open tendering process. And a lot of the gains that these companies have to make because of shifting to more and more ethanol has been captured in the stock prices. So I would say that sugar is a good industry, no doubt, but largely I think the future prospects have got priced in. And as I said, I think at this point of time, when we are in a crisis zone like this, you want to look for the bluest of blue chip companies with great earning visibility, fantastic track record, good corporate governance standards. And those are the companies that you should perhaps look at, because normally when the markets are rallying, you cannot get into these companies. So we discussed 2 companies, L&T and Interglobe Aviation. You could add even a Bajaj Finance to that, again, a company which we and our clients are invested in. And then there are a whole host of mid-cap companies as well, which were fancied maybe 6 months, 1 year ago, but now we have seen a steep correction in them. These could be companies in the solar equipment business, the wind power equipment business, and even in the transmission business. So entire power energy sector, that looks interesting. And even within the travel space, very positive one, say a company like Yatra Online. I mean, it's got completely smashed in the last few trading sessions. Anyway, it was declining, and then this particular event caused a further correction. But look, it's a great story focused on corporate travel per se. Very reasonable valuation as compared to Make My Trip, which is listed in the US. And if you look beyond these kind of disruption in the travel sector, then this company has got great momentum behind it. Another company which comes to mind is BLS International, again, it is into insurance, into visa processing, a fancy stock. The subsidiary company does a lot of e-governance projects as well. That's something which we have in our portfolio as a measure of disclosure. And then there's Zaggle Prepaid, which is like a fintech company. Also, some other new age companies we like Eternal also at these price levels. So like that, I think companies who missed out to buy earlier, that's where we are kind of focusing on. There are certain companies which are providing services to US healthcare, health insurance business, like Sagility is there, Inventurous is there. I mean, these are all now available at 20, 25 times P multiple. They were trading at 50, 60 times around the time when they got listed or maybe a couple of years ago. And that time also the business momentum was very good. So that's the kind of drift or theme which I'm trying to follow over here.
Dipan, we've often seen that markets price in the disruption in the first few days. It's happened whether it's COVID, the Russia-Ukraine war wages on, but the market reaction has already played out. Do you think something like this has happened in the case of Iran and Israel already?
I'm a bit surprised with the market reaction. You know, I've seen such geopolitical events and I thought the correction is a bit overdone. But if I'm digging deeper, what perhaps is a bit concerning is the flows into the mutual fund industry. And they are at kind of, multi-month lows. Average used to be 30,000 crores or thereabout, but for the month of January it was 24,000 crores. And I don't think Feb also looks very good. And at some point of time, I think the retail investors' conviction and confidence is being tested, and this is the moment. So that one real figure, apart from the FI flows, which I'm tracking very closely, the mutual fund inflows. And at a time when even IPOs have dried up, we would have expected more action from the mutual fund industry, but that's not happening because of lower inflows. I think that fund managers are sitting on cash and are not that convinced to invest even at these levels. So I think the problem with the market, more than the geopolitical event, which is of course damaging the sentiment, is that of course the technicals, and you can keep asking that to the technical analysts, the technicals have got completely spoiled with market going below 200-day moving average, and more importantly, I think the liquidity flows coming from domestic investors, that also has slowed down. So it's not just the Iran crisis, but also some of these factors which are going a bit unnoticed.
Flows generally follow returns, and returns have been negligible or negative now for 18 months. So that's showing up now. February AMFI numbers will be tracked very closely. Dipan, stay on. Need to slip into a short break. We'll come back with the pre-opening. We'll also be joined by Adani Metal of JM Financial to put the spotlight on the oil and gas sector. And then our technical analysts will join in as always.
Welcome back. Less than 18 minutes to go for the market to open. The GIFT Nifty is indicating a bounce, though the premium of that bounce has narrowed from 110, 112 points down to about 80 points now, 52 points as we speak and lower. So to that extent will be very crucial to track the opening and where we go from here. And that also, ties in with what we have for you next, which is technical trades of the day. Sudarshan Sukhani and Mitesh Thakkar joining in, both of them. Gentlemen, good morning. Sudarshan, yesterday you did say that you were looking to buy the dip. If you got the right dip, the first hour panic low, you have made a decent 180 points from the lows. Wonder whether you did buy the dip or not. And today's small bounce, what do you make of that?
Yeah, good morning. Yes, yesterday was a good day. It was almost the lows of the day in the morning. But today is not the same. We are having a very small gap up. And this is when the US markets are cheerful. The Japanese market is extremely buoyant. We are not doing that because we have probably different stories here. The impact is different. I would not buy this dip. If you have long positions carried over, then take this small gap up as a place where you want to take your profits. Wait for a significant correction intraday. So somewhere around 24,500 if you get the Nifty, then buy the Nifty and keep a 100-point stop loss. If you don't get it, then don't run after a gap up. Don't run after the trade today. Let me clarify. What we are doing is we are trying to catch some relief rallies. We are in an ongoing downtrend. So when we get a good chance, we go for the relief rally. Otherwise, we stay away.
Mitesh, a gap up opening would position the Nifty around 24,600, yesterday's intraday high, and that's generally seen as a bit of a resistance level for the markets now. Do you think it can conquer that? What is the trading approach today?
That's possible, for sure. I think, that the market will find resistance at higher levels. But, what is important is that, one, we will start with a gap up. Now, yesterday I highlighted around 24,600 as the area to look out for. We might open around those levels. In case we don't see follow through, then I think we might come back to 24,400. But in case we start capturing that level, then this pullback should get stronger. And I'll still classify this as a pullback. And maybe, attempt levels of 24,800 or 820 thereabouts. So I think that's the target on the upside. But the medium-term structure is weak. But after a big decline, a vertical decline for the last 3.5, 4 sessions, I think a pullback can definitely happen. But I think it will be met with strong supply at, if not at 24,600, then at 24,800.
All right. What would your topics be, Mitesh?
Yeah. Morning, Mangalam. On the stock side, I yesterday also had a buy on National Aluminium that features in the list today as well. Keep a stop at 366, look for targets of 388. Buy on Apollo Hospitals with a stop at or just below 76.20 for a target of 77.50. Dabur on a mild pullback, which is around 490, 491.5, can be a sell with a stop at 500 for targets of 475. And NTPC is a buy. Keep a stop below 361 here. Look for targets of 377.
Sudarshan, your stocks?
Well, one of them is common. National Aluminium is a buy for me also. The stop under 365. TI India, which is Tube Investments, is a buy with a stop under 2,700. I have two shorts, CG Power, stop above 700, and Fortis with a stop above 925. It's going to be a difficult day in my sense.
All right. We take that point. Thanks a lot, gentlemen, for joining in. We'll come back to you shortly for the 9-10 calls and thereafter once the markets open as well. But the transit through the Strait of Hormuz remains shut. U.S. Treasury Secretary Scott Bessent did say that they will reach out to ship owners and insurance brokers soon to ease transit concerns, while U.S. Energy Secretary Chris Wright did announce that the U.S. Navy will escort ships through the Strait of Hormuz when the timing is right. Listen in.
I think we're inside the 12 or 24-hour window from our announcement yesterday, and that Ben Black, the president of DFC, has already had a plan in his pocket for months for this contingency, and we will be moving out to the ship owners, to the insurance brokers, and over the coming days.
we've offered to backstop, sort of be a reinsurer of the movement of these vessels. And even bigger will be when the time is right, and it won't be that far away, when we'll use the U.S. Navy to escort ships through the Straits of Hormuz. As you said, Laura, there's not traffic going through it today, but that's a temporary event. And fortunately, we have a world just massively well supplied, abundant oil around the world, and American production at record highs. So we'll get through this. It'll be a bump on the road, but it will change the trajectory of history to remove the menace that Iran has been for 47 years.
Well, all this has impacted oil prices here in India. Week to date, Petronet LNG is down 13.5%. That's basically 2 trading days, Monday and Wednesday. Oil marketing companies like IOC, HPCL are down 8-9%. City gas distribution companies, which also depend on CN LNG and pass it through, IGL is down nearly 7.5%. Dayanand Mittal, oil and gas telecom research analyst at JM Financial, is now joining in. Dayanand, the big disruption today has happened in Qatar, which typically supplies 40 to 50% of India's annual LNG imports. So that's created a significant supply-side shock. Can you first detail out the impact on individual companies?
Yeah, so this Qatar LNG plant stoppage is a huge concern for India. It's a huge 82 million ton odd LNG producer, 20% of global LNG supply, and almost 35 to 40% for India. So the worst hit is obviously Petronet LNG, given 50% of Petronet's volume comes from Qatar. Hopefully, this is a temporary issue. Whatever we understand from press reports, is that probably it might restart within a month, hopefully. But yeah, it start for a month or so, what seems like. Gas, the nature of the commodity is such that we can't have much storage. Unlike oil, where we would have 45-50 days of inventory. Gas, the inventory level, though we don't have the exact details, but would be very small quantum, and hence companies have started intimating to its customers about likely cut in the supply. The worst hit would be obviously Petronet because of the 50% hit to their volumes. The next in line, probably this would lead to spike in spot LNG prices. So other companies like Gujarat Gas who import spot LNG, for them it becomes uncompetitive to import LNG. Obviously, all LNG is not available as well. So they would be the next in line. GAIL would be the third. For them, the transmission and marketing volume will go down, though they also gain partly in other segments like petrochemical, LPG a bit because of this up move in petchem and LPG prices along with crude. But yeah, overall net GAIL would be the third hit. And then other CGD companies like IGL, MGL, they would be impacted, but to a relatively lesser extent.
You said there is a possibility of supply side disruption for 1 month?
So what I understand, this Reuters report, which is quoting industry sources, that it will take about at least 2 weeks for this plant to restart, and from then to get to a full production, another 2 weeks. So what they're saying, for this plant to resume to their original production levels, it's about a month, which is quite significant.
So assuming 1 month,
understand, yeah.
Got it. So assuming 1 month, going by that, input, what will be the EPS impact for a company like Petronet and even the others like a Gujarat Gas, GAIL, or any of these other CGD companies? Have you done any analysis?
So for Petronet, 1 month, 50% volume going down. So yeah, so almost like a 5-6% hit to their annual volumes. They do a EPS of 27-28 rupees, so kind of 1 to 2 rupee hit to their volumes, probably from 1 month decline. If it's longer, then just multiply that. But there are a lot of other variables which we don't have a clarity in terms of any litigation from customers, etc., which could hurt all these companies. Hopefully, because this is a force major event, so no litigation damages, etc., is what we foresee, but difficult to estimate. When companies have put out their press release, they are also finding it difficult to quantify likely impact.
Right. Would you value the upstream companies any better right now, given the sort of spike that we've seen in oil prices, or do you think that is temporary as well, and one need not, look at the price moves on a daily basis because of this uncertain situation?
Yeah, so based on past precedent, we haven't seen Strait of Hormuz getting blocked for a prolonged period. It obviously hurts not just India and others, but also China, which has also asked Iran to probably clear this, and also also Iran itself, for that matter, their crude also goes to a same strait. So we have been hearing from US that they are trying to figure out a way to ensure this gets cleared soon. So our sense is this is just a matter of few days and weeks and not months before things get settled down, and hence crude should come down. But given this huge event, we think crude might build in $5 to $7 geopolitical risk premium for a few months. So the old 65 probably may settle around 70, 72 for next few months till the disruption risk completely eases out. So I think, yeah, $5 to $7 per barrel of geopolitical risk premium might get built for a few months, and hence upstream company any which used to like. I think even if factoring in $70, $75 of net crude realization, I think there's still 10 to 15% upside in both ONGC and Oil India.
All right, 10 to 15% upside in ONGC and Oil India. And do you assign any probability to any sort of windfall tax coming in because of this higher crude? Because that has happened in the past.
Yeah. So the only thing is government, because they understand that it's very critical to boost India's crude and gas production, domestic crude and gas production, given we are 85% dependent on imports. They've taken a lot of measures. The key one being they amended this Oil Field Regulation and Development Act, ORD Act, in Jan 2025 last year, where they guaranteed fiscal stability for all E&P companies going forward. And Oil Minister in their meeting with investors have multiple times articulated this windfall tax which came post Russia-Ukraine crisis. Those are things of the past and won't appear in future. So hopefully government will stick to that. But any which ways, one should not build in more than $75 net crude realization for ONGC Oil India going forward. Given, except for this Iran issue, we are in a huge oversupply scenario. We have about 3.5 million barrel per day oversupply globally, plus Saudi is another 1 to 2 million barrel per day spare capacity. So I don't think crude sustaining above 66, above 70 or 75 for a prolonged period. So 70, 75 is a fair assumption for ONGC Oil India. At that level, there should not be any windfall tax. Windfall tax, if any, would be above 75.
All right. Hi, Dayanand. Good to see you in. This is Nigel on this side. We're getting news coming on Bloomberg where China has told the top refiners to suspend diesel as well as gasoline exports. I was yesterday tracking the cracks and they are actually moved up substantially. The margins have moved up quite a bit. We saw stocks like CPCL, in fact, move up yesterday. Now, there's various commentary coming in even from MRPL overnight. What is your analysis of this particular statement? How much does China export in the first place? And could this result in a meaningful spike in terms of margins?
So, yes, so all the countries are probably, if this thing escalates, continues, country will first focus on ensuring that the domestic supply of petrol, diesel is ensured. Exports would be the next priority. So they first order all these oil and gas companies, even this might happen in India, not to export for the moment. So in terms of near-term positive impact, yes, refiners benefit because diesel cracks shoot up sharply. For example, for Indian companies, diesel is 40 to 50% of our output. Diesel crack has gone up from $20 to $35, $40, $45. So $20 higher diesel crack into 50%, $10 boost to the GRM, which is huge for all these companies. But we all know it's temporary. But the risk could be, if these things continue, then there could be decline in their volumes because the crude availability goes down. So the throughput from 100%, 110% could go down to, difficult to put a number, but yeah, it can go down. First would be exports would be cut. Then there would be some rationalization in domestic consumption as well, like we are seeing in case of gas, when industries are being asked to reduce their offtake, etc. So near-term positive, but yeah, medium-term, it could be negative if things continue.
Refiners will include CPCL, MRPL, and Reliance Industries as well, right? Part of their business.
Yeah. All the refiners, including OMCs, all gain on the refining business because of this jump in diesel. But hopefully this doesn't continue for long, else their throughput could be at risk.
Thank you very much, Dayanand, for joining in. Let's get to our 9-10 calls. Pre-open awaits us. Sudarshan, yours?
It's National Aluminium, buy with a stop under 365.
Mitesh, yours?
I'll go with the buy on Apollo Hospitals.
Apollo Hospitals. Let's now go across to our Sudarshan for the brokerage call of the day.
So JP Morgan has initiated coverage on port sector. First one is Adani Ports and rating is overweight. Target here is 1944 rupees per share. And second one is JSW Infra with overweight call and target is rupees 310 per share. And says port sector offers structural growth opportunities and capacity expansion, rising trade and efficiency will be the key tickers. For Adani Ports, revenue, EBITDA and PAT CAGR are seen at 17%, 15% and 16% respectively over FY25-28. For JSW Infra, it believes that company will expand the capacity and it will more than double to 400 million tons per annum by FY30, and its revenue, EBITDA, PAT CAGR may be at 38%, 30% and 21% growth CAGR of over FY25-28. Next one is Kotak Institutional Equities has come out with a note on Bajaj Finance with an ad call and target here is 1100 rupees per share. It says investors' myopic focus on near-term trends misses structural transformation that company has been seeing, and Finance AI is already moving from experimentation to measures business outcomes, and Kotak remains assertive on company's ability to sustain high growth and ROEs. Last one is AB Cap. Motilal Oswal has a buy call with a target price of 415 rupees per share. It says company is strengthening fundamentals across businesses. For NBFC, growth resumes with improving asset quality and margin. For housing finance, accelerating growth with improving profitability and strong capital support. And for AMC, broad-based growth across mutual funds, alternatives and even passives. So it expects consolidated PAT CAGR of 26% over 26-28 and ROE should expand to 16% by FY28.
Thank you very much for that. Over to Vivek now for L&T.
Well, that's right. So both Jefferies as well as Motilal Oswal today have come out with reports opposed the fall that the stock has seen. Both of them have gone ahead and cut their target prices. They're attributing two reasons for the target or for the share price fall. First one, of course, is the West Asia related disruption. And secondly, they've gone ahead and cut the valuations of the subsidiary, both LTTS as well as LTIMindtree. This on the back of the fact that AI-led disruption has led to significant derating as far as IT companies are concerned. Jefferies, in fact, has said that a month of no work in West Asia would likely impact FY26 EPS by 6 to 8%. Jefferies says there are three triggers for growth: order flow growth, margin stability, and also remember, L&T will go ahead and unveil a 5-year strategy plan in May 2026. On the back of that, L&T will continue to remain in focus, especially given the fact that West Asia disruption continues.
Thank you very much for that. Awaiting the pre-opening rate. Awaiting the actual opening rate. In pre-open, we were up about 135 points, a gain of about 0.5%, and the Nifty should open around the 24,600. Yesterday, the intraday high on the Nifty was 24,600. Analysts say it could act as a bit of a resistance level, but there is a lot of strength taking place in the Asian market. So Asia across the board is surging 2-3%. Will that lend some sort of a momentum, considering the fall that we've had from Friday to yesterday? More than 1,000 points gone. In sectors that you should keep on your radar, stocks and sectors, L&T of course is top of mind because that has gotten beaten out of shape over the last couple of days. Coal India was a big mover. IT was resilient yesterday because Rupee had opened at a fresh record low. It had crossed 92 against the dollar, so Rupee is the depreciation in the Rupee is a margin tailwind for the IT companies. The first tick has gone, the bell has rung, and the Nifty opens above 24,600, up 0.5% on the Nifty and the Sensex. The Sensex inching towards 79,500. Mid-caps are outperforming. The mid-cap index is up 0.8% with a positive advance decline ratio to begin trade with. Sectorally, strength seen in capital markets plays rebound in realty. Metals are higher. Many of the beaten down sectors of yesterday are staging a bit of a comeback. Autos up 1%. IT and banks will also come up for you on your screen. The Nifty banking index, though, is a bit subdued, not participating to the extent on the upside as the Nifty, just up close to about 0.2, 0.3%. A quick run through then of the notable gainers. L&T has moved up. L&T is up 1.5%. Reliance Industries seems to be a big gainer. And on the way down, you've got continued weakness taking place in Interglobe Aviation.
Right, so if you look at the mid-caps, the top loser right now is Gujarat Gas. Towards the last hour of trade, there was a big spike on the stock. For most of trade yesterday, it was in the red and then ended higher. Now, straight off the bat, that stock is down about 6.5%. So it is the gas stock which is not doing particularly well. And the top gainer, however, has been Bharat Forge. Remember, the North America Class 8 truck orders have risen about 47% month on month, over 150% year on year. and that stock stands to benefit from that because of its exposure, so higher by about 3%. Following it is also Samvardhana Motherson, not necessarily directly correlated out there, but in the auto ancillary space, up around 2.5%. Solar Industries from the defense space continues to do well. The stocks which are marginally lower are Blue Star, we have Hindustan Aeronautics and GSPL, all of them lower by less than 1%. The marker of the day right now has to be the India VIX, which straight off the bat is down about 10% after a 20% up move that we saw yesterday, and the advance decline as well, firmly in favor of advances. The question is whether it sustains at these levels and whether it builds on from these levels as well.
Well, that's right. It's a good start, Mangalam, to the trading session. 150 points up. We should end somewhere here or even better than this. Well, that'll be good news. Remember, we have shorts in the system. Could be a blessing in disguise, but the geopolitical issue is extremely, dicey. Coal India, that stock is up close to around 2%. The street believes the spike in gas prices actually will provide an opportunity for coal prices to move up. And if coal prices move up, then Coal India could potentially gain because e-auction prices could follow suit as well. We'll have the management very shortly on the channel, so we'll try to get further clarity on that front. Bajaj Finance, another stock that's up. Shriram Finance as well is up close to around 2%. So from the frontline names, some of those stocks, they took a sharp knock yesterday. They are bouncing back and bouncing back in style. You're looking for beneficiaries, of the current crisis, and refiners, because everyone's going to be safeguarding their own turf, and exports like from China could be restricted on crude as well as gasoline. And that's why you're seeing that, some of those refiners are doing well. CPCL, the Chennai Petrol, that was up yesterday. It's building on to gains today. MRPL as well is higher in today's trading session. So both those two building on to gains. The big boy is going to be Reliance Industries. You'll want that one to participate. For the time being, it's opened up with a gain of around 2%. Now, that can be the stock of the day actually by itself. It can get closer to around the 20 DMA, which is at around 1,428. So Reliance Industries, is the stock you're looking at. Other big winners from the broader markets, Jindal Drilling continues to gain. Tejas Networks seems to be finding its form. And Nalco, because, there's a dual benefit actually out there for Nalco. Coal costs are going up, but they have most of their coal coming in from captive sources. And they'll get the benefit of higher aluminium prices. And aluminium prices on the whole actually have been very firm. So you have, Nalco that's up. And the stock that I highlighted earlier today, Vedanta, the 20 DMA comes in at around 690 rupees. Yesterday, the stock was a big underperformer. It corrected close to around 3%, but it benefits because of oil as well as aluminium. So that's a stock maybe we should keep on our radar as well.
Just pull up the Rupee because the Rupee has opened with strength at 91.57 against the US dollar. The previous close was 92.15. So the Rupee has strengthened by approximately 0.6% against the dollar. We'll have to see whether we can build on that because we are seeing persistent FII outflows and geopolitical concerns continue to weigh on crude prices and therefore what our import bill is. But for now, looks like maybe the RBI has intervened and we've got a stronger Rupee opening to begin with, 91.56 against the US dollar. Nimesh Chandan, CIO of Bajaj Finserv AMC, is now joining us on the show. Nimesh, our last conversation was prior to the outbreak of the Middle East tensions. And at that time, you were saying that we're seeing a simultaneous improvement in profits, economic and credit cycles. And you were bullish on the markets, generally optimistic. You had analyzed the small cap earnings in Q3 and said that, well, we've got a 30% kind of an earnings growth in so many small caps. But the picture seems to have changed now. Crude prices are rising. The sentiment is further taking a hit. What are your thoughts now on the markets?
Good morning, Rima, and happy to be on your show. Actually, nothing has changed as far as long-term is concerned. It's just that we are having a short-term disruption. I was speaking to some friends yesterday who were discussing the war, and I said Indian market can be is only guilty of giving us more opportunities to increase allocation. That's all we can complain about because I think the long-term trajectory is the same. It doesn't change. We are seeing a pickup in economic activity. We are seeing a pickup in profit cycle. We are also seeing a pickup in credit and the interest rate cycle. So we are there in terms of the fundamental cycles. It's just that the sentiment has to move up. And these are the times which actually give investors opportunities to pick up good companies at good valuation. I'm sure 1 year down the line, when we look back at this time, most of the people will say that this was a good time to actually pick up good companies.
So what would those good companies be? What would those sectors be according to you? Because, it sounds, in hindsight, the perfect opportunity to buy. But when there is so much uncertainty, no one has the courage to go ahead and actually press the buy button?
So actually, interesting question, because as they say, history doesn't exactly repeat, but it rhymes. Whenever such geopolitical crises or wars have erupted, and especially when they have been more local or region specific, we've seen that markets tend to live with that. Either if they continue also, like the Ukraine-Russia war, markets just move forward. Or if, say, they are short-term spurts and then there is some resolution that is seen or light at the end of the tunnel, markets tend to move up. Even a whisper of what yesterday probably New York Times put out, that they are seeing Iran reach out to the US. I think that itself led to markets getting a relief. So these will look like opportunities. The best investment times are never easiest or most comfortable. You have to take in courage and conviction and then place your bets. For people who want to still provide for this conflict going longer, staggering the investment for 3 months or 6 months, I think is a good time to accumulate.
Right. So that's exactly what the question was. If one had to deploy some capital in these markets, where should that capital deployment be? What sectors?
So again, right now we are spoiled for choice. We are seeing good opportunities in cyclicals as well as what we call as growth or mega trend companies. So I would say create a 50-50% portfolio. On one side, take up cyclicals like financials, materials, and industrials. And I think materials should be a good allocation in your portfolio now. On the other side, mega trends like, for example, defense, healthcare, consumption, even those companies are available at good attractive valuation, even good dividend yields. So I would say put a 50-50 kind of a portfolio as value and growth, or what we call as cyclicals and megatrends.
Got it. All right. Hi, Navesh. Good to see you, Ben. As you mentioned, one of your notes, right? Investing is simple, but it's not easy, right? And that's precisely the way things have played out. So I think financials and materials is what you're talking about as sectors that you like. Drill down materials a little bit more. What do you like from that space? Because it's very, very wide, right?
So there are many triggers to materials. There are some triggers which are coming because of technology shifts, data centers, investments in AI. These are power guzzlers, and you will see resultant demand coming in the metals or mining sector, whether it is rare earth or copper. So that will lead the demand on one side. The second side we see is, if you see in the last 1.5 years, emerging market equities have done well, emerging market bonds have done well, emerging market currencies have done well. So emerging markets are actually coming back as a big asset class. In this scenario, typically, as emerging markets start growing faster, you will see demand for commodities going up. So I see global pickup in commodities, also probably a hunt for commodities where investors will try to pick up anything that they believe has a good future demand. On the other side, within India, you see pickup in cement. So volumes have been picking up in the last 2 months. There have been some price increases that have come in, and this after a long time. So we are seeing a pickup in infra, pickup in real estate, pickup in cement demand. Now, there could be a small cyclical down move during certain seasons or because of certain regulations. But overall, metals, cement, coal, energy, and ancillary plays, which are related to mining or processing of these metals, I think these become very good, attractive plays. And many of them these days have actually lower leverage and higher dividend yield than some of the other growth companies.
Nimesh, are you seeing some sort of a slowdown in retail inflows? The money that's being put by maybe the smart money and even the retail inflows. Has there been a slowdown? Because one of our guests was highlighting that.
Frankly, Reema, we may not be the right barometer. At Bajaj Finserv AMC, we are continuously seeing good inflows. We are not seeing any redemption. So probably because we are a young AMC and we have launched certain funds where people are attracted to. But I won't be surprised when the sentiment is down that overall industry flow may be a little slow. And it always happens, right? Where people are guided by emotions, people are guided by fear. And fear
Fair enough. So maybe not redemptions, but is there a slowdown in the pace of inflows?
So at our AMC, we have not seen that. But overall in the industry, I'm watching the numbers there. All I want to say is a little bit of slowdown is actually not an issue. It is just par for the course. It happens during these times. But this money then comes back much stronger when there is clarity.
Right, it is par for the course, but the problem is the impact cost that it may generate in the market, right? Because if the flows are steady and strong, the kind of FII selling that we see is fairly absorbed with the market not falling much. Now, if there are slowdowns in, even if it's a marginal one, in on one side of the equation, and then the outside, the outflow continues, the impact cost could be a little large. But beyond the current situation, which we've spoken of a fair bit, what do you make of valuations in general in a lot of these places which are offering growth? Because there has been consolidation, but not any meaningful multiple correction or valuation if you compare to the growth that these companies were earlier reporting versus the valuations that they were trading at. I'll give you an example, say something like a Trent. When the stock was at closer to 8,000, the price earnings growth ratio was a lot more palatable than what it is right now, and the stock is halved from the top. So how do you manage that, and what would your thoughts be?
Mangalam, that's why at the beginning of the show, I said, let's bucket these companies into 50% of your portfolio in cyclicals and 50% in megatrends. Typically, what happens in growth companies is that people put a lot of value to the future earnings of these companies. And if there is a slight miss in the near term, these stocks react very sharply because not only you revise the earnings down, you also significantly revise down the multiples that you are giving them. Once within this mega trend, they may have a particular cycle that goes in. Once they are out of this trough, and typically at that time, you will see everything going negative for them. Once they are out of this trough, again, valuations can go up because people become more confident about their future. Unfortunately, people extrapolate near-term trends much into the future, and hence they, during good times, give very high valuations to these companies and very low when they miss a couple of quarters or 4 quarters that way.
But that
For
exactly
a long-term investor, you have to exactly do the opposite then, right? When people are the most pessimistic about these prospects and the prices are trading below intrinsic value, you pick them up and you actually trim them when people are in euphoria and think the trees will grow to the sky.
No, but that exactly was my point, because when things are not doing well, the valuation multiples derate to attractive levels. That hasn't been the case right now.
So because earnings have surprised negatively. For the past 1 year, in many of these sectors, earnings have surprised negatively. If you see from September of 2024, market realized that the earnings downgrades are coming and many of these companies are slowing down. They may not meet the exact numbers that they were expecting. This time it's the other way around. I'm not commenting on a particular company. It may have its own set of issues or challenges, but I'm saying overall, if you look at the top 100 companies, they are growing last quarter at 12%. Top mid-cap companies, profits are growing at 14%. Small-cap companies, the 250 of them are growing at some 30%, approximately 1 or 2% here and there. And we are firmly into double-digit kind of growth, even for Nifty for the coming year. And if you take economic upturn, profit growth upturn, then there is a lot to pick up in this market.
All right,
for some of these companies, you may have to pay a higher valuation because valuation takes into account their growth, their ROE, their cash flows. On the other side, cyclicals during these times do well and actually start getting re-rated upward because the profit growth becomes faster during this time.
All right,
I don't know if I'm able to clearly answer this. I may not be able to answer a particular company's particular valuation, but this is what I feel generally.
All right, we take that point. Just a final question before we let you go. You've said there is a lot to pick up. You've given us the portfolio construction approach with 50% cyclical, 50%, where there are opportunities which are structural in nature. What's a clear avoid from here on?
So currently we are underweight IT. Currently, we are looking closely at some of the consumer companies where rise in commodity prices may start affecting their margins. They may not have pricing power. So those areas we are a bit underweight. Otherwise, there is a huge amount of good companies to pick up right now. Typically, during these times, I lose arguments, but I make a lot of money. So I feel good about this time.
Right. And when you said consumer companies which have a high exposure to raw material prices and no pricing power, is that paints?
So some of them, I'm not saying we go with a particular sector only, but within that, there may be companies who have strong brand and strong portfolio of products which can pass on these prices, whereas some may not be able to. So we are careful on those.
All right, we take that point. Always a pleasure speaking with you. Thank you so much for joining in, laying it out for us in as many ways as you could without, naming stocks or sectors. But that should be a fair indicator. And you said that, you may lose a lot of arguments, but you make a lot of money. And that's exactly what the market's all about, Nigel.
Well, that's right, Mangalam. A few stocks actually. Thanks a lot, Nimesh, for joining in. Wishing you a good rest of the day. And we take note, of all the instances you have seen in your long career. Various times people have said it's doomsday. But in hindsight, that actually provided a good entry opportunity. Hopefully, for the good of investors, it plays out yet again. And people who allocate will make plenty of money in the longer term. Have a good day. Look forward to catching up with you soon. Well, let's highlight a few stocks that are gaining today. Reliance Industries, the big boy, in fact, is up. Reminder, it has a couple of tailwinds. One is with regard to the refining capacity that, could be aided because the cracks have expanded. There are restrictions all around. So that's one of the stocks. You have CPCL as well as MRPL that are doing well. Reliance Industries, I think, a small part of their business. The PVC resin prices as well have been hiked by around 5 rupees per kg. So that's another reason why that stock could be high in today's trading session. Nalco, the dual benefit. They're enjoying the benefit of higher aluminium prices. And coal, they have more than 50% that comes in from domestic sources or their captive sources. So that's why that's gaining. But a lot of stocks actually, Mangalam, are doing a thing of their own. Coal India, Street believes that now is the opportunity. Demand has been weak, offtake has been weak, pricing has been weak. But could this geopolitical issue propel them to go ahead and push up pricing and in turn offtake as well is something the Street hopes so.
Most definitely. We will monitor Coal India very closely. But just a word on the IT pack. The IT index actually comes up for you. That's actually at the low point of trade right now. Remember, the factors that did well for it yesterday are the exact factors that are not doing well for it today. Today, the rupees opened fairly stronger. The other parts of the market are doing a lot better as well. Yesterday, IT was a safe haven for, the other parts of the market, which were not doing particularly well. And then we had the support that came in from a weaker rupee as well. So today, not looking particularly good for the IT sector. TCS, Infosys, all of them lower. Also, what is lower is a large part of these consumer staple names. So HUL is at the low point of trade. Tata Consumer, Asian Paints, all of them lower. But what's higher is Bharat Forge. Good Class 8 truck orders coming in. Sudarshan joins in to give us a detailed analysis on that, their exposure and the impact it would have.
The stock is high on the back of strong North America Class 8 truck orders. It's for the industry which has seen a major growth for the month of February. If you compare month on month, it's up 47%. If you compare YOY, it's up almost 160%. And it's the best February that we have seen since September of 2022. And it's third straight month where we have seen growth of more than 20% YOY. Now, so there are majorly two segments, on highway and vocational trucks. So on highway are those trucks basically which are used in public use, and vocational trucks which are made for to be used in the special segments. And both these segments have contributed significantly in the month of February. And if you even compare against the 10-year February average, 10-year average was around 25,000 units. So against that level also there is a huge increase. Why Bharat Forge is in focus? So it supplies to basically components, forged component, and also some of the parts. And if you compare, if you look at the contribution to the total revenue, this contributes to 16%. And amongst all the Indian company, Bharat Forge is the only company which has the notable exposure to North America Class 8 trucks. And that's the reason you are seeing a big move in the stock.
Got it. Okay. All right, Sudarshan. Thanks a lot for running us through that data piece. Well, let's focus on Coal India. Now, the West Asia conflict is stoking fears of an energy crisis. Brokerage house Citi, they say that the high LNG prices could trigger a switch from gas to coal. To discuss this and more, we have Mr. B. Sairam, the CMD of Coal India, who joins us. Hi, sir. Good morning. Good to see you in. And we're looking forward to having a good chat with you after a while. Just hold on to that thought. We're just highlighting to our viewers the three focal points that we're looking at. Will high LNG prices prompt a gas to coal switch? What's the guidance for 27 as well as 28? And what about capex as well as dividend plan outflow from here on? Well, sir, thanks a lot for joining in. globally there's been a crisis with regard to gas. And a couple of brokerages, whether it is Citi or even Axis Capital, they have written about this. They believe that now international coal prices will move up. And in that case, your e-auction prices as well will move up. Do you think there's a good argument out there that e-auction prices that have come off from the recent peak in the last few years, they're set to move up from here? Go ahead, sir.
The logic broadly holds, but there is a caveat to this. Because the e-auction prices ultimately depend on several other factors as well, not just international coal prices.
Correct.
So the impact on CIL's e-auction prices on account of this event will not be an automatic one or a proportional one. Because if pithead stocks are high, if thermal plants are already holding comfortable coal stocks, and there is a Indian coal market majorly administered through this notified prices, and then there is rail availability, rack movement, logistic issues. So all these things will have influence on the price signals. So the transmission from higher global energy pricing to higher e-auction prices realization for CIL is not always one-to-one. And furthermore, at this stage, it would be premature to draw firm conclusions.
Okay, all right. So academically, this logic works, but it may not take place. Got that. So it may not go to the extent that maybe sell-side analysts are estimating, sir. But give us a broad sense. For the last quarter, your e-auction prices were ballpark around 2,400 rupees per ton. And your e-auction pricing in comparison to your notified pricing or the FSA sales price, that was up by close to around 62%. At least this geopolitical issue may not lead to a big spurt in e-auction prices, but it's putting some sort of a base in terms of e-auction prices. And do you believe that prices actually will trend up from here? And that premium, which at one point of time was 200%, it's come down to 60%. Can it move back to say around 80-90%?
See, you are speaking about the 200% premium. That was largely a post-COVID phenomenon. It was driven by a supply tightness and elevated global coal prices. With Coal India significantly ramping up its production and dispatch, along with correction in the global coal prices, that extraordinary tightness has eased out actually. As a result, the premiums have largely normalized to around 50%, which is more reflective of a balanced market, I would say. There are three parameters if you want to understand the e-auction performance. One is booking value, and second is booking efficiency, and third is what we call the auction premium. So CIL booked, we can say around 8.84 million ton, which is 10 million ton higher than the last fiscal same period. But at the same time, the booking value increased to 21,000 crore rupees from 20,000 crore rupees last year. At the same time, this booking efficiency, that is the conversion rate from what we are offering to what has been actually booked, that has actually declined from 47% to 64%. At the same time, this auction premium has also moderated to the level of 37%. But coming to February 2026, it has marginally increased to the level of 39%. And going forward, our thrust will be on increasing the volume so that any realization goes on increasing despite softening prices.
Okay. So tell us about volume then. E-auction volumes last year, I think they were around 79 million tons. You could correct me on that number. For this year, how do you see the e-auction volumes shape up? And if you have to give me a pricing range for e-auction, do you think it can hover around 2,600 rupees per ton?
Yeah, the average realization actually this year till the January was 2,412 rupees per ton. Last year it was 2,600 rupees per ton. So February, March, there will be some spurt and some increase in the e-auction volume as well as the pricing. So we expect around 2,500 rupees per ton.
2,500 rupees. And in e-auction volumes, if you want to give it as a percentage of the mix or you want to give it in absolute terms, should it be 80, 90 million tons?
I can say that whatever we did last year, there will be an addition of at least 10 million tons.
10 million tons. Got it. So last year, sir, if I got it right, I think you did around 79 million tons. So this year it should be ballpark 85 to 90 million tons, correct?
We can take it 80 sort of.
80 million tons for this year?
Yeah.
And next year it can be 10 million tons higher. So it will be close to around 90 million tons.
Yes.
All right. Got that, sir.
That's what we are actually targeting.
All right.
Because e-auction always depends upon the market dynamics, the world coal dynamics, as you had told earlier.
Yes.
So all these things put together, there may be some corrections, but we are weighing heavily on that 80% target.
All right. Mr. Shriram, I appreciate the fact that actually you're bringing even the headwinds to fore, because the power plants, they are sitting on inventory of around 20 days. Now, this is the highest that we have seen in multiple months, maybe in a few years as well. And as you said, captive production as a percentage of the mix has moved from around 8% to around 20%. So those are headwinds in terms of your offtake. Now, for this year, that's FY26, there'll be a bit of a degrowth in terms of production as well as dispatches, just going by the 11-month numbers. But on this sort of a base, what kind of growth are you looking at? Because the street believes that maybe power demand will improve from here on. So volume growth will be how much for the next couple of years?
Yeah, see, historically, CIL has been a volume-driven player. For us, it is all a volume game because higher volume provides us multiple cushions. One is strengthening our financial fundamentals, at the same time fulfilling the mandate given by the government of India to meet the growing demand of the power and other industrial sectors. And given that fixed costs constitute a significant portion of CIL's cost structure, higher volumes always allow these costs to be spread across larger tonnage and thus improving our overall cost efficiency. And if you look at our decadal performance, coal has grown at about 4.3% CAGR, and that includes the disruption during the COVID period also.
Correct.
However, this year has been somewhat exceptional, I would say. The extended monsoon and a muted winter has moderated power demand, particularly from the residential and agricultural sectors. At the same time, commercial coal blocks operators have also stepped up production, bringing additional coal into the market.
Sir, so for next year, 5% volume growth is doable, sir? 5% dispatch and production growth? Doable? Definitely, sir. That's a little risky one. Because again, then the monsoon will be there and maybe some demand softness. That will be a little risky. But you're saying 5% volume growth is what you're looking at, correct?
Yeah. We are targeting that.
Okay. A quick other points. We spoke about e-auction. FSA prices, any chance of you going ahead and increasing prices? Or is that, that takes place after a few years? So in the near term, there's no talk of that? Or you could tell us, one. Point number two is, what about the employee cost? When does it come up for a revision?
Yeah, see, there is no predetermined timeline for notified price revision, FSA revision, because notified prices are revised periodically after assessing the input cost trends such as wages, diesel, explosives, and overburden removal, those parts. And you may appreciate that a large portion of our FSA coal goes to the power sector. Therefore, any notified price revision is considered carefully so that if it balances the Coal India's cost realities with the broader power tariff implications also. Overall, the present coal supply situation in the country is comfortable. Hence, there is no immediate trigger for a notified price revision, though it remains a periodic administrative exercise.
Right. Mr. Shriram, this is Mangalam here. Yeah, go ahead. You were saying something.
What was your second question?
Employee cost revisions.
Employee cost, sir.
Yeah, the current agreement, NCWA 6, we call it, it is effective from July 2021. It is effective for 5 years. So the next revision cycle will be falling due in July 2026. The quantum will be decided through the established bipartite consultation mechanism with our trade unions.
All right, July 2026, that is. Mr. Shriram, this is Mangalam here. I'll qualify my question by saying that I do not understand the coal business fundamentally as well as my colleague Nigel out here. But from a stock market standpoint, Coal India has been known to pay good amount of dividends to its shareholders. The first interim dividend announced in FY26 so far has been about 21 rupees. You have a cash balance of over 30,000 crore rupees. So when is the next dividend announcement coming in? And secondly, what's the plan with that cash? If you could break the capex into coal and non-coal for us.
So you are asking about the dividend part and the capex part. So
yes,
first dividend part, our dividend payout ratio has hovered between 45 to 50% historically. Last year, our 9-month payout has been 51%. This year it is 65%, I would say. Last year, our annual payout was 46%. And till date, we have paid a dividend of rupees 21.25 per share, which comes to 212%. Projections for next year, you are asking, while taking any call on that, we would like to have a balanced approach towards this dividend payout vis-a-vis our capex requirement.
All right, and that is exactly the question, capex requirement. What is your capex requirement? How much of that will be coal? How much of that will be non-coal? And what is your typical asset turnover?
Yeah, our capex in last fiscal was 17,670 crore. Capex plan for next 4 years has been pegged at around 17,000 crore rupees per year. So thus we have a plan to invest more than 50,000 crore in next 3 years as capital expenditure. And when we say capital expenditure, it does not include the equity investment which will be placing in our diversification projects. And then additionally, as far as this non-coal based capex is concerned, it will be around 1600 rupees per annum for the next 3 years.
Okay, 1,600 crores. And you did speak about the equity investments that you're making in some of the divestments that you're doing. Just there was BCCL that listed very recently. Is there any other plan for any other subsidiary listing in the very near future?
Yeah, we are very much encouraged with the response which we got from BCCL. Next in line is CMPDI, which is our consultancy wing, and it will be done most probably in the month of March, this month itself. And the lined up two companies are SECL, Southeastern Coalfield Limited, and Mahanadi Coalfield Limited, which we are contemplating to complete by the end of this calendar year.
Just one query, sir. You know, some part of the street believes you're listing all these entities, but then Coal India will become the holding company. That will call for a discount. What is the rationale of listing all these companies? We're happy to come, interview you all, ring the bell. Some investors make some money. They're happy as well, like we have seen in BCCL. But otherwise, what's the logic?
In fact, Coal India, the structure of Coal India and subsidiary is that holding company and subsidiary company. That is our structure. So that will definitely hold good even after the disinvestment or divestment, whatever we are doing. Okay. And number two is that we want to unlock the potential. See that we ran the narrative of our coking coal with BCCL, which was a huge success. Similarly, CMPDI, it is going to be consultancy and global consultancy wing. That is what we are projecting for CMPDI. SECL and MCL, that volume growth will be coming from the SECL and MCL. So these are some of the good narratives which we will be projecting for listing of these companies.
Debatable, sir, what value it unlocks, but we take your point on board. Thanks a lot for joining in. As you're telling us, volume growth could be there in the tune of around 5%. You're optimistic on e-auction prices, but not necessarily that what we study academically will play out in terms of the way of the e-auction prices. But at least there is some sort of a base, and 2,500 rupees will be a bit of an improvement in comparison to what we have seen in the past quarter. Appreciate you joining in, sir. Wishing you a good rest of the day, and we'll chat up post the end of this quarter. Well, time to slip into a short break. On the other side, we'll bring you a discussion centered around the volatility in oil prices as well as the focus on the metal space. Peter Miguel as well as Vikas Singh are waiting for us.
Welcome back. Let's get a handle on what's happening in the world of commodities. The West Asia conflict is stoking fears of an energy crisis. Aluminium prices are now at a 4-year high. Manisha joins in with the numbers and the details.
Thank you so much for that. Even as most of the base metals and ferrous metals have continued to decline, it is the aluminum prices which have been an outperformer within that space, trading at a 4-year highs. And when you look at the last 1 week itself, we have seen a gain of 5%. The last 1 month is up by 10%. And with 13% of gains in 2026 till time, aluminum clearly an outperformer within the metal space there. Well, this is to do with the West Asia conflict. If you look at the major GCC producer, they have stopped aluminum refining activity. Also, when you look at the supply disruptions, force majeure declarations that seem to be coming in from that area are supporting the prices. There is war premium also building up in prices because 8 to 10% of aluminum supply does come in from that region itself. Now, when you look at the major facilities within the UAE or Bahrain for that matter, they are vulnerable to attacks, and power interruptions is what these countries have been telling us. The warehouses are isolated as well as Iran attacks cargo vessels crossing Strait of Hormuz. So it is about storage, it is about mining, it is about refining as well that this region is seeing an impact from. So when you look at the particular names here as well, you have Qatar Energy, which has halted production of aluminum and certain other metals and chemicals as well. You also have Aluminium Bahrain, which has stopped shipments. This is the largest smelter, by the way, outside of China. So there are concerns coming in. And then when you look at the LME inventories itself, well, that has been constantly declining. There is a supply shortfall for 2026 estimated at 6 lakh tons. This is a report that came in from ING in the previous month itself. So that really seems to be adding to the concerns therein. Also, when you look at the Chinese output, that is expected to be stalled or capped at 45 million tons is what China has said. And China has achieved that target in 2025 itself. So we are looking at a stalling or plateauing of output from China also. Indonesia has its own problems. You have smelters struggling to build new plants, and this is due to high energy costs. Let me remind you that aluminum is an energy-intensive metal. Even if these problems were not arising, just the crude oil price rise would also have taken the aluminum prices higher. So aluminum seems to be getting hit from both sides. Higher energy costs and the smelting issues as well is what is keeping the prices on the higher side. Interestingly, in the last 24 to 48 hours, we have had various banks and brokerages come and increase their price target for aluminum. The Citi, for one, says that $3,600 a ton is their immediate target, but a bull case scenario can take the prices higher to $4,000 as well. That's exactly what we have heard from Goldman Sachs as well. $3,600 a ton is what they're anticipating if the production is lost for 1 month. If it prolongs, if it goes higher than that, then you're looking at much higher aluminum prices is what the street is working with.
All right, thanks a lot for that, Manisha. And I recall on December 4th, we here at CNBC TV 18 had put out a piece that aluminum could possibly be the metal of 2026. Until now, I think most of that has played out because costs were intensifying, the deficit as well was at play. And now you have the geopolitical issues as well. They are further adding legs to that. In fact, Nalco in today's trading session is doing pretty well as well. Just a couple of points. One is that aluminium prices are at multi-year highs, so they gain on that front. And the second factor is that they get more than 55% of their coal requirement from captive sources. Because of that, they won't be hit in terms of higher input costs, but they'll enjoy the benefit of higher aluminium prices. So that explains why Nalco is running along up close to around 5%. Let's welcome Vikas Singh, VP, ICICI Securities, and Peter Miguel, CEO of Trading.com, who joins us on the show. Hi, gentlemen. Good to see you all in. Well, Vikas, let's come across to you first. This, we just had the management of Coal India first. They said that academically, yes, it works. Gas prices move up. Internationally, coal prices will move up. But they say not necessary that, Coal India will be able to go ahead and increase e-auction prices. Do you agree with the logic that actually coal prices could get a bit of a leg up?
So thank you, Nigel, for having me on the show. So if you look at the international coal prices, they're already up 10-11% in last couple of days. So, but then Indian scenario is a little bit different. Most of us get the FSA coal from Coal India, and many of the private players got their own coal mine as well. So yes, the domestic coal price increase would be at a lag and at a much lower rate than what the international prices are. That's what we are expecting.
Okay, all right. And I think Coal India for you all is under restricted coverage. So you won't be able to comment on that, right?
Yes.
All right. Let's focus then on the aluminium play. The last few days, we here at CNBC TV18 as well have been highlighting that there could possibly be a bit of a deficit because the GCC countries' capacity is coming under risk. Now we know that, in Bahrain, that capacity has been shut down. Also, in Qatar, because of Qatar Energy's JV out there, close to 650,000 tons are, put on standby. According to you, do you believe this aluminium market deficit will continue? And in terms, according to what you have projected, what kind of aluminium prices are you working with?
So basically, we had a slightly different view. We were among those people who were thinking that the 2026 aluminium market could be in slight deficit only, 100 to 200 KT only, not much more than that, because in the later half, Indonesian supply was supposed to come. However, currently, if you look at the Qatar, they have 0.65 million tons been closed. And Bahrain is not closed. Basically, the shipment has been halted.
Yes.
In case of Bahrain capacity is being closed, then the deficit would widen and the aluminum prices would continue their rally in the shorter term.
So what pricing are you working with?
So on an annual basis, we were working on the average price of 29.50 for the annualized basis. And in near term, we think the aluminum could touch 3,500 odd levels.
Peter, do you want to come in on where aluminium prices could head?
Yeah, certainly. Look, I think where we are at the moment, you're looking at the best part of 33.5. It's had a big run up, Rima, over the last matter of probably 6 to 8 months. I think that continuation, it'll take 3,500 out. I think that'll happen probably sometime this month, the way that it's having the up leg. You've got to go back to, maybe about 21 when we're at 38.50 was the last high of the last 5 years. I'm not suggesting you're going to see that, but probably 3,600 is where you've got to say a line in the sand. And I'm looking for two things. I'm looking for horsepower to get there and momentum, and the impact as far as supply issues. And as Manisha highlighted, all of that fabric needs to be washed through the market. And that's naturally, I think, going to force prices higher from here.
Peter, China has cut the annual economic growth target to 4.5% to 5%, and this would be the lowest since 1991. The target was released during China's 2 sessions political meet. And it's on account of issues like weak consumption, property crisis, trade tensions, energy crunch. Now, if China grows at 4.5% to 5%, it's going to have an impact on the entire commodity basket.
Well, it will to a certain extent, Rima, and there's no doubting that. I mean, we understand it'd be great to see them at 6s and 7s, but they've had their time in the sun, and there are other markets that are growing very, very strongly. India, for example, and a lot of Asia. So as the market, I think, inhales China's positioning, and we understand from the overbuild as far as the property sector and the economic situation there are still many markets that are producing and performing very, very well. You only got to look at South America and, of course, Africa. So the pricing, I think, for some of these base metals or industrial metals are going to see a leg up over 26, and the overall momentum is going to be relatively strong across most of the commodity sector. And I think cheaper energy prices will be here once we get through this situation, but that's going to take a matter of weeks until this comes to some sort of conclusion.
Okay, all right. Coming back to you then, Vikas, from the aluminium basket, what do you like? Because various theories are playing out. Who's going to be the biggest beneficiary? For Nalco, they'll gain on high aluminium prices, and they are mostly, more than 50% of the coal supply comes in from captive sources. So they'll gain, but alumina prices could be weak. The other argument is that, Vedanta, it'll gain because of higher aluminium prices, higher oil prices, and they're working on backward integration. While the final argument is that Hindalco could actually be basing out. Novelis, things will improve, India operations will improve. Among the three, which one you like?
So our preferred pick is still Vedanta, but if you just talk about the recent aluminum rally, then Nalco would benefit more than these two other players.
Okay, all right. Nalco will benefit in the near term, but Vedanta, you have been positive on it, I think, from 400 rupees or 350 rupees. Do you think now it's peaking out? What is the target price you have on Vedanta?
We have an 850 rupees target price on Vedanta.
850 rupees. Got it. All right. Because yesterday steel stocks were very, very weak. my internal team as well was asking. I didn't see any brokerage notes as well about it. I think it was routine profit taking that we saw yesterday and fears of demand destruction. Any reason that you could attribute to the weakness we saw in yesterday's steel stocks? All of them were down, I think, 3 to around 5%.
Yeah, so like you mentioned, some of the profit booking, and one other thing is that the DXY was strengthening. So dollar index strengthening usually have a inverse relationship with the commodity prices. So the demand, apart from the demand destruction, that was the another factor, which probably would have taken to the steel prices lower.
Okay, all right. So you're saying it's routine profit taking. Would you buy any of these stocks? Tata Steel came down by a great extent yesterday. Jindal Steel, out there, they have valuation comfort. JSW Steel has gone on with a value unlocking as well. Or SAIL could be favorably placed. Among these 4 names, what do you like?
We still like Tata Steel more than the rest of the 3.
And what is the rationale over there? They still have a huge debt. The Europe business is still in a bit of a tizzy.
So Europe, basically with the CBAM getting implemented, we are expecting the Europe would improve significantly. In UK also, there is a price hike which they have taken recently. And domestic business, which is their main bread and butter, we are expecting domestic demand to be pretty strong. Mind you that 2029 would be the next general election. And usually the couple of years ahead of the general election seems to be a very good on the steel demand side. And we have a safeguard duty in place as well. All these factors should continue benefiting Tata Steel for the time being.
So Tata Steel and Vedanta, your top picks from, the frontline names from ferrous and non-ferrous. And the smaller names, you like anything? Some of these ancillary stocks, graphite, or we had Sarda Energy earlier today. Any of them you like, Vikas?
So without rating, I would refrain from commenting on those.
Okay, got it. Thanks, Vikas, for joining in. But Peter, let's come across to you. All that glitters is gold again. Gold has been perking up, silver has been doing well, but silver has come off drastically from the top. What's the outlook on these precious metals?
Well, Nigel, I think, we're no doubt, let's look at gold first off, and over the last couple of days, we've seen it move from that 52 handle all the way to 54. It's back at around 5,200 at the moment. I've got 5,190 on the screen, or 91. So it's very volatile. We understand that. And also, silver's come under a big hit from that high of 121 down to that mid-70s, now at 84. I've got around about 84, 84 and a half. So, yeah, about 84, so 85. So the situation, I think, is going to be, one, it's consolidating. They will move higher. US dollar index around that 98, sort of 99 handle. And I'm expecting precious metals to have another leg up. And this month, I think that they'll do that. Though I'm not suggesting silver will take its all-time high out, but I feel as though gold's got the capacity to do that, and probably 55, 5,600 sometime this month.
Thanks a lot, Peter, as well as Vikas, for joining in. Interesting times for the metal stocks, metal prices as well. And Peter, you want to wish us luck?
Yes, absolutely. You're playing England tomorrow. I think you've got that one in the bag. That'll be a great game. I wish I was there in Mumbai sitting next to you watching it. The next one, you're up against New Zealand. I'm flipping the coin, but you're going home as the winners. I think that one's in Ahmedabad.
Thanks a lot for that. This evening, actually, we play England at Wankhede, and I would love you to join me at the stadium. But you're saying that we're going to lift the cup, and maybe we do what we did in 1983. We beat England, I think, in the semi-finals out there, and then we lifted the cup. So Monday morning, hopefully, celebration times for Team India.
Celebration, you'll get 2. You'll knock the ball out of the park, figuratively.
Oh,
lovely. Thank you. Thank you very much, Peter, for joining in. Well, exciting times later post-market hours. But even for now, the market is not too bad. The Nifty is comfortably holding on to the 150-point gain. The Nifty is well above 24,600. Mid-caps are now inching towards a 1 percentage point rally. Oil and gas names are a bit subdued. So Gujarat Gas is down close to about 5.5%. But that's the one which had a surprise up move towards the end of trade. Nigel spoke about Nalco, so that is clearly a big winner. Sterlite Tech has been doing well. Mazgaon Docks data patterns. So defense is coming in for some amount of buying. Jindal Drilling is a stock which has gained 40% this week. Jindal Drilling. Pull up that weekly chart of Jindal Drilling. And then you've got some of these oil and gas names like MRPL, oil marketing companies too, are moving up, and Reliance Industries is the big heavyweight providing support. RIL is up 3%, leading the charge for the frontliners. Get into a break on the other side. We'll talk technicals with Shilpa Rao, Prabhudas Leeladhar. Welcome back. India is participating in the global rebound. We're up 0.5%. Where do we go from here? What are trades? Shilpa Rao to Prabhudas Leeladhar is now joining in on the show. Shilpa, good to see a positive advance decline ratio 5:2 and mid-cap outperformance. What's the call y'all are taking and some stock ideas?
Good morning, Nigel and Rima, and thank you for having me on the show. Talking about the sector, this is definitely a bounce that we are witnessing right now. 24,400 on immediate basis can act as a support, and a bounce towards 24,900 to 25,000 zones cannot be ruled out. But any rally towards those zones can also be an opportunity to go short again, because FIs are relentlessly, selling, and we see the net longs now at 13%, which can again dip towards to 6%, to the previous lows. So definitely the texture is not very aggressively long. In fact, all rallies, can be an opportunity to go short. Likewise, Bank Nifty also 58,000 looks like a good support. As long as we are holding above that, 60,000 to 60,300 can come in again. So definitely, again, sell on rallies is the texture for now. Talking about stocks, I have one buy and one sell. The sell would be in RVNL. RVNL texture is looking a little weak. 300 is acting as a resistance, so that should be a stop loss, and look for levels of 240 to 220 positionally. And the other one would be a buy in Vedanta. Vedanta is looking good, trading around 730. Keep a stop loss of 710 and look for targets of 760.
Thank you very much for joining in. Metals is the call for the day. We'll slip into a break. On the other side, Lata discusses the impact of West Asia war on India's macros with economist Shantanu Sengupta of Goldman Sachs, Chandresh Jain of BNP Paribas. Don't go anywhere.
Welcome to It's the Economy. The West Asia war impact on crude, currencies and equities was brutal till yesterday, but has ameliorated a bit today. The rupee, after falling about 0.75% yesterday, is up 0.65%, but the continued closure of the Straits of Hormuz is keeping crude price high. How should we think about India's macros for the rest of the year, or at least the first half of the year? I have with me Shantanu Sengupta, the Chief India Economist at Goldman Sachs. Also joining me is Chandresh Jain, the FX Strategist at BNP Paribas. Gentlemen, good morning. Thank you very much indeed for your time. Shantanu, I saw Goldman Sachs report looking at a possible 6-week closure of Strait of Hormuz on many countries. But I didn't see an India analysis there. What would your analysis be? What's the impact on current account deficit for starters?
So, Lata, we put out a Pan-Asia piece where India is also included.
Okay.
And I think what we did was, and what was differentiated was that we looked at supply-driven oil increases versus demand-driven oil increases, and what is the impact on the macros, growth, inflation, current account, fiscal balances, and so on. And it's important to make that distinction because the supply shock-driven oil price increases tend to have a smaller inflation increase than demand-driven shocks, but a much deeper growth impact. And therefore, while the arithmetic on the current account would be in the ballpark of 20 to 30 basis points higher current account deficit purely from the arithmetic of the oil pass-throughs, how the rest of the macros react will be a little more nuanced than just the arithmetic effect, which means that given the integration of India to the Middle East, if this closure continues for longer, you can have a growth impact which is more significant than the inflation impact, which can be absorbed a bit more on the fiscal accounts through either the OMCs or directly taking it on the government's own fiscal.
But that report obviously starts by saying that if it is 6 weeks, right now, are you changing any of your macro numbers, Shantanu?
We have not changed any of the macro numbers yet. Our commodities team has got their forecast for Q2 oil prices higher by $10, but on average for the year, it is higher by about $5 or $6 a barrel. Obviously, very uncertain times. I would say the most direct impact, as you pointed out in your opening remarks, would be on the current account. And the inflation pass-through is something that we'll have to look at. But the scenarios is something that we have already put out, but no forecast changes yet, given the uncertainty that is still existing.
Okay, fair enough. Chandresh, well, we've seen the yo-yo movement in the currency, and especially today, while the rupee has recovered 0.6%, all other Asian currencies are still under the weather. And I can understand they're responding to crude. We are probably responding to the central bank. What's your sense about the currency? We are at 91.65, but is the weight towards 92 or towards 93?
I think we are still not out of the woods. I think there was some positive headline yesterday from the Middle East, but we are still not sure when the Strait of Hormuz will open up. Until that time, I think currencies will remain under pressure. So right now, we are not recommending to buy any of the emerging market currencies as of now, including INR. We still think that this can go further longer and therefore stay away for the time being.
Okay, but do you all have any forecasts in terms of the rupee? I mean, is it like 93 by half the year and 94 by year and whatever? I mean, what are your numbers?
So it's very difficult to put numbers, but the way to think about is that how long oil prices stay higher, and depending upon that, the impact will be on the currency. So for example, we looked at the period when there was a supply shock, and every 10% move in oil prices moves dollar INR higher by about 1%.
Okay.
Now, we have already seen oil jumping about 20 to 25% till now in the last 1 week or so, which means that currency should have depreciated about 2 to 2.5% by now. But the impact has been smaller than that because central banks is reacting in between. We have some reserves. We can buy oil at a cheaper price from other countries and so on. So obviously the beta has been less. So if we assume that this condition continues, oil prices remain at closer to 80, 85 for next 1 month, I think the impact could be anywhere between 2.5% to 3% easily on the currency.
Okay. But Shantanu, I remember your previous report where you had said that 93 in 6 months and 94 in 12 months or something thereabouts. Any changes to those ranges from the Goldman Sachs team?
Oh, we are comfortable with the 93, 94 on the dollar INR over the 3 to 6 month period. If anything, if the oil shock persists, I think the risk is of dollar INR to be slightly higher than what our forecasts are implying. I think one more point, which is more particular to India and slightly more technical, is the short forward book is still $62 billion, the RBI, as of the latest data release in the bulletin, which means that at any signs of inflow, if any, in this environment, we'll figure out. But if there are any signs of inflows, I think the first port of call will be to knock off the short forwards, and therefore we just don't see any appreciation pressure coming through on the INR. We would see it trending higher over the medium term.
Okay. Shantanu, this may sound like an outlier or a scary question, but do you think that there can be a chance this year that we have to resort to those one-off measures we took, Resurgent India bonds, Millennium India bonds at the turn of the century, or, you know, that taper tantrum period when we gave some special deposits to NRIs. Do you think the situation with the third year of negative BOP will call for that?
Well, I think the starting point when you compare this cycle versus early cycles as well for India on the external account is quite comfortable. I mean, your starting point for current account deficit in our forecast was 0.8% of GDP, and you'll be moving higher towards 1 or slightly higher. Your external debt to GDP is still quite low. You have about $720 billion of FX reserves, 11 months of import cover. So if indeed the current account is wide and your flows are muted for a quarter or two, it's eminently manageable by the central bank. Mm-hmm. If this situation persists for more than a quarter, the Middle East tensions persist for more than a quarter, and oil prices are significantly higher than what our commodity strategists are considering in their forecasts, that's when these questions will really come up. So at the time being, I would just say that compared to a decade ago, which is the time that you're pointing to around the taper tantrum, external balances are significantly better. Inflation is much lower than what the starting point was during the taper tantrum. Fiscal deficit have contracted over the last 3 or 4 years. So overall, the starting point on macros is more resilient.
Oh, absolutely. We are far healthier. I agree with you. It is just that this will be the third year of negative BOP. If FY27 turns out to be, in those years, we got capital flows. We aren't getting them now. And that 740 billion of FX reserves also will have to be adjusted for the forward sales that Reserve Bank has already done. So it looks very good, but it is not as good as some of the top line numbers. What's the sense on growth as well, Shantanu? We were gung-ho when the new series came, and it looked like, past 3 years, we have done 7% plus rather comfortably. Will you now have a downside risk to your FY27 GDP?
Yeah, I think the strong point of that growth number was the manufacturing GVA growth. Partly because of now the unincorporated enterprises coming in, and maybe something to do also with the double deflation approach. We are finding that manufacturing growth is significantly better than what was there in the previous series. So just mechanically, our numbers were looking slightly more optimistic. This is, of course, before the strikes happened over the weekend. We think that now the downside is around, as I said, with the supply shock, the growth downside is a bit more than the risks to inflation. And I would say that if this persists for longer, we would think for a $10 increase in prices, somewhere in the region of 25-30 basis points downside to growth. Okay. The other thing which I pointed out in the beginning was that the integration with the Middle East is quite significant for India today versus call it 10 years back. You're getting about 10% of your FDI from the Middle East. A significant amount of trade happens with the Middle East. Remittances, a large share also comes from the Middle East. So I think those will be the considerations to take into account for forecast changes if this persists for very long. Our assumption at the moment is that this is more short-lived.
Okay. Yes, I think we used the word Goldilocks a bit too much, and the evil eye has been cast on it. Very quickly, Chandresh, any sense when capital flows will return? I assume you speak to some FPIs. We saw some FPI flows in some days of February, but they were matched by outflows in the last 2 weeks, last 1 week. What is the sense you're getting?
I think, every time we go to a situation where India starts to look attractive after the US deal, after the Europe FTA deal, money comes back and then, some bad news comes in. So this time it's the Middle East situation. But in general, I think people are a bit more positive on India macro, looking at the last few months of macroeconomic data where credit growth has picked up, automobile sales data has picked up, and various other things have picked up. So there's some positivity on India front. Plus, people are also trying to reduce their AI exposure because in some places they have run up so much. And India being ex-AI market, so it becomes a diversified market for them. So there is definitely some positivity on India side, I would say.
Fair enough. An unfair question to you, Shantanu, last, and unfair because I'm not giving you enough time. Excellent growth over the last 3 years, 7% plus by the new series, not turning into earnings growth. Why?
Well, the earnings, we think the earnings decline that you saw is turning around now. You had nominal GDP growth quite low. Inflation will be slightly higher. We think there's a turn in the earnings growth. Our strategists are thinking about around mid-teens earnings growth for the year. Of course, all of this comes under a bit of risk because of the oil price shock from the Middle East. But we genuinely feel that India was into a cyclical rebound, and you can see it with some of the indicators, as Chandresh pointed out, through credit growth, auto sales, and so forth.
Okay. Well, keeping our fingers crossed. Thank you very much, Shantanu and Chandresh, for joining me with the way you're reading India's macros. Wrap up on Bazaar on that note. Chartbusters after the break.
Markets mirror the rebound in global equities. Volatility prevails. Nifty reclaims opening high soon after easing. I beg your pardon. In India, weak surges 9%, while broader markets stage an outperformance. Outliers yesterday. The IT bank seems to be losing ground today.
The rupee recovers sharply on intervention by the RBI in the offshore market to trap speculators. According to dealers, continued high price of crude weighs on the rupee, but lower dollar index and stronger equities is helping sentiment.
Class A truck orders skyrocket 159%, the highest since September 2022. This is the third straight month of over 20% growth, and shares of Bharat Forge higher in the trading session.
China orders its largest refiners to suspend export of diesel and gasoline gas. Stocks upbeat despite mounting supply concerns, even as multiple companies halt exports and production. On the flip side, Gujarat Gas confirms that 50% supply cut and the stock slides.
Nalco surges 7% as metals rally. Gulf countries halt aluminium refinement as the conflict with Iran widens. Hindalco and Vedanta also surge.
Well, hello and welcome to Chartbusters. We're coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Nigel. With me is Vinny. Vinny, the market's in green, so good to see. Hopefully by the end of today as well, we'll have green on the screen. And later this evening, there'll be blue all across India. That's the hope.
Absolutely. Hoping for that as well, Nigel. Good morning to you. And hoping the green that we're seeing on the screens continues even going forward. But what we also want is maybe de-escalation that comes in on the West Asia front for this to sustain as well. As of now, obviously, in terms of the Nifty, we are mirroring what happened in the US markets, Asian markets as well. 24,564 is what the Nifty is at, 83-point gain as of now. Come off the day's highest point, but nonetheless managing to hold on to greens. IT is the one that's trading in the red. But Nigel, back to you for more details in terms of the markets, rupee and all of it.
Well, first let's start off with the money market. The rupee has stabilized a little bit, and that at least is good for sentiment. Well, in terms of the market moves, you have two batsmen that have gone out there. So the Nifty Bank, that's in good form. It's seeing the ball big. It's doing quite well. While the Nifty IT index is a little bit jittery out there, that's actually at the low point of the day, and that it's imperative that the 29,700, 29,800 mark does hold out, because that's the recent low. So we'll keep an eye out on both those two aspects. In terms of the Nifty, there are a few gainers. Coal India, the street believes there's an opportunity out there. If gas prices are going to spike, then that's what could lead international coal prices up. And if that happens, then Coal India's e-auction portfolio could see a price increase. That's the hope. The other one is Reliance Industries. You know, that one is holding in the green. The PVC resin prices have moved up, and it has a refining capacity as well. So Reliance Industries is actually moving to around 1,420. Let's get Reliance Industries up for you. 1,420 is imperative because that's where the 20 DMA comes in at. ONGC, that's an obvious beneficiary of the higher crude prices, so that stock as well doing pretty well. On the flip side, you have a few losers, down 1% or thereabouts. HDFC Life, Max Healthcare, both of them I'm seeing some profit taking. Well, LME aluminium prices, that's moved to the highest we've seen in the last 4 years. And we here at CNBC TV 18 have been telling you from yesterday itself, you know, that the potential beneficiaries could be some of our domestic aluminium companies, because if there is supply, curtailment in the GCC, then aluminium prices will move up and Nalco will benefit, Hindalco will benefit, as well as Vedanta. For Vedanta, they have aluminium as well as oil. So that's why they are a dual beneficiary. Hindalco actually has been a relative underperformer among the three in the recent past. But that seems to be getting its act together, and the worst of Novelis could be behind. So that's why the street is looking ahead. And Nalco, dual benefit. Higher aluminium prices they gain, and coal they're getting from their backyard. 50-55% comes in captively, so that's why they don't get hurt. Refiners are doing well, MRPL as well as CPCL. Yesterday at this hour, we had highlighted CPCL. The stock was as it is up close to around 1%. From there, I think the stock is up close to around 6%. The other stocks that are gaining in trade are BSC, Mazagon Dock, as well as you have MCX, all of them doing pretty well. But the gas crisis is weighing on individual names, and to pull up a few, you have Gujarat Gas as well as Aegis Vopak that's under some pressure. But the Nifty is up close to around 100 points. By the end of today, you'll want it to be raising its bat and saying, yes, we're going home with gains after a while. That'll be good terms, Vinny.
Absolutely, thanks so much for that, Nigel. But let's move on and also bring on board Shivangi Sarda of Motilal Oswal Financial Services to give us a check in terms of the technical front for the market as well. Shivangi, good morning. Thank you so much for joining in. Let's talk about the levels for the Nifty first. Given that, in the last 1 month, every time you reach the 25,700, 800, you again start seeing a bit of a fall. Now, obviously, we have geopolitical tensions that are going on. But levels for the Nifty, important close that we should watch out for today as well.
Very good morning, Vinny and Nigel. Thank you for having me. So we've seen that, of course, geopolitical tensions have taken over the sentiments for Nifty. Even the India VIX had, risen to 21 above levels. Of course, it's cooled down a bit today. But overall, if we see that the pressure is likely to continue, and we will have to watch out for the levels. 24,300 is an important level to watch out for, as it's also the 20 moving exponential moving average on the monthly frame. So this will be the next support to watch out for. The upside move towards 24,850, which is acting as the next resistance for Nifty. But overall, we would be expecting some consolidation, and the index will improve momentum only when India VIX cools off and paves way for the bulls. But of course, volatile swings to continue till then. Talking about Bank Nifty, we've seen this one has been more resilient as compared to the broader market. And of course, it respected the budget days low as well. And we've seen a negation of the lower top, lower bottom formation on the daily basis. Now, it is holding very comfortably above 58,500, which is the support to watch out. And the upside that we're looking out for Bank Nifty is around about 59,500 odd levels. So this would be the take on the indices.
Okay. Shivangi, individual names that you're looking at today?
So individual stock first up on my radar is National Aluminium. Nalco is one stock which has seen long built up from the last 3 trading sessions. And we've seen that this one has been resilient, given a weekly frame breakout and one of the strongest counter in the entire space. So definitely the momentum building here at the present will drive this stock further. And we're recommending this for the next targets of around 415 levels and a stop near 390 zones. And the second pick would be Torrent Power, which has seen a bounce back from a good retracement level recently on the daily frame. We've seen that, on the larger time frame, monthly basis as well, it has formed a base after the consolidation of the last 5 to 6 odd months, and it is coming out of it very comfortably right now. Now, momentum is picking up here with the sector tailwind, so we're recommending a buy here with the next target of 1560 odd levels and a stop near 1470 zone.
Okay, all right, Shivangi, thanks a lot for joining in and and giving us those calls. Any special occasion, Shivangi, today?
So we're kickstarting my brother's wedding, so I'm just all decked up and geared for that.
Lovely. I thought as much that could be a special occasion. Best wishes to your brother and the family, and wishing them all the very best. Have a good day ahead and join in the celebrations. I think that's more important. Okay, time to slip into a short break. On the other side, we'll be joined by FADA. They'll be joining in to give us an outlook on the auto sales numbers after a strong surge in February. Stay with us.
Welcome back to Chartbusters on CNBC TV 18. Nifty again picked up a bit of pace in the last few minutes as well. 24,600, 150 points up for the Nifty 50 as of now. But let's talk about what's happening in Rupee, right? Rupee is smartly higher today, rising 0.6% approximately, and countering most of yesterday's fall. Lata is here to give us a wrap on what's happening in the Forex market.
That's right. The rupee is up about 0.65%, countering yesterday's 0.75% fall to a large extent. But it is the best performing EM currency, EM Asia currency today. And that is explained by the fact that there is very heavy Reserve Bank intervention. According to the dealers, even before the markets opened, in the offshore market, in the NDF market, the Reserve Bank had intervened. And the argument in the market, the chatter in the market is that a lot of speculators would have taken speculative long positions on the dollar versus the rupee, that is short rupee positions, which is what the Reserve Bank took out or cleaned out in early morning trades. Now, that said, there are some positives for the rupee. For instance, the dollar index, which was at 99.5 at the height of the, say 24 hours ago, has now moved down towards 99. And so there is a bit of a softening, and there is the better performance of the stock markets. Hopefully, therefore, we won't get the massive sell number that we got yesterday. So pressure on the rupee could have come down from these quarters as well. Nevertheless, the big negative remains. Crude has not moved. It remains at $84. And the Strait of Hormuz doesn't look like it's going to be opened anytime soon. Lot of uncertainty over the potential price of oil for the next quarter, for the next month, and therefore the pressure on the rupee and the Indian current account deficit continues. Just some relief for the moment.
Okay, all right. Thanks a lot for that, Lata. Well, as Lata was giving us a quick update, actually the markets have seen a bit of a upsurge. And now we're at the high point of the day. The metal stocks are doing well, but I think add to the list something like a power grid. That stock has moved up. As I was saying yesterday as well, JSW Steel, it appeared that there was just some, there was some routine profit taking. It's returned back to its winning ways in today's trade. And I think a stock like ICICI Bank, which is a heavyweight, that's cut its losses by more than half. So that as well helps in terms of an up move. Almost moved into the green. It'll help the Nifty. It'll help the Nifty Bank. Let's turn our attention to the auto space, though. We have S. Vigneshwar, the president of FADA, who joins us on the show, and we'll be discussing the Feb auto registration numbers. Well, hi, sir. Good morning. Thanks a lot for joining in. Well, the last month we saw double-digit growth, which is very, very good. Feb was probably one of the best Februaries we've seen on record. Registrations were higher as well, by around 24 to around 36% year on year. So let's quiz you a little bit about this. What's leading to this sort of a demand surge?
Thanks for having FADA over at your show. We really appreciate it. And we also appreciate what the customer sentiment and the customer buying pattern has been in February. As you rightly mentioned, it's been the best ever February for more or less each one of our verticals. We've been doing well. The GST headwinds have been really, the tailwinds have been really helping us out. We even mentioned this during September that this is not going to be a 1 month affair or for a quarter, and the GST would be helping us, especially in our sector, for a few quarters, if not for a few years. I think that's come true. We've seen 6 months of solid growth, 20+% of growth. Just to add, until April to August last year, we were at about 3% growth. Right now, cumulatively, we are at about 12%. So we really feel this is set to continue. The customer is hungry to go to the dealerships and pick up the vehicles of their choices.
Hi, sir. Good morning. This is Vinny joining in the conversation. So while obviously you said GST is a tailwind that's supporting the growth, but for how long, right? Now, since September, from September to now, will this continue maybe through the year, or do we expect it to end somewhere mid-June, April, May? When is it?
We've been asked this question every month since September, and we've been quite strong from our feeling that it'll be something which is going to be years to be benefited from. We have seen this also from our dealership sentiment survey, which we have every month, that it's still strong, slightly lesser compared to last month because of Straits of Hormuz issues going on there. But I'm sure that will sort itself out. I don't think either of the sides involved there have an appetite for anything prolonged. So hopefully we come to a conclusion quickly and get on with our lives.
Okay, so then double-digit growth is something that would continue through the year as well, right? And a strong 20+% growth.
Absolutely. We don't know whether it's going to be 20+%, but there's going to be much better growth than what's been happening in previous couple of years. We find that there are no issues, nothing fundamental which is going to hold us back. So the industry also has new products coming in. It has extremely new technologies coming in. So all this would really drive customers to dealerships, and after that, we are there to take care of the buying decision of the customer.
So, but there are some companies who have highlighted in the recent past that maybe there are some chip supply issues that's coming in. Is that a concern? Is that a worry that you are seeing right now?
This is something which we've already gone through over the past years, and we have actually come out of the chip issues. I'm sure the companies are working with their suppliers to sort this out. We don't find that this is going to be an issue which is going to hold us back. I think we have enough models of cars to push out.
Okay, all right. Sir, I wanted to ask you about this CV cycle. Many believe that it's turning around and could possibly be in the early stages of a very, very good run. You believe so? Is there enough evidence on ground?
There is. The last few months, we've been having extremely good CV numbers. In February, we grew by nearly 30% year on year in the commercial vehicle segment. And we're also seeing a lot of commercial activity come in. Replacement demand is one. Apart from that, absolutely fresh fleets, increased in fleet strength also is coming in. We've also been having a lot of large fleet owners talking about large fleet purchases from different companies. So this is going to help. You also have seen that this budget also carried a lot of infrastructure projects. So that would also help in terms of bringing in a lot of fleet demand. To add to that, we also have good last mile requirements for smaller trucks. So from small to large, I think we have good demand in the market.
So, what about the tractor segment? Continue to see good growth in February as well. 36% plus YOY growth is what I'm seeing. Do you think there are any concerns now that come in or emerge related to El Nino, or tractor segment specifically will also continue to see this growth?
I honestly have extremely little information regarding El Nino because sometimes it just flutters out. But in terms of the rural demand, it's been extremely strong over the last few years even. And the tractor sales have been doing well in the last few quarters. In the rural segment, where primarily the tractors move, we also seen that there's good demand for commuter level motorbikes. There are also extremely high and strong demand for cars. So the rural segment has been doing well. The rural economy has been doing well, supported by good rain, supported by good minimum selling prices. So all these things are helping the rural economy, which in turn helps the whole economy grow. We are very gung-ho about the rural economy and how it contributes to the automobile sector, even for the years to come.
Okay, sir, thank you so much for joining us this morning, helping us understand the trends that we're seeing in the auto sector as well. Thanks so much for coming on the show as well. But on that note, we're going to step into a very short break. After the break, we'll talk more on markets, more stock-specific action. Stay tuned in.
Welcome back. Actually, from the broader markets, there are quite a few stocks that are doing well. We have some news coming on Hindustan Zinc. They have signed an MOU with Virginia Tech for advanced research on silver recovery. Sentimental positive. The bigger positive will be the move in terms of silver prices. A stock that's corrected close to around 15% just in the last 1 month or so. Promoter came and did an OFS, and from there, the stock just sunk. So let's see how that goes. But silver prices as well have corrected. So that's one stock. Sarda Energy, we had quizzed the management earlier today, and they indicated that in the next 5 years, possibly the EBITDA moves to 3,500 to 4,000 crores or thereabouts. So post the doubling of SKS capacity, they could be pretty well placed in comparison to the less than 2,000 crores that they do as of now. That said, let's shift focus to our ideas for profit segment, where we have our colleague coming in from Money Control Pro. Bharat joins us to help us out with the stock that is tracking very closely. Bharat.
Today's ideas would be Indian Hotels Company Limited. The hotel industry demand continues to remain strong. The company has guided for 8.5 to 10% RevPAR growth and 12 to 14% consolidated top-line growth for the upcoming fiscal. Healthy like-for-like growth owing to sustained industry upcycle would be a key growth driver for IHCL. The company has lined up aggressive inventory addition plan and aims to add about 30,000 keys over the next few years. This is roughly equivalent to its current inventory count of about 20,000 keys, which makes its IHCL's expansion industry leading. The new businesses of Ginger, Cumin, Pharma, as well as Trees of Life are ramping up fast. The company's acquisition of controlling stake in Clark's Hotels would significantly ramp up its presence in the mid-market space. Additionally, the company has acquired controlling stake in Bridge, which is leisure boutique, as well as Atmantan, which is wellness luxury, thereby enabling it to significantly diversify its offerings. At the current market price, the stock is trading at an EV by EBITDA of 25 times FY27 projections. Investors can understand. Thank you.
Okay, thanks so much for that. But with that, we're absolutely out of time on this edition of Chartbusters, leaving the Nifty comfortably above the 24,600 levels. Thank you so much for tuning in. Up next, you have Trading Hour.
You're watching us here on Trading Hour. We come to you live from the CNBC TV 18 Motilal Oswal studio. Mangla Malu with me is Hormas Vatakia. As always, Ritu Singh joins us as well. And it's a relief rally that we're seeing in the market. The question is, how much do we build onto this and whether this sustains or not? The Nifty Bank obviously higher by about 0.4%. As we move about 100 points from here on, the resistances come in. So far, after the big decline that we've seen in the last couple of trading sessions, it was imminent that there could be some sort of bounce back. The question here again is whether this is sustainable or not, largely because we're no wiser today than what we were yesterday on the situation in the geopolitics right now. At the high point of trade, but let's see where we go. Ritu.
Well, you know, for the last three sessions, the markets have been falling under the shadow of the war, but we can't really say the recovery we're seeing today is a definitive reversal yet. But yes, the buyers are not abandoning the markets at these levels, and the markets are staging that recovery we're seeing, led, of course, by the metals pack that is rallying in trade today on the back of the aluminium prices. We'll tell you more about that in just a bit. The energy pack is another big gainer in trade today. You also have heavyweight names like Reliance that are supporting, the frontline index, while the big IT names remain a drag. But Hormas, as always, is standing by to put the spotlight on the top movers in the market that we should focus on. Hormas.
One of the big movers is something that you spoke about. We'll just talk about that in just a bit. We are at levels from where the index had reversed even during yesterday's recovery. But the one name that's making a name for itself over the last three sessions has been Nalco. And as the market has been selling off, Nalco is up 12% in these last three trading sessions. Even in today's session, we're no different, 7% higher today. 12, well, of course, on significant volumes as well. We've had almost 2 crore shares that have been traded on Nalco. The 20-day average being around 30 lakh shares, so around 6x its 20-day average. The total turnover today has neared 1,000 crore rupees already in the first couple of hours of the trading session, and 43% of the shares that have been traded so far on Nalco have been marked for delivery. Reliance Industries is one major name why every dip on the Nifty is seeing a recovery immediately, at least for now. 3% higher today, the top contributor to the index gains, and from yesterday's intraday low, which was around 1,300 rupees, the stock is up already 6% from those levels. Now, again, it snapped a 3-day losing streak in today's session, at least as of now. Volumes are 3x of their 20-day average. Close to 65 lakh shares have been traded on Reliance so far. The 20-day average is around 20 lakh shares here as well, and 65% of the total number of shares that have been traded so far are marked for delivery on Reliance Industries. The one theme that was doing well all this while is defense, but the one stock that was not doing well within this theme was Mazagon Dock, and after a 3-day decline, the stock is up in today's session with 4.5% higher. At one point, the stock was up almost 6.5. We're still holding on to gains. This is the third straight session where more than 10 lakh shares have been traded on the stock. Before today's gain, the stock had moved higher only once in the last 7 trading sessions, so a bit of an underperformer. Today's gain is the biggest since the 28th of January. Close to 20 lakh shares have been traded, the 20-day average of around 3.5, and 1/3 of those shares are marked for delivery so far. The underperformance is such that from its 52-week high levels of last year, which was close to 4,000 rupees, the stock is down 40% from those levels, guys.
Take that point, Hormas. Thanks a lot for that. So that's about Mazagon Dock and all the other stocks which are moving around as well. But don't lose sight of a couple of, large cap names which are currently under pressure. We have HUL, which is at the low point of trade. We are seeing Eternal, which was an outperformer in yesterday's trading session. Eternal and Swiggy, both of them did well. That one's at the low point as well. So move away from, safe havens is something that we're seeing right now. IT, for one, also down by about 1.5% right now. The IT index, that is, which was an outperformer yesterday. Today, we've seen some strength in the rupee back, and the other parts of the market doing a lot better as well. And one part among that is the aluminium stocks. We have Nalco, Hindalco, all of them higher on the back of global aluminum prices soaring due to the high geopolitical tensions. Nigel joins in with all the details. Nigel.
Well, that's right. Aluminum prices have moved to the highest levels that you've seen, in the last few trading sessions, and it's at the highest level we have seen actually in 4 years. A couple of reasons have played out. One is Qatalum smelter. They have initiated controlled shutdown. Qatalum, remember, is an aluminium smelter that's a JV between Qatar Energy as well as Nox Hydro. The capacity is around 650,000 tons. That's point number one. The other factor is that Aluminium Bahrain with around 1.6 million ton capacity, they've announced a force majeure. So, put this together, there is some supply that's actually gone out of the system. And the big question is, because of this spike we have seen in gas prices and the availability as well has come in question, because of that, the GCC region's total capacity could be at a bit of a risk. That's what the street believes. The total capacity, remember, is around 6.5 million tons as of the last calendar year, that's 2025. And 6.5 million tons would be approximately 8% of the global aluminium production. So, less supply coming into the system is leading to aluminium prices moving up. And that's why some of these Indian-based companies, well, they're standing to gain. Let's explain it to you. First with Nalco. Nalco has a double engine that's firing. Why is that? They'll gain because aluminum prices are moving up. So that flows down into the profitability. And also coal prices are moving up. So some of the aluminum players globally could get hit because coal prices are moving up. That is an input cost. But for Nalco, I understand close to around 55% of their coal requirement comes in from their own backyard, from their captive sources. So they'll gain on both fronts. Though you need to keep in mind that alumina prices as well have been soft. But for the time being, the street is reading it positively. Nalco is the big outperformer. Next, Vedanta. They have exposure to both oil and gas as well as to Brent crude prices. Brent crude prices as well as aluminium. And both those prices are moving up. So Vedanta will gain in that case. And remember, they have been working on backward integration with regard to coal as well as with regard to bauxite and alumina. So because of that, they are well placed. And finally, Hindalco, if you take a last 3-month chart, you'll see actually Hindalco has been a relative underperformer. Because of the fire at the Oswego unit, it's hit their cash flows, it's hit their EBITDA as well. But now the Midwest premium has moved to a level when instead of reporting, a tariff hit, it could be actually a benefit with the Midwest premium moving up. So the street believes that the worst of Novelis is actually behind. Things will gradually improve in the coming quarters. And as is the gain, because their Indian operations are linked to aluminium price move. So put everything together, aluminium prices have moved up. There's a bit of a supply shock that we're seeing globally. And because of that, our Indian aluminium players are doing very, very well. Back to you.
Are doing very, very well indeed. All a sea of green now for Hindalco, Nalco, Vedanta, all of them. Nigel, thank you for summarizing that for us. Take a short break. On the other side, put the spotlight on the bond markets with Manisha Gupta on the other side.
CNBC TV 18 and India Bonds presents Bond Street.
Welcome back. Shifting focus to the bond markets then. Manisha Gupta is here with the latest. Manisha.
Thank you so much for that. Well, after a couple of days of constant decline, we are looking at some steady moves coming in for the bond market at the opening trade itself today. Well, there are reports on that perhaps RBI likely intervene into the market and the bond purchases to defend 6.7% psychological level that the bonds do look at. Any case, the markets continue to track the US, Israel, Iran war and the conflict there. We already have entered into a 6th day onto this one. And the crude oil prices in the meanwhile trading at around 1.5-year highs have gained up by nearly 10% since the US-Israel launched strikes on Iran. So this is something that would continue to bother various currencies in the region and the money markets as well. Also, it is about the traders now shifting focus to today's 29,000 crore auction of dated securities for fresh direction on the yield movement. So a couple of things that the street will watch out for. And apart from that, it is going to be about the Indian rupee as well, where it has rebounded more than 50 paisa at the open itself. And after making those all-time lows yesterday, it does look like that the RBI has been intervening quite strongly in the money markets, at bonds and at the Indian rupee as well. The yields in the meanwhile, the markets do believe, are expected to be quite stable and range bound as we move from here. Interestingly, when you look at the overall volumes, they have continued to grow. The last 12 and 18 months for the corporate debt market and for the secondary market, both have grown quite considerably. So when you look at FY26 already, and this is the data until Jan 2026, we're looking at 18.46 lakh crores. This as an overall FY25 was at around 17.1 lakh crores. So strong numbers coming in when you look at the secondary market and within the corporate debt market. Also, when you look at overall number of trades, that also has grown quite steadily after staying flat for 6 or 7 years. FY25 and FY26 seem to be doing quite well with nearly 22.38 lakh after, as I said, after very flattish moves in the last decade or so.
All right, Manisha, thanks very much for bringing us that update. The 10-year yield, by the way, softened by just about 1 basis points as we're speaking at 6.66 at the moment. Let's slip into a break, but up next, we'll bring you the big story of the day in just a bit.
CNBC TV 18 and India Bonds presents Bond Street.
Welcome back. The big talking point over the last 5 days has been the war in West Asia, and that, of course, and the major flashpoint of that has been the Strait of Hormuz, which continues to remain shut, according to reports. Now, the U.S. Treasury Secretary Scott Bessent has said that they will reach out to ship owners and insurance brokers soon to ease the transit concerns. Now, while U.S. Energy Secretary Chris Wright announced that U.S. Navy will escort ships through the Strait of Hormuz when the timing is right. Listen into what they had to say.
I think we're inside the 12 or 24-hour window from our announcement yesterday, and that Ben Black, the president of DFC, has already had a plan in his pocket for months for this contingency, and we will be moving out to the ship owners, to the insurance brokers, and over the coming days.
We've offered to backstop, sort of be a reinsurer of the movement of these vessels. And even bigger will be when the time is right, and it won't be that far away, when we'll use the U.S. Navy to escort ships through the Straits of Hormuz. As you said, Laura, there's not traffic going through it today, but that's a temporary event. And fortunately, we have a world just massively well supplied, abundant oil around the world, and American production at record highs. So we'll get through this. It'll be a bump on the road, but it will change the trajectory of history to remove the menace that Iran has been for 47 years.
All right, and that leads us to the big story of the day today. Now, reports from Bloomberg suggest that China has asked its largest refiners to suspend exports of both diesel and gasoline in an attempt to boost domestic energy security as the conflict in West Asia widens. Sonal Bhutra joins us with more on the significance of this development.
Well, you know, China is big when it comes to refining capacity across the globe. But first, let me put through the news. China has ordered its largest refineries to suspend exports of diesel and gasoline. This is a verbal directive which has come by. It's not a written order which has been given to the biggest refinery companies in China. And it is done in order to protect its own domestic supplies in the wake of West Asia conflict as well. To give you some numbers, it is the largest refiner in the world. It has a capacity of 18.2 barrels per day, which is around 18% of the world contribution, quite similar to the US levels as well, but it has exceeded it by some percentage points. China has been, however, facing issues of overcapacity in the last few years, and that's why the government has been trying to limit refining capacity. In fact, they aim to cap processing capacity at 1 billion metric tons by 2025. So this comes amidst the West Asian crisis as well. What happens now? Now, do remember, China uses most of its refining capacity for domestic consumption itself. We don't know the exact export figure, but it is smaller than what they consume domestically. However, if they curb exports, this will definitely lead some supply crunch globally, and it would lead to higher refining margins. If that happens, there will be higher gasoline cracks, higher diesel cracks across the globe, and that could be positive for the likes of HPCL, IOCL, and standalone refiners like MRPL and Chennai Petro as well. Back home, there is another report which is coming in from Bloomberg, where MRPL has told its customers abroad that they will not be able to export gasoline and petrol and diesel to them in the wake of this crisis. So yes, there is action that's happening across the globe when it comes to refiners, when it comes to gas producers, and this is something which would continue to impact margins going forward. For now, it could be positive for refining margins, but could hit supplies globally.
Sonal, thank you for summarizing that big story for us, and that is, of course, the big story, because reports from Bloomberg is suggesting that China has asked, of course, and that is what Sonal was summarizing that. And now moving on to our guests on this conversation, we are being joined by M.K. Surana, the former CMD at HPCL, and Nitin Soni, the head of Natural Resources South and Southeast Asia at Fitch Ratings, to discuss more on why China has done so and what does this mean for global markets. Gentlemen, good morning. Thank you for joining in. Mr. Surana, to you first. You've seen what has transpired just now with China. Do you expect a similar move taking place sooner or later in India as well?
I would think so, because when the things are uncertain, people will try to take some proactive actions to ensure that the pains are limited. And therefore, if the things are not getting resolved soon, I assume that the similar action will be taken not only by India, but most of the countries, because if you are exporting the products, then you need more crude oil also. And that Strait of Hormuz, unless it is cleared, the supply of crude oil in the world is a threat right now.
Well, Nitin, how would you read this situation and how big a deal is it for the global fuel markets? The fact that China is now asking its largest refiners to suspend these exports, prioritize domestic supply. Would you say this is the clearest signal yet that, governments are preparing for a sustained supply shock from the Gulf?
Yeah, sure. I think thanks for having me on the show. So let me start by saying that at Fitch Ratings, our base case is that this conflict will last less than a month, and the duration will be obviously shaped by the factors, including the destruction of some of the Iranian military capacity. So having said that, we also assume that the Strait of Hormuz will be effectively closed for only the duration of the conflict. So we are not assuming any prolonged conflict. Coming to the point that now China has banned the petrol and diesel exports, I think this could be, positive for some of our Indian refined products exporters, such as Reliance, which we rate at BBB flat stable, and local currency at BBB plus stable. So it could mean higher gross refining margins for those exporters, we do believe that the higher crude prices and the higher cost structures could be negative if the war prolongs for a longer time. It could be negative for the Indian oil marketing companies, as they wouldn't be able to pass through the cost at the retail prices. We'll have to see, how much cost they can actually pass through on the retail pump side when the crude price is higher.
Take that point, Nitin. In fact, let's get some numbers coming in from Mr. Surana itself. Brokerages are saying it could be about a 20 rupee hit on per litre to all these oil marketing companies. Do you think that's a fair estimate?
That's question to me?
Yes, that's to you.
Okay, so normally a dollar increase should make a difference of around 0.5 to 0.6 rupees in the impact on the sales price. But it also depends on what is the exchange rate at that point of time. Now, as you know, for a long time, the pump prices were constant. So there were cushions. And I think up to, let's say, $75, $80, it may still be okay. But beyond that, definitely it will hit the margins of the OMCs. The second point which I wanted to tell is what Mr. Soni has mentioned, that while a conflict of 1 month is one thing, but even if after the Strait of Hormuz get cleared, there will be too much congestion, and there are capacity limitation at the ports also, at the discharge ports. So it may take longer time to normalize. And I don't think that the people will expect that this blockage of Strait of Hormuz should last even for a month. A month will be too much.
Right.
So I think right now the people are assuming a lesser than that, maybe through the diplomatic off-ramp, or the capacity to retaliate gets diminished over a period of time.
No, we take that point entirely. And this morning we had an analyst, Dayanand Mittal, who joined in as well, who did say that, even after things settle, there would be a $5 to $7 geopolitical risk premium that would be, ascribed to crude over and above what it is trading at and what it will settle at. So 75 to 77 would perhaps be the new normal after what was between 65 and 70 after even this crisis once it settles. But, like you said, that a dollar increase causes a 5 to 6 rupees sort of loss per litre on, the OMCs. This time around, it's more than just a dollar increase in crude. It's also the weakening of the rupee itself.
0.5 to 0.6. I didn't say
okay,
5.
Sorry, 0.5 to 0.6. I apologize. We also have the weaker rupee now.
Yes.
Do you think that could have a further impact? Because some analysts are saying that all these oil marketing companies could be losing almost 20 rupees per litre. Is that fair or not at all?
I would like to speculate on that. But one thing we need to remember is when there are sharp price rise because of the supply concerns, that the ramp back is also faster. So I think on an average basis, I don't think that this price rise which happens suddenly will sustain for a longer time. So like I was seeing some of the report, people were trying to estimate that maybe Q1 may be around average $75 to $80.
Nitin, very briefly, what are the regions that would be most dependent on Chinese fuel exports? Sonal was telling us earlier, they're not perhaps a very significant player, but they are a marginal player that do, have these supplies. Where do you see the biggest supply gap emerging if the restrictions persist? And what do you make of the fact that, this directive is not really written, it is verbal, it's very informal. So, what does that tell you about how fast the situation is moving there?
I think as Mr. Surana rightly pointed out, that in such situations, obviously countries take decisions to protect their own energy security. And I think this decision by the Chinese government, NDRC, is mostly to protect their own, supplies of crude. And I think your journalist also rightly pointed out that China is actually not a major exporter to the world. I think in Asia, it's only the third largest exporter. It does have a very large refining capacity, but most of the refined products are consumed domestically. So a tighter supply, if these exports are not shipped outside China, would actually be beneficial for some of our exporters, some of the Indian exporters like Reliance and Naira, and some of the regions. I think Europe and within Asia could be the target countries for our Asian refineries to fill that gap which China will not be able to supply.
Mr. Surana, the oil concerns, yes, but the bigger concern is also about gas. We have already started seeing gas companies cutting down supplies to industrial clients and declaring force majeures because of what has transpired in Qatar right now. But if this goes on for a while longer, does this percolate down to PNG as well for cooking gas and so on? Would that become a bigger cause of worry than just higher fuel prices?
We need to understand that oil can be stored for a long time, but the LNG has got certain technical issue to store for very long time. There are some issues like boil-offs and all. So therefore, the sudden impact because of the supply constraint comes more profound on LNG. Now, India imports almost 50% of LNG, maybe around 25 million ton or so. And and our total LPG consumption may be around, let's say, 50 million tons. So 50% being catered by the domestic gas, and balance which is being imported includes the industrial supply as well as the domestic supply. Right now, I think that there is an increase in the LPG supply even from the other countries. Like earlier, we were not importing LPG from US, but let's say in January, we had got some cargoes from US as well. But yes, the LNG supply may be a concern. So right now, the way I see is that everybody probably, the way we see the oil prices, it has not shot beyond 85 yet. In spite of such a war situation, it means that probably the market is assuming, or the people are assuming, that somehow the oil-related or the gas-related infrastructure will allow the flow sooner. And how it happens, that nobody has got a clarity right now.
But Mr. Surana, just very quickly to sum up, you mentioned that there are other sources from where gas is being sourced, but with such a large quantity coming in from just one source, would that not be difficult to replace the entire amount just if this goes on for a while longer?
No, as I mentioned to you, that there are two parts. One is the industrial supply and there is a domestic supply. So I think the government will try to ensure that at least the domestic supply, which is used for cooking and all, is maintained. And maybe there may be some cut on the industrial supply.
All right, we take that point. Thanks a lot, Mr. Surana. Nitin, thank you for joining in and giving us what's the best guesstimate. That's the word that we can use right now in a situation which is fairly uncertain. But as of now, as and when there is more clarity that emerges, we'll obviously put numbers to the estimates that we're making right now. Take a short break, come back. Market Technicals with Rajesh Palvia, and he joins in obviously from Axis Securities. Welcome back. The market today, if you look at it, the Nifty's made some moves towards a recovery, but it's selling off at the highs. Today's high was well over 24,700, and now it's holding around that 24,600 mark. In fact, moments ago it was closer to 24,650. And the reason for that is one, that the Nifty Bank is finding some resistance at important technical levels, which we'll talk about shortly. And also the Nifty IT index, which was actually outperforming yesterday, is underperforming in today's trading session. So that's keeping a lid on the gains that we're seeing on the index. The good part, however, is that the India VIX is easing. After a 22% sort of jump yesterday, it's come back to levels below 20, just under 19. So that's a positive. And the broader markets are feeling a shade better than what they were yesterday, and a shade better than the frontline indices as well. 0.5% higher for both the mid-cap and the small-cap indices, and the advance decline ratio as well, firmly in favor of advances so far, though the decline line is slightly creeping up right now. As we speak, those lines are coming closer. The technical resistance on the Nifty Bank is the 59,195 mark, which is the 100-day moving average, which is closer to today's high on the Nifty Bank as well, from where it is seeing a bit of a sell-off. So that's something that we need to cross past for the bulls to feel a little better. And the other part of the market, in absence of the Nifty Bank being able to cross that and the IT index being able to cross that, is Reliance. So that heavyweight also is closer to its 20-day moving average, which also is a supply zone. So about 30-35 rupees from here, that is a level that comes by for these indices. So after this relief rally that we've seen, supply levels start kicking in for important components of the Nifty itself. And which is why, while we've seen put writers active at 24,500 and 24,600, and because the VIX is high, the premiums are high, the cushion for writing this is a lot more as well. So the street is expecting some sort of support come by between 24,300 and 24,400. 24,301 or 303 was actually yesterday's low, so that's an important mark to track. And on the way up, we're still seeing some sort of supply at the 24,600 call. Those writers believe that as we move towards 24,700 to 24,800, there could be the market resistance which will play out for the Nifty. In that as well, we do have a couple of stocks which are fairly well bid today, more longs than shorts. So Mazagon Dock is one, up 6% right now. The other one is Coal India, which continues to do well with a 3.5% gain.
Near 52-week highs is Coal India, 450 on the stock. Mangalam, thank you for that FNO update. It will give you one more reason to worry. Of course, it's not something that we like to do, but it is what it is, and that's oil. Brent is now near 85 barrel, and as temporary as it may be, you don't know how temporary it is. And 84.53 is where Brent currently is. It just a few minutes ago hit an intraday high of 84.74 has Brent. NYMEX is now nearing 78 a barrel as well. So oil prices are showing no signs of easing at the moment, and the index too seeing some selling pressure at higher levels. A quick chart check with Rajesh Palvia from Axis Securities. Rajesh, good morning. Thank you for joining in. As Mangalam was highlighting, there is supply coming in at higher levels, both on the Nifty and on the Nifty Bank as well. So your calls on the index, do you still use this recovery as a sell on rally template, and your stock recommendations as well?
Good morning. So market was in oversold trajectory, so some pullback action has been there in the Nifty as well as in the Bank Nifty, but still we are not able to cross the major supply zone based on the call concentration, which is placed at around 24,700, 750 zone, which needs to cross. Then only we may see some sort of short covering action in the Nifty. Till now, still shorts are still there in the system, though there is some put writing activity has been seen at the lower band of this supply pressure, like 24,500 and 400 has attracted some put writing activity, but it's not that much in terms of quantum is not that much great to say like this bottom has been done for this fall. So we believe that sell on rise has to be there at this juncture for near term perspective, until the Nifty not able to take out about 24,750 level on the closing basis. Bank Nifty is having major supply zone at 59,000, 59,200, major call concentration area around this strike only. So for Bank Nifty, 59,200 needs to take out to initiate some short covering action. Otherwise, again, here also the large cap banking basket is still, witnessing supply pressure at higher levels. So here also sell on rise would be the strategy until the Bank Nifty not crosses 59,200. Some of the pockets where we have seen, major, oversold trajectory have shown some bit of short covering action, be it capital goods or even in the metal space, we have witnessed a good recovery from the lower level. Some long built up trade has been played out in metal space. So I think one can focus on metal stocks at this juncture to go long for trading point of view. Hindalco is looking attractive. The way stock managed to give again, breakout of its supply zone at around 950 zone. So I think if it continues to hold above 950, some more upward momentum towards 990, even 1020 we may see for Hindalco. So one can buy and accumulate with stop loss of 945. Another basket, as you mentioned about the defense, I think here also one can focus on Mazgaon Dock has managed to give strong recovery from the lower band. And now stock is negotiating with some falling trend line on the daily chart. Any breakout about 2300 may attract more buying action and possible rally towards 2350, 2400 we may see for Mazgaon Dock. So here one can focus on to go long with stop loss of 2240.
All right, Rajesh, thanks very much for giving us those calls. We'll have to take a short break on that note. But up next, we're going to discuss market fundamentals with Chakri Lokpriya, who's the Chief Investment Officer Equities from LGT Wealth India. Welcome back. The markets, though still in the green, are extending some declines. Actually, you have the Nifty, which is now down about, 105 points. It's down about 0.3%. In the last hour alone. But you do have the advanced decline ratio. We started out with about 2 stocks advancing for 1 stock that was declining, which has now come down to about 1,600 stocks that are advancing and only 1,200 that are declining. So, we'll watch out for how this plays out going ahead. But, you have a U.S. federal court which has ordered President Donald Trump's administration to begin processing refunds on tens of billions of dollars in emergency tariffs that the U.S. Supreme Court said last month were unlawful. Now, this order says that U.S. Customs and Border Protection must recalculate the final duties that are owed on any and all imported goods without including the tariffs that Trump imposed under the law called the International Emergency Economic Powers Act, or the IEPA. Now, this comes as U.S. Treasury Secretary Scott Bessent says global tariffs will be raised from 10% to 15% sometime this week. Speaking to CNBC, he added that tariffs will be back to their old rates within 5 months. Take a look.
The president has said that he will raise the global tariff to 15%. I believe it still stands at 10% today. Do you know when that change will be implemented?
Becky, that's likely sometime this week. And again, that's under something called Section 122, and that's a 150-day authority. And during that time, during the 150 days, we will see studies from U.S. TR on Section 301 tariffs, from Commerce on Section 232, and it's my strong belief that the tariff rates will be back to their old rate within 5 months.
All right, to discuss this further, we have Chakri Lokpriya, who's Chief Investment Officer Equities from LGT Wealth India, now joining in. Chakri, you did say that there is a fair amount of opportunity for Indian textile companies, electronics, to capture a fair value by 2027 as well. I remember it was close to $7 to $10 billion when we last spoke. Now there is some sort of uncertainty and a fair amount of uncertainty as well. The certainty is that it does not extend beyond that 18%. The uncertainty is whether it's 10, whether it's 15, or whether it's 18. Given the current situation and the geopolitical tensions around, what do you make of the market setup and the benefit that India could accrue, or benefit that could accrue to India, specifically the sectors that you liked earlier, the PLI and the textile space?
Good morning. A lot has happened between the last time we spoke.
Exactly.
And the world has become a very fluid place. And India is an oil-dependent country. We all know that, with about 85% of its import. And as the rupee falls, and the rupee is falling for a reason. India has only about, let's say, about 25 days worth of oil reserves. So depending upon the length of this war and the Strait of Hormuz, etc., the opening of it is very crucial for India to buy oil at a reasonable price. Now that has a direct bearing on the rupee, which has hit an all-time low. And now that has a direct bearing on whether it's textiles or PLI. Now in the case of textiles, meanwhile, a couple of things have happened since we last spoke. One, the US government has changed some of its regulations to make the duties lower for imports from Bangladesh into the US. Therefore, Indian textile competitiveness goes down a little bit. Second, the Indian government, in its own wisdom, has taken away some of the subsidies that it gives to the Indian textile companies, and therefore that reduces the margins for the Indian textile companies in their exports, because their margins come down. So again, the net of all this, I think a 15 or 18% textiles is better than where it was, but I don't think the margins will improve. Second, for the PLI, I think same thing, rupee falling will hurt their import costs. A lot of components are imported, and therefore that also, but that's as the rupee hopefully strengthens, you'll see some strength coming out.
By the way, the Nifty Bank has now moved into the red. It's almost a 400-point cut now from the highs of the day for the banking index. And since we are on that subject, Chakri, the one sector that is possibly insulated from all of this is the banking sector. Of course, if things go on for a prolonged period, there might be some cascading effects. But as of now, there has been this consensus view of PSU banks having deep value over their private peers. Do you subscribe to that view as well? And if so, do you bet on the smaller mid-sized PSU names, or do you go on to the largest lender and stick to that and then find value in private names as always?
You said it right in terms of there is some amount of what you call collateral damage. It comes in various forms. One is, as long as this war and other conflicts, including the tariff uncertainty for the next 5 months continues, that means companies are, whether it's textile, jewelry, or some of the other sectors like electronics, they're all unlikely to do any capital expansion programs for the next 5 months because they're waiting for the dust to settle, which are where the rate's going to settle. So that implies lower credit uptake for the banks, whether it's PSU or private banks, and therefore there is a second order, what you call slowdown for the banks as a result, while they're domestic in nature. Second, PSUs are kind of still better placed than the private banks because PSU will more benefit from the infrastructure growth of government spend on infra, whether it's construction of road, bridges, dams, etc. And therefore, I think PSU banks, whether large or small, whether it's an SBI or Union Bank, are well placed.
Well, Chakri, hi, this is Ritu. In fact, I'd go on to add that perhaps there is a direct repercussion because you have high crude oil prices that could mean a higher deficit and therefore higher borrowing and therefore higher yields. Wouldn't that hit some of the treasury gains, especially for these PSUs that have been leading the rally?
No, you're absolutely right. And just in the last 4 days, oil prices have gone up about nearly 15%. So that has, if the oil prices do not come down quite fast, then it increases the current account deficits. The rupee is, of course, falling. It also increases inflation. And all this hits the treasury gains of both of PSU banks and even private banks to a lesser extent. But, it's just been 4 days. So hopefully if the oil prices start their way down, it's good. Otherwise, if it continues for, let's say, for a month or two, then yes, there will be some amount of treasury gains hit for the PSU banks.
Chakri, short but insightful conversation as always. Thank you so much for sparing time and joining us today. Look forward to having you more often on the show. The index has cooled off from the day's high, and that's courtesy the Nifty Bank. Get you more on the markets on the other side right at this short break.
Welcome back. Some wild swings in the Bank Nifty. It is now down about 60 points as we speak, though Nifty, has also lost some of the gains that it had made, now up about 86 points. But keep in mind the Brent prices, oil prices will stay in focus, now above 84 a barrel, $84. But you, of course, have the rupee that is trending. But take a look at the flashes at the bottom of your screen. GAIL is saying the LNG supply from Qatar Energy has reduced to zero from the 4th of March. We'll see if the stock price is reacting to that. Right now, it's up about 1%, but completely out of time on this edition of Trading Hour. From Hormaz, Manglam and me, it's a goodbye. Stay tuned. The team of Halftime Report will take all the action forward.
Stocks see a small bounce after the sharp fall in the past 3 sessions. Metals and utilities are the big gainers, while IT and FMCG drag.
The price of aluminium hits a 4-year high after gaining 5% in a week as the Gulf region refiners halt production. A decline in LME inventories further fuels the rally. Stocks of Hindalco and Nalco perk up.
China tells refiners to halt fuel exports in light of Iran war, while Qatar sends force majeure notice to customers on gas supplies. The move sparks fear of diesel, gasoline and gas shortages. Stocks react.
United States Treasury Secretary Scott Bessent tells CNBC the 15% global tariffs will start this week, and the tariff rates imposed before the Supreme Court ruling will be reimposed within 5 months. Rupee recovers sharply on intervention by RBI in offshore market to trap speculators. According to dealers, continued high price of crude weighs on the rupee, but lower dollar index and stronger equities is helping sentiment.
Hello and welcome to Halftime Report live from the CNBC TV 18 Motilal Oswal studio. I'm Ekta Batra and with me is Sonal Bhutra as well as Vinny Motiwala. Well, it's turning out to be a day where we are seeing some amount of green on the screen, but you'd have to say it's choppy because we have the Bank Nifty, which is now down around 24 odd points. We have the advanced decline ratio, which is on the positive side. So that's definitely positive considering that it has been extremely dismal in the past 2 trading sessions. So as of now, we have the Nifty, which is up around 100 odd points. We have the mid-cap index, which is up around 143 odd points. But just want to point out that, the volatility continues. And while West Asia, which is basically all of the conflict, is one of the reasons we're seeing the underperformance for the Indian equities has been continuing from the start of the year as compared to the emerging markets. So maybe the table should come up for you where India has fallen around 6 odd %. The other only emerging market which has not done well is Indonesia, which is in fact underperformed, which is down around 11 odd %. But compare that to China, Hong Kong, South Korea, Brazil, Taiwan, all of these markets which have been rank outperformers this year versus the Indian equities. So yes, while the conflict is one part of the underperformance, it seems as though there is this FII outflow, which has been, one of the key reasons why we are seeing this underperformance continue and has been the case from the start of the year as compared to our emerging market peers, except for Indonesia. Hi, girls.
Hi, hey, Ekta. Hey, Vinny. Markets have come off substantially from the highs of the day, so that is something that we'll be tracking very closely. But before I go across to Vinny, we have a special conversation which is lined up. This is our What's Trending segment. Markets remain the top focus. While we are seeing a bit of green today, sentiment continues to stay on edge amid the ongoing tensions in West Asia. To help us decode how investors should be positioning themselves in this volatile environment, we have an animation conversation with market veteran Ramdev Agrawal of Motilal Oswal Financial Services. Let's get across. Animesh, over to you.
Thanks, Sonal. So yes, I'm at the Motilal Oswal office, and joining me now is Ramdev Agrawal. Ramdevji, thank you very much for talking to CNBC TV 18. After 2 weeks back, there was AI. In the last 1 week, there is Iran. There's so much of uncertainty. People are panicking. What's your sense? Is it a time to be greedy or is it time to be fearful?
Yeah, you have to be sensible in the sense that sure. You have to be careful about the markets, because there are multiple things happening and it's very chaotic. How do you find order in this disorderly world? So investing is becoming very complex because multiple forces are hitting you. In fact, India is one place where actually you are at a lot of peace. At least in this part of the world, India is one place which is very large, very self-sufficient and very peaceful. And I think at some point of time, India will start getting recognized as a place of stability and peace and prosperity. So that is little later. So right now, market is correcting. We are seeing the Iran happening. So I don't know whether it is a peak of fear. Of course, at the peak of the fear, you have to be peak of greediness also. Yeah. So clearly, I'm nobody to call whether this is an end of war or see. Markets will always move ahead of that. So markets in 2-3 days, 4 days, they price more than what Iran could damage. So the markets are. The war will move at a particular pace, but the market can move a much faster pace, and that's what really happened. So my sense is the peak of the fear has already been priced in. Unless some completely untoward incidents happens in Iran, I think we have seen the worst of Iran war, and hence it is there in the price.
And worst of the correction as well, or you think there could be more pain, at least in the very near term?
Then we have our own problem of earnings, and that side is very good news in the sense that corporate performance. If you see Q3, I think we saw about 50. Across the board, what we cover about 350 companies. The performance is very good. If you go and visit the companies, I think you are finding more bullish companies than bearish companies. So the performance is clearly picking up, consumption is picking up. So I think as for ultimately the price will reflect what is happening in the real economy. So real economy is on pick-up stage. You might have seen the Q3 numbers also, 7.8% of GDP growth rate. And that is now visible little more widespread way. So Iran is one aspect of it, but what's happening in real economy? I think real economy is on the positive side, and hence and Iran has helped, or Iran has caused some quick correction. So now Nifty is trading at less than 22 times or 21 half times current year earnings. It is trading, which is, I would say, it's not grossly overpriced or anything. It's a fairly priced.
But it's not even cheap, right? I mean, it's not 21 times. It's not cheap. So there is a risk of
the house kind of thing.
Yeah, correct.
It is much more investable market, sensible, but it's not throwaway market.
Ramdeji, I'll come to you on the earnings, because that's been the big advocate and bullishness for you to be bullish, because you believe the earnings are going to pick up. But just to finish the global point in terms of Middle East, or for that matter, even for that matter, US tariffs. Yesterday there was a Supreme Court judgment in the US as well that maybe US will have to give back the tariff amount that they've collected back. And there is so much of uncertainty with that as well, with the tariffs and all. Given the global context, how do you see? What's your prognosis? How do you approach this market?
Yeah, so you have to be extremely selective. You have to, because there are a lot of businesses which is completely, the impact is very little. So if you look at banking is basically domestic stuff, or some consumption which is very domestic. Those companies are not impacted that much by what's happening globally. So we have to be very careful.
Basically, time to be very selective in the domestic.
Very selective. And if you're not competent to do that, because there are a lot of new investors, millions and millions of new investors, everybody is not competent to select stocks. So they should not get into that job. Then they should give it to the fund managers who are doing reasonably well in terms of which are the schemes, which are the managers who are doing well. And even if that is difficult, in that case, index is always there. And today, index is doing better than most of the managers.
Absolutely.
So if you buy S&P 500, you buy Nifty, you buy 100 or 250, I think top 250 or something like that. So index investing is one of the would have been best performing kind of a segment.
Ramdeji, I was looking at some past data, and typically the big pain in the Jan-Feb March quarter seems to be a buying opportunity, and after that, in the next 9-10 months, you see very good returns. And since the COVID times, at least there have been 6 instances, and I was looking at the data. All the 6 instances, March to December, after the big fall, has been positive between 15 to 25%. You think we are ripe for that sort of a return, that maybe let the March pain get over, and you might see a very big return over the next 9 months from here?
I would not bet on anything like this.
Sure.
I would go about having a moderate expectation of about 12 to 15% kind of return, because that is what the earnings alignment is. I am not too hopeful on the P getting re-rated again.
Sure.
So 21 half, maybe even it might come down by another 5-7% to more like 20. So at 21 or so, what is the kind of earnings I see? And that's why when the earnings are looking to be 10 to 15%, my ambitious goal is to earn 15% in next 12 months.
Right. Ramdevji, is that earning thesis getting challenged now with the global environment, with the, there are so many sectors which will get impacted because of rising crude and logistics issues and everything.
I only hope that this is a temporary problem, in the sense that, if it gets very prolonged and the Gulf of Hormuz actually gets blocked and nothing comes out, the gas doesn't come out, petrochemical doesn't come out, crude doesn't come out, obviously we'll have far more intense issues, but we'll tackle it as it comes. Right now, clearly there is disruption in all the petroleum-based, supplies. So you must have read about Morbi. They stopped the tile production because there's no enough gas available. Even Petronet LNG itself has.
That entire basket is under question, right? The OMCs, aviation, gas companies, everybody will be.
And eventually it is the inflation, I think world will find enough energy sources, enough oil supply, enough petrochem, but it's a sudden disruption. So, there is a clearly some kind of a headache right now. But I think world will come around, and You have to wait and watch in the sense that another 1 week, 2 weeks, 3 weeks, and then the world will find a way to get normalized. And I'm hoping that 95, 97% chance that it will get normalized in the weeks ahead, and we have seen the worst of it. That's what my reading is. But you should also be ready if by chance things further get kind of worsen. It's not end of anything. It can get prolonged because they are the kind of guys they can keep fighting despite getting hit. So we have to keep ears and eyes open. And if by chance, see, one is the index to go down by 10% or say 5-7%. And other is that there are stocks which have gone down by 25-30%.
Absolutely.
And that's where the opportunity is. Right. You know the stock is worth $1,000, the stock is trading at 700 or 600. I mean, you should, and now, can it go to 500? Of course it can go to 500. But this is the time when you are getting actually sensible price of those stocks.
I'll ask you about those stocks as well. But the other big disruption recently has been the AI. And that's impacted your portfolio as well into some extent, IT and, the platform businesses and all. Your take on AI, and is it going to be disruptive for India, or is it going to be a bit of a support for the Indian companies? What's your take?
I still think, the impact will be quite big, but probably we are underestimating the long-term impact, and we are overestimating grossly the short-term impact. That the jobs will just get finished, or it will become 50%, and those kind of things, they are completely figment of imagination at this juncture. But what will happen after 5 years when this AI movement becomes even deeper? Then whatever models coming now, they will become even more sophisticated. So the eventually, I think need for the people, need for the kind of people we have in those jobs, that will change. So I think it's a very disruptive force. And one has to be very careful which company is on the right side of the disruption.
Ramdev, because you're a value investor, you look at deep value and all, is there a risk of the terminal value for the IT companies getting questioned? I'm asking this simply because, in your Focus 35, the top big holdings are the IT names, the Persistence, the Coforges of the world. How are you positioned in those names now after the disruption that you've seen? And do you really question the terminal value for these IT companies?
Yeah, so don't ask me anything about what AMC is doing.
Sure, no, of course.
The firms are doing themselves, and they're in and out and kind of thing. So, yeah, so I'm talking about in person, what I think, that there is too much of noise about what is possible, what is going to happen in short term, and it is taken as if the companies will not change.
Yeah.
See, companies also have an opportunity to change themselves. No?
Right.
They will do retraining of all the staff.
Yeah.
And the clients are not suddenly become AI enabled. Yeah. The clients also need help from somebody to do the AI enabling, and that will be done by this company. Okay. It's not that AI projects are not. I think Infosys declared that 5% or 7% of revenue is AI projects. So that's how the new services they come in, and these companies wave after wave. When initially they started in '95, they were doing just the body. Staffing for Y2K problem. Yes. Then came the entire internet stuff, then web enabling, then mobile enabling, then ERP, and a whole lot of things. It's a wave of, and we have seen that they have absorbed more and more services, more and more projects.
So you believe the IT companies will also change?
They will change.
And
this time
there's an opportunity to invest in IT companies.
I'm not saying that.
Sure.
I'm not saying that. My understanding of IT today is worse than anybody else.
Okay.
It is not that clear that this company is going to win.
Sure.
I know it is very exciting time, but I would say they are headwinded.
So it's difficult to find the right to win as of now in IT.
If you are expert, you can figure out.
Sure.
If I'm expert in say financial markets, so if you ask me which part of the financial markets will do better, probably I'm better positioned to talk about that.
I'll ask you that as well.
No, but IT side, it's a very complex. You have to. Whenever you speak to anybody, they have a different kind of a take.
Kind of a view.
And particularly if the company is listed, he says that it's a business as usual.
Correct.
But when you speak to the guy who is not, who is the other side, he says, one of the experts, by 2030 there won't be any IT jobs only.
Okay.
So that kind of extreme thought process are there. So it is very difficult for me to really take a clear position.
Sure.
It is clearly headwinded. There are problems in the sector.
What about the platform businesses, Ramdevji? Because again, that's been tagged to AI disruptions, and stocks have got corrected as well. You've been very bullish on the platform businesses for the last many years now. Your initial take, because you talked to the companies as well, what's your sense? As far as the platform business, Zomato, Zepto, Swiggy.
So all the users of the technology, you know, see these platforms are built on the bedrock of say internet or what are other technology, digital technologies. So they are adopting very fast. In fact, they are adopting very fast. And other day I was meeting a company, and he was saying that we are growing at 40%, but my number of tech guys, they're at 200, and we don't need. I mean, and whosoever is living from the 200, we are not redeploying. So if 200 goes to 180, we work with 180, but my growth is 40%.
Correct.
Welcome back to a halftime report on cnbc TV 18. As of now, Nifty continues to be about the 24,600 levels, 150-point uptick for the Nifty 50. We have some updates that also coming in on Vodafone Idea, and this is according to sources of CNBC Awaaz, where they're saying the controller of communication accounts completed license fee reassessment there. We'll wait out for more details on this one. Reassessment of this license fee is for Vodafone Idea, which has been completed. This is what we're picking up. Vodafone Idea, as of now, is up 1% in the trading session. I think when the news came in, we did see a bit of a spike up, but this is according to sources of CNBC Awaaz. But on that note, let's go across to Vivek, who's here now to tell us which are the stocks that are moving around in today's trading session. Afternoon, Vivek.
Well, good afternoon. Another session where we've actually seen quite a bit of volatility, but today it's on the positive side. We started off gap up and we managed to hold on to gains, although marginally so. Well, the first set of stocks on the radar has to be the aluminium pack. Aluminium prices have rallied, significant supply deficits over there, and most of the names or most of the companies with alumina exposure are something that are doing quite well. So Nalco, Hindalco, Vedanta amongst the top gainers today. Along with that, yesterday the metal pack that took quite a sharp beating. Today most of these names have recovered. Names like NMDC, Tata Steel, SAIL, Hindustan Copper, most of these names have rebounded from yesterday's lows. Along with that, given the fact that it's expected to be a strong summer, and along with that also expected to see an El Nino, most of the power names today have seen a bit of a bounce back. Names like NTPC, Power Grid, Tata Power, all of these names up and about in the session. One particular theme that continues to do quite well is the entire defense pack. We also saw some news flow regarding Mazgaon Dock, a large order win is something that's anticipated. And at the back of that, most of the defense names, BEL, Bharat Dynamics, Mazgaon, all of these names up and about in the session. And along with that, most of the names, in the last 3 to 4 trading sessions, ever since the geopolitical tensions in the Middle East, some of the names saw strong beating. So names like L&T, Cummins, LT Foods, most of these names today have rebounded quite sharply. LT Foods up almost 11.5% today. On the other hand, quite a few laggards as well. Well, supply concerns have weighed in on Gujarat Gas. Yesterday, the stock was up, especially in the last hour. Today, down almost 6% on high volumes. The entire IT pack today, Kotak has gone ahead and downgraded their EPS estimates across the sector. Most of these names under a bit of pressure. HCL, Tech, Mahindra, and mid-cap names too under quite a bit of pressure. And Ramco Cements, one name from the mid-cap cement pack, down at about almost 4.5% lower on pretty high volumes today.
Okay, take that point. Thank you so much for joining us, Vivek. So some recovery from the lows, courtesy Bank Nifty for the markets and mid-cap index that continues to outperform for now, but we'll keep tracking that for you. Time for a break now. Jay Thakur of ICICI Securities will join in with some trading strategies on the other side. Welcome back. You're still tuned into Halftime Report. A lot of sectors which are in the green today. But what's happening in the F&O space? Let's go across to Mangalam with all the F&O action. Mangalam.
Well, the market was off highs, and now from lows, we've seen a bit of a recovery in the frontline indices, and that's an important data point that we're tracking right now. The Nifty currently at 24,650. It had briefly moved below 24,600 as well, and the reason for that is the Nifty Bank has shown a fair amount of recovery from the lows, even though it's underperforming. And the IT index, which at one point was down about 1.5%, has now curtailed its losses to sub 1% itself. So those are a couple of levels that we will be tracking. But for the Nifty Bank, the important part is today's high is very close to the 100-day moving average. So as it moves higher, we enter supply zones. The market breadth as well, if you look at the advance decline ratio, while the advances are still far more than the declines, the lines are coming closer. So the second half of trade will be extremely crucial. And the India VIX, which is lower right now, it's easing. But at what point does it start rising once again as the uncertainty returns is something that we will be tracking. But with the lower India VIX, the range that the option writers are playing for also lowers, because at higher volatility, the range, the ferocity of moves on the Nifty are a lot higher. So if you look at the active options, 24,600 call, fairly active, premium 250 rupees. Yesterday, at the money calls and at the money puts were over at 300, 320 rupees, which has come down by about 50 rupees, and that's the impact of the lower IV. And we have the 24,600 put as well, which has a premium of almost 200 rupees. So 24,400 to 24,850 is the broad range that these option writers are playing for. And that also coincides with yesterday's low on the Nifty, which is an important mark to now track, because yesterday's low, 24,305, marks the panic low of the current uncertain period that we're witnessing right now. Amidst all of this, there are a lot of stocks which are seeing some shorting as well. Eternal was an outperformer yesterday, but fresh shorts added on that stock today. And there are a bunch of these defense names, a bunch of PSUs which are seeing some shorts running for cover. So BEL is one which is up 4.5%, has been doing well ever since the uncertainty broke out. And REC is the other one which is up close to around 3.65% as well. That's another stock which is seeing a fair amount of short covering.
Okay, all right, Mangalam. Thanks very much for that. So that's what's taking place in the F&O space. For the markets, for the Nifty, we have it up around 175 points at this point in time. Good time then to get a technical check in the markets. Jay Thakkar of ICICI Securities joins in with his take. Jay, hi, welcome to the show. Afternoon. If you could just start by telling us what you are strategizing, at least for the Nifty and the Bank Nifty at this point in time. Do you expect these kind of sustains to possibly be built on and continue?
Good afternoon to you, Rima and Sonal. Now, continuing to what Mangalam was mentioning about VIX. So yes, we are seeing that VIX is down by almost 11% today to the levels of 18, and we saw it, inching towards the levels of 21 in yesterday's trading session. Now, Rima, I would say that generally VIX behaves in a very typical pattern during this war times, and if that can be actually deduced from the historical events, I would say during the war times, and we have seen VIX probably typically ranging between the levels of 20 to 35. If we go back to Kargil war during 1990s. 1999, I mean, it was estimated around 28 to 30. During the Russia-Ukraine war, it was estimated to it was somewhere around 30 to 35 range. And during the other wars, if we see, I mean, the smaller ones, I mean, recently, which we had between India and Pakistan, last year it was around 23. And if you have to see, during the Pulwama attack during 2019, it was around 26. So we have so far hit the levels of 21, which has been the lowest so far, if we have to compare these five events historically. So if you ask me that whether it is a chance that market may bounce back, or probably India VIX may bounce back from here on, it may. But why we are seeing it down today? Because we have seen VIX surging by almost 50 to 55% in last three trading sessions. Now, if typically VIX, on an average basis, peaks out around the levels of 26, 27 on an average, I'm saying, then the maximum time what we have seen, the markets have fallen not more than 10, 11%. And if I have to calculate that from the last Friday's close, that is 25,600, then probably the worst which market could hit in this panic or capitulation, I would say, would be around 23,000 levels, right? So the idea, it may I'm not saying it may go to those levels, but in the worst case scenario, you should not be falling below those levels. It's what I mean. And in that case, I would say that for this March series, if at all, the volatility has to peak out, I think the option writers in the March series would benefit out of it. Obviously, in April, May as well, the highs have gone up. So one can sell out there as well. So the typical range which I'm seeing is 23,000 to 26,000 in this highly volatile regime. And I think for that, the strategy on Nifty should be selling these two levels. Sell 23,000 put options at around 100, 105 and sell 26,000 call option in the range of say 45 to 50, wherein you pocket around 160 to 170 premium, 170 points. And that is how I think, one can trade the index for this month instead of, betting on the directional side. I think, as I've said, 25 to 26, and that should be the average VIX level. So if at all you see those levels, there would be signs, bottom formation.
Okay. Jay, thank you for joining us today and giving us those levels. Quickly, we don't have much time. You can tell us individual names as well.
Sure. So, IDFC First Bank, Solar is where I would be looking out for a shorting opportunity. It's trading around the levels of 70. So one can sell this, targeting around 60 on the downside. And on the upside, one can place a stop loss at 75. And BL is something which we are looking on the long side. So BL on the downside, one can place a stop loss below 445 and target 500 to 530 going forward.
Okay. Jaya, thank you so much for joining in this afternoon and taking us through some of those individual names as well as levels to keep an eye out on for the markets. But on that note, we're going to step into a very short break. On the other side, Manisha Gupta will join us and we'll have a conversation with Kunal Shah from Nirmal Bang Securities on the commodity front. Stay tuned in.
Welcome back. Joining us on the show now is Kunal Shah from Nirmal Bang Securities. Kunal, thank you for joining in. And metal is the favor of the day because we've seen aluminum continue to gain up quite strongly vis-a-vis other metals, clearly outperforming 5.5% of gains already in the previous week itself. And while we already were discussing about a deficit on this and China cap and Indonesia energy problems, the Middle East conflict has brought in an absolutely new push to the prices from where we trade. How are you sensing the concerns from here on and your sense on prices?
So yesterday, like you were flashing, Qatar cut 0.65 million tons of aluminum production. After Qatar, today morning, Bahrain declared a force majeure in one of its smelters. So roughly, if you sum up the total Middle Eastern aluminum capacity, that sums up around 6 million tons. So what about some other smelters who will announce that due to the precaution, they may announce temporary closure of their plant? So this fear is basically building upon, and I think right now, if you consider 6.5 million tons of capacity in Middle East, that is 10% of the global supply. And if that are under threats, then what will happen to the price of aluminum? So aluminum has already moved up. It has outperformed all metals in last 3-4 days. And aluminum is already up. Today morning, it tested $3,400. So a metal size of aluminum moving up by 10% in a matter of 4 days is a very big phenomenon. And that is what is basically driving all across the globe. Aluminum stocks have been surging because of this news.
Kunal, 3,400 is where it's trading right now, and I was reading reports from Goldman Sachs and Citi, and they are calling the aluminum prices at 3,600 in a matter of next 3 months. And if the conditions worsen way too much from here, then 4,000 is not ruled out, is what Citi perhaps has put out as well. How are you reading all of these reports, and how much concern can really build up from here?
So the problem what we are discussing right now was of the Middle East. But what about the China's smelting capacity going to go off from the market? What about China's involution policy? They are going to cut conservatively 5 to 10% of their excess capacity, which is there in the system. So on one side, the supply from the Middle East is at a stake right now. And now we have the China, which are going to cut their smelting capacity. So I think it's a clear scenario of a sharp uprise in possible uprise in aluminum prices from here, because it's a supply side is gravely concerning right now. Because of the shipping issues, the demand may hold back for a while, but I think it's a supply side related bullish trend which is likely to persist going forward.
And you said there's a ripple effect that we've seen across aluminum stocks and aluminum related industries around the world. But do you also see a ripple effect of that on other base metal prices? I mean, we've seen some support in zinc, not so much in copper. Would you say aluminum perhaps is the only one that stands tall?
Yeah, so Iran does have some copper smelting, copper production, but not a sharp upside, not a big numbers as far as zinc and other base metals are concerned. So I think the major impact which has come, that is on aluminum, and that makes complete sense right now. So they don't have a big capacity of copper and a big production of copper concentrate. So I think what is happening is perfectly making sense. Copper is not able to move up, while aluminum is continuously able to. So aluminum is outperforming all the base metals right now because of these issues.
Okay, all right. Thank you so much, Kunal, for taking us through this conversation. Thank you, Manisha, for joining in as well. We are talking about supply shortage, be it aluminum, be it oil. We're talking about gas as well. And GAIL, in its recent exchange notice, did indicate that their contracted supplies from Qatar, that has become nil since 4th March. They are unable to figure out what the future could look like. And they're also assessing the situation with respect to any supply curtailment that they'll have to do for downstream companies, the likes of Gujarat Gas, IGL, fertilizer companies which they supply to. So this is a situation which is very uncertain right now, but there could be some more cuts to gas supply that would come by according to this statement. We'll slip into a short break now. Up next, we'll get in Nigel, who will focus on Coal India, which is in focus. Stay tuned for that.
Welcome back to Halftime Report on CNBC TV 18. In the last hour or so, while the Nifty has remained where we started the show with around 24,600 level, some of the shipbuilder names, where they look at GRSC, Mascow Dock, that has picked up a bit of pace in the last 1 hour. But in our Insider segment, we're going to be putting the spotlight on Coal India. Now, the stock has been buzzing in the last couple of trading sessions. Nigel is joining us now to decode what the brokerages are saying, what's the conversation we've had with the management, and what is the reason for this up move. Nigel, over to you. Good afternoon.
Well, that's right. Brokerages have turned incrementally constructive on Coal India. Citi has maintained a neutral rating, but they've raised the target price to around 430. They've placed the stock on a 90-day upside catalyst watch. The brokerage expects elevated LNG prices to drive the gas to coal switching, which could support demand in the near term. Meanwhile, Axis Capital, they have upgraded Coal India to add from reduce. They're increasing their target price by around 10% to around 480 rupees. The brokerage has also raised their FY27 and FY28 PAT estimates by around 8 to around 11%. They note that its base case does not factor any kind of impact from the potential US-Iran conflict. However, if e-auction premiums were to rise to around 100%, the brokerage estimates that EBITDA could rise by close to around 12%, which could push the target price closer to around 540 rupees. Well, earlier today, we spoke to the manager of Coal India, and they said that international coal prices could move higher due to the geopolitical developments, though they said it's too early to draw any kind of firm conclusions that Coal India's e-auction prices will also move up. On the e-auction segment, the company said that the premiums are largely normalized at around 50%, though they've inched up both in the months of Feb as well as in March 2026. The focus, however, is on increasing volumes rather than pushing up e-auction prices, with FY27 e-auction volumes expected to be around 10 million tons higher than what they'll do in FY26. And overall, the company is targeting around a 5% volume growth in FY27. On the cost front, they say that the employee wage revision, that's due in the middle of this year, though the final quantum remains a little bit uncertain. They also highlight that it's balanced its capital allocation strategy. The dividend payout in the last few years has been 45 to around 50%, but the future payouts will also need to take into account the capex requirements, with the core capex planned per annum at around 17,000 crores over the next few years. Finally, the company reiterated its plan to unlock shareholder value, which they believe will be via listing some of their subsidiaries. They're expecting CMPDI to be listed in March 2026, while MCL and SECL could see listings by the end of this calendar year.
The e-auction prices ultimately depend on several other factors as well, not just international coal prices. So the impact on CIL's e-auction prices on account of this event will not be an automatic one or a proportional one. Because if pithead stocks are high, if thermal plants are already holding comfortable coal stocks, and there is a Indian coal market majorly administered through this notified prices, and then there is rail availability, rack movement, logistic issues. So all these things will have influence on the price signals. So the transmission from higher global LNG pricing to higher e-auction prices realization for CIL is not always one-to-one. And furthermore, at this stage, it would be premature to draw firm conclusions. This year, till January was 2,412 rupees per ton. Last year, it was 2,600 rupees per ton. So February, March, there will be some spurt and some increase in the e-auction volume as well as the pricing. So we expect around 2,500 rupees per ton. I can say that whatever we did last year, there will be an addition of at least 10 million tons.
Welcome back. Well, for the markets, it's definitely picking up some amount of pace. So we have the mid-cap index, which is up around 0.8% at this point in time. Just want to point out two stocks which stand out, which is NATCO as well as Aurobindo Pharma. Both the stocks are gaining anywhere between 4 and 2% because they have received approval in the last couple of days for an oncology drug, which is Pomalyst generic in the US markets. And both of them have shared exclusivity on this drug. It's worth around $3.3 billion in terms of market size. That's the reason you're seeing both these stocks higher in today's trading session. But overall, for the markets, we're seeing a little bit of a pullback. Let's see if it sustains going into the second half. It's a wrap on Halftime Report. Business Lunch up next.
Stocks see a small bounce after the sharp fall in the past three sessions. Metals and utilities are the big gainers. IT and FMCG drag.
The price of aluminium hits a 4-year high after gaining 5% in a week as Gulf region refiners halt production. A decline in LME inventories further fuels the rally. Stocks of Hindalco and Nalco perk up.
China tells refiners to halt fuel exports in light of the Iran war, while Qatar sends force majeure notices to customers on gas supplies. The move sparks fears of diesel, gasoline and gas shortages. The stocks react accordingly.
United States Treasury Secretary Scott Bessent tells CNBC the 15% global tariffs will start this week, and the tariff rates imposed before the Supreme Court ruling will be reimposed within 5 months, even as a U.S. federal court orders President Donald Trump's administration to begin processing refunds on tens of billions of dollars in emergency tariffs.
The rupee recovers sharply on intervention by the Reserve Bank of India in the offshore markets to trap speculators. According to dealers, the continued high price of crude continues to weigh on the currency, but the lower dollar index and a stronger equities helping sentiments.
Hello and welcome to Business Lunch, live from the CNBC TV 18 Motilal Oswal studio. I'm Arundhati Ramnan and with me is Hormaz Fatakia. Good afternoon, Hormaz. I mean, the market's holding in the green, not at the high point, but you know, everyone's watching what's happening in West Asia. That's the key trigger for the market. Nifty Bank dipped into the red a little bit, but now back in the green.
And that's the reason for the topsy-turvy moves that you're seeing on the Nifty as of now as well. And you can see that sharp intraday fall that you had on the Nifty Bank has had an impact on the index as well. And of course, now we are at the high point of the day, still 20 points away. 24,672 is the intraday high for the Nifty. But compared to how the rest of Asia has fared, India is still a bit of an underperformer, because the Kospi, after a 12% fall yesterday, was up 10% in today's session. The Nikkei was up 3 to 4% as well in Japan. So the rest of the Asian markets did fairly well in today's trade, but the Nifty, after a 1,000-point fall in the last 3 sessions, is, well, still around about 170 points higher as we speak. So we're still at the high point of the day. It's the Sensex weekly expiry as well today. So the last few minutes of the trading session can bring about some volatility as well. And of course, the Nifty Bank, as Arundhati was highlighting, is the big sectoral index that you need to watch out for, because that move is translating onto the index.
Absolutely. And if you look at some of the sectors, right, that metal pack is doing really well in trade. Hindalco, Vedanta, Tata Steel, all of them gaining between 1% and 5%. Hindalco is the top Nifty gainer as well. We've got some of those oil and gas stocks doing well, Reliance, ONGC and IOC, all of them in the green today. And on the downside, we've got that IT pack, which is the top losing index. We've got HCL Tech, TCS, Tech Mahindra, all of them down over 1% in trade. But let us begin the show with the latest updates on the West Asia conflict. The crisis in West Asia enters its 6th day. U.S. Secretary of War Pete Hegseth said that an American submarine sunk an Iranian warship in the Indian Ocean. The FADA, which sank off the coast of Sri Lanka, was returning from an Indian naval event. 30 people were rescued by Sri Lankan Coast Guard. 87 people have been killed. Meanwhile, Israeli attacks on Iran struck the country's capital, Tehran, and central province. The attacks have also damaged residential units. The Islamic Nation, meanwhile, delayed the funeral of Ayatollah Khomeini, the former supreme leader of Iran, who was killed in Israeli-US airstrikes. Reports claim his second son, Mojtaba, is alive and is likely to be his successor. In fact, let's listen in to what the Defense Secretary had to say about the naval ship that was sunk in the Indian Ocean.
The Iranian Navy rests at the bottom of the Persian Gulf. Combat ineffective, decimated, destroyed, defeated, pick your adjective. In fact, last night, we sunk their prize ship, the Soleimani. Looks like POTUS got him twice. Their Navy, not a factor. Pick your adjective, it is no more. In fact, yesterday, in the Indian Ocean, and we'll play it on the screen there, an American submarine sunk an Iranian warship that thought it was safe in international waters. Instead, it was sunk by a torpedo. Quiet death. The first sinking of an enemy ship by a torpedo since World War II. Starting last night and to be completed in a few days, in under a week, the 2 most powerful air forces in the world will have complete control of Iranian skies, uncontested airspace. I hope all the folks watching understand what uncontested airspace and complete control means. It means we will fly all day, all night, day and night, finding, fixing, and finishing the missiles and defense industrial base of the Iranian military, finding and fixing their leaders and their military leaders.
Meanwhile, the U.S. Senate has voted down a war powers resolution aimed at limiting President Donald Trump's military action, Operation Epic Fury, against Iran, with the measure failing 47 to 53 on most party lines. This means that President Trump's authority to conduct Operation Epic Fury remains intact. Speaking at the White House, Donald Trump on Wednesday said that the American campaign against Iran was performing beyond expectations, rating it about a 15 on a scale of 10 and pledging to press ahead with operations alongside Israel. Listen in.
We're doing very well on the war front, to put it mildly, I would say. Somebody said, on a scale of 10, where would you rate it? I said about a 15. And we're going to continue to do well. We have the greatest military in the world by far. And that was a tremendous threat to us for many years. 47 years they've been killing our people and killing people from all over the world. And I think we have great support. And I think if we didn't do it first, they would have done it to Israel and give us a shot if that was possible. And if we didn't terminate the worst deal, one of the worst deals ever made, the Obama nuclear deal, I call it the Obama nuclear deal, where he gave everything to Iran.
A U.S. federal court has ordered President Donald Trump's administration to begin processing refunds on tens of billions of dollars in emergency tariffs that U.S. Supreme Court said last month were unlawful. The order says that the U.S. Customs and Border Protection must recalculate final duties owed on any and all imported goods without including the tariffs that Trump imposed under law called the International Emergency Economic Powers Act. This comes as U.S. Treasury Secretary Scott Bessent says global tariffs will be raised from 10% to 15% sometime this week. Speaking to CNBC, Bessent added that tariffs will be back to their old rates within 5 months. Take a look.
The president has said that he will raise the global tariff to 15%. I believe it still stands at 10% today. Do you know when that change will be implemented?
Becky, that's likely sometime this week. And again, that's under something called Section 122, and that's a 150-day authority. And during that time, during the 150 days, we will see studies from U.S. TR on Section 301 tariffs, from Commerce on Section 232, and it's my strong belief that the tariff rates will be back to their old rate within 5 months.
We'll take a short break. More news and updates follow on the other side. Stay tuned.
Welcome back. You're still with us on Business Lunch. Shifting focus to Vodafone Idea. Sources tell CNBC TV 18 that the Department of Telecom is in the process of completing the reassessment of the company's AGR dues. Ashmit Kumar is joining in with the latest. Ashmit, what are you picking up?
Well, the latest that we're picking up from the DOT, what sources are telling us is that there is a process for reassessment of the AGR dues, which are already underway. The first leg of this process is the field offices. License fee is calculated as a part of dues that are coming in from individual circles. So the field offices of the DOT have done this initial reassessment. The license fee component of that, the reassessment has been completed as far as the field offices are concerned. This, of course, is subject to a final review and then final call being taken by the cabinet-approved DOT committee. That is yet to happen. But at least from the field officer's perspective, the reassessment for the license fee dues has been completed. We're given to understand that on accounting for various computational and arithmetic errors, the license fee dues for Vodafone Idea could be lower by as much as 60%. Now, here are the caveats which are important to bear in mind. Number one, this is not a final call taken by the DOT committee. This is the field offices that are communicating their recommendations from individual license circles back to the DOT. That's one. Number two, the process that has been completed so far is only pertaining to the license fee. Bear in mind that the total AGR demand had accounted for both the license fee as well as the SUC. And that's the third aspect to bear in mind. The SUC exercise, the spectrum user charge component of that, the reassessment for that is yet to be undertaken. The broad timeline that sources are telling us is likely the end of month, by March 31st. That's when a better picture will emerge with respect to both license fee as well as the SUC component. But for now, the field office is reporting that the license fee dues for Vodafone Idea could come down by as much as about 60%. Back to you.
Ashmit, thank you for that. And Vodafone Idea, after that initial spike, is now cooled off from those levels. They're currently back at levels of 10, below the FPO price, which was 11 rupees. Now, another factor that has contributed to the market recovery today is the recovery in the currency. And the rupee has appreciated by more than 0.5%, and it has recovered most of what it lost during yesterday's sell-off. Lata is here with a wrap of what's happening in the Forex markets.
That's right. The rupee is up about 0.65%, countering yesterday's 0.75% fall to a large extent. But it is the best performing EM currency, EM Asia currency today. And that is explained by the fact that there is very heavy Reserve Bank intervention. According to the dealers, even before the markets opened, in the offshore market, in the NDF market, the Reserve Bank had intervened. And the argument in the market, the chatter in the market is that a lot of speculators would have taken speculative long positions on the dollar versus the rupee, that is short rupee positions, which is what the Reserve Bank took out or cleaned out in early morning trades. Now, that said, there are some positives for the rupee. For instance, the dollar index, which was at 99.5 at the height of the, say 24 hours ago, has now moved down towards 99. And so there is a bit of a softening, and there is the better performance of the stock markets. Hopefully, therefore, we won't get the massive sell number that we got yesterday. So pressure on the rupee could have come down from these quarters as well. Nevertheless, the big negative remains. Crude has not moved. It remains at $84. And the Strait of Hormuz doesn't look like it's going to be opened anytime soon. Lot of uncertainty over the potential price of oil for the next quarter, for the next month, and therefore the pressure on the rupee and the Indian current account deficit continues. Just some relief for the moment.
So some relief for the moment on the rupee there. All right, Lata, many thanks for those details. But reports from Bloomberg suggest that China has asked its largest refiners to suspend exports of diesel and gasoline as transit via the Strait of Hormuz collapses, sparking fears of a supply shortage. Sonal Bhutra joins us now with all of those details. Sonal?
Thank you so much for that. Well, yes, there are reports from Bloomberg which are suggesting that China has asked a few of its biggest refineries to curb exports. This is in order to basically provide energy security to domestic markets markets. And, this was not a written directive. This has been a verbal communication which is done by National Development and Reform Commission, which is the NDRC. Now, to put things into perspective, China is world's biggest refiner. It has around 18% of world's refining capacity, which is at 18.2 billion barrels per day, which is 18% of the global capacity. It is the first one. The second one is US, which is at similar levels. China has been, however, facing an issue of overcapacity in last couple of years, and that is the reason the government went ahead and they put a cap on refining capacities as well, or processing capacity at 1 billion metric tons by 2025. Additionally, China does not export a lot of petrol and diesel. Most of it is used domestically. We do not have the exact export amount. However, it is not a big number in the global scenario. But if there are supply curbs which could happen from major countries, this would lead to higher refining margins across the globe because of supply squeeze. And that is something which will be positive for Indian refiners, the likes of Reliance Industries, HPCL, IOCL. However, crude availability is the other issue that a lot of these refiners could be facing, because 25% of crude oil transportation happens from Strait of Hormuz. So this is causing a lot of uncertainty in oil and gas markets as well. In fact, there was a Bloomberg report on MRPL as well, where they indicated that it has halted fuel exports as the West Asian conflict disrupted crude flows in West Asia. And just a while back, there was a Reuters report as well, which suggested that they've shut a few units of their refineries as well, because there's no crude available. We are still to verify that, but there is a possibility that there could be some supply constraints which could impact the margins and lead to higher prices for some of these companies and the final consumers as well.
Sonal, thank you very much for that. Most of these names seeing a bit of a rebound. Of course, MRPL, Chennai Petro, all of them did very well in yesterday's trading session as well. The other pocket that has done well, though, today has been the metal names, particularly the aluminium producers. That's because the prices in the global markets have surged. Nigel is here to take us through the latest developments and the beneficiaries as well. Nigel.
Well, that's right. Aluminium prices have hit multi-year highs on supply constraints, which has kept aluminium prices elevated. As a result of reduced gas availability, Qatalum's announced curtailment of their 650,000 smelter. Now, post that, Aluminium Bahrain, with a capacity of around 1.6 million ton capacity, has announced force majeure owing to shipment constraints. Now, both these two together contribute roughly around 2.5 to around 3% of the global aluminium supply, while the GCC countries, to put it together, they contribute around 8 to around 9% of the global aluminium supply, and most of it is gas-based smelting capacity. Keep in mind, the smelter restarts are time-consuming. They could take time once a smelter is curtailed for a while. So the restart as well will not be easy if these smelters are completely shut down for a longer period. Well, let's get to the beneficiaries then. Nalco could be a big beneficiary of higher aluminium prices. While its captive coal mines, they supply close to around 55 to 57% of its coal requirements. So they are protected from higher coal prices. Vedanta, well, they have a dual benefit. They benefit from higher oil as well as aluminium and silver prices as well. While on Hindalco, the street is optimistic now that Novelis will turn around in the coming quarters. That fire incident is behind them. Most of the hit has been taken. So the street is optimistic that Novelis turns around. And the Indian operations, as is, they benefit from higher aluminium prices. So put it all together, these stocks, well, they'll be potential beneficiaries if the supply in the globe itself is restricted, keeps aluminium prices elevated, and the Indian listed companies could gain.
All right, Nigel, many thanks for taking us through those details. But on that note, it is time for us to head into a short break. More news and updates on the other side. Stay tuned.
Welcome back. The other major event of the evening is, of course, the high-stakes World T20 semi-final, where the men in blue are gearing up to take on England later this evening at the Wankhede Stadium, just a few minutes away from where we are currently. And of course, after the sailing through the group stages, it was a bit of a bouncy start to the Super 8s for the team after that defeat to South Africa in Ahmedabad. But of course, they've bounced back. They defeated Zimbabwe and West Indies in that must-win clash at the Eden Gardens and now have booked their tickets to the semi-finals. Of course, yesterday, New Zealand coasted to victory against South Africa in the first semi-final. So the winner of today's clash goes up against New Zealand in the final on Sunday. So all eyes on Mumbai at the Wankhede Stadium later this evening. We have pleasant memories of the stadium from 2011, but not so pleasant memories from a couple of other instances as well. But let's not talk about those. We'll focus on the pleasant ones as of now. But that's the major event for the evening, and the eyes will be on the men in blue as they take center stage later this evening. But Arundhati and I take your leave on this edition of Business Lunch. We leave you with the market still 150 points higher, and we count down to the final 120 minutes of the Sensex weekly expiry. Midcap radar on the other side.
Good afternoon. Welcome to Midcap Radar live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Vivek Iyer. Midcaps, they're outperforming today, and it is after 3 days of relentless selling. There is some green on the screen. We did come off from the highs of the day, but then there was some buying from the lower levels as well. So for now, Nifty is up around 0.8% above the 24,650 mark. Midcaps still doing really well, but we'll see whether this sustains or not by the end of this trading session.
That's right. Finally, a bit of a breather and a bit of a relief rally, especially among the beaten down names that we saw in the last 3 trading sessions. Most of the names with West Asia exposure did see significant selling pressure. Today, most of them are bouncing back. But a lot lined up on the show, an important conversation as well. So let's start off with the top headlines. Indices hover near day's highest point. Nifty perched about 24,600 levels, even amidst persistent volatility. Broader markets outperform. Yesterday's outliers, the IT pack, fails to maintain momentum.
Class A truck orders skyrocket 159%, the highest since September 2022. This is the 3rd straight month of over 20% growth. Shares of Bharat Forge higher in trade.
Mazagon Dock extends gains following reports that the company has been awarded a contract worth 99,000 crore from the Indian Navy. Shares of the shipbuilder staged a steady climb.
Supply constraints push aluminium prices to multi-year highs. Gas supply concerns lead to plant closures at Qatar. Shares of Nalco, Hindalco and Vedanta perk up. All right, those are the top headlines. As we've been pointing out, it's a green-looking screen. The Nifty is up around 0.8%, closer to the day's high. Mid-caps are actually outperforming the benchmark. That index is up 1%. And so far, it has been a big laggard. So there is some relief rally which has come by. If we talk about Bank Nifty, that is the one which is underperforming, just up 0.1%. But it's the metal index, energy stocks, realty stocks, all of them, which were the beaten down names, as Vivek mentioned earlier, are the ones which have been in focus. But let's do one thing. Let's go across to Upasna. This is our special mid-cap movers segment to take us through the mid-caps that are moving around in trade. Upasna.
Well, mid-cap index is seeing some bit of a green, up nearly about 1% after the continued selling pressure that we saw in the past few trading sessions. Now, first, let us go across to the top gainers in today's trading session. First up is Blue Star. It has seen some buying, up nearly about 5%. Nalco is also up nearly about 6%. This is because the aluminium supply fears has hiked the prices as Qatar halts production. Next up is Sterlite Tech as well. It has made a fresh 52-week high in today's trading session. Granules also in focus, up nearly about 3%. Elara has initiated a buy with a target price of 775 per share. And lastly, LT Foods is one of the key volume buzzers today, and the volumes are at 32 times versus the weekly average. Now, defense stocks also continue to rally in today's trading session. BEL has made a fresh 52-week high today. Mazagon Dock also in focus, one of the key volume buzzers as well. The volumes stand at 7 times the weekly average. GRSE is the next one on our radar with the volume up 3.2% times the weekly average. Data patterns up nearly about 6%. And lastly, Cochin Shipyard up nearly about 5%. Now, let us focus on some of the key losers today. Gujarat Gas down about 5%, Coromandel down 3%, Aegis Vopak down about 6%, and Muthoot Finance has also seen some downtick of nearly about 3%, and lastly coming to Coforge down nearly about 2% in today's trading session.
Well, thank you so much, Upasna, for joining us and taking us through all of the mid-caps that are moving around in the session. A couple of other names that are hitting this day's highs even as we speak. You spoke about some of the consumer durable names like Blue Star. Have a look at Voltas as well as Crompton Consumer. Most of the companies with RAC exposure or air conditioning exposure are doing quite well. Voltas, one of the top gainers in the session today. Well, it's a good time to welcome Saumil Mehta, Head of Alternative Research, Capital Market Strategy from Mirai Asset Sharekhan, for a quick technical check on the market. Well, thank you so much, Saumil, for joining us. What do you make of the markets at the current level? Do you feel this particular bounce can be sustained?
Good afternoon to everyone. I think this bounce is going to be sustained. From here, I'll be looking for a target of around 24,800, 25,000. But we have to look at it as a bounce and not a reversal from here, because I'm looking at lower targets. The trend is down. There are lower top, lower bottom formation on monthly, quarterly charts. So the higher degree time frame is in the downtrend. So at this point of time, what we are witnessing is a bounce, and the targets are not about 25,000. So yes, a green tick right now, and a good time to play for a small trading bounce. But overall trend remains negative, and I'll be expecting a target of at least around 24,300 again, and below that 23,900 in the short to medium term outlook. But defense and pharma, these two sectors are holding on, and I think this bounce will definitely give pharma and defense a good rally.
Take that point, Saumil. So when you said there are particular sectors which are doing well, so are the stocks, particular stocks from those sectors where you're betting on?
There are two stocks which I'm betting on right now. I don't have anything in pharma because pharma has already run up a lot. I like Lupin, Sun Pharma, all of them. But I have a BDL from a defense pack. BDL has just broken out of a small consolidation on the upside. It has been consolidating for a little while now. Stop loss would be around 1260 and target would be 1380. There is one more stock which I'm betting on the buy side is Delivery. Delivery is looking good as well, taken support at 200 daily exponential moving average. A small ending diagonal pattern formed in the hourly charts has broken on the upside. Good momentum today. So the stop loss would be 410 and target would be 450.
Okay, take that point. Saumil, thank you so much for joining in today. So these are some of the technical bets. The market's doing really well today, and there are some individual stocks which are buzzing as well. Let's get in Ekta to talk about granules first, and then we'll talk about other names in the pharma space as well. Ekta.
Well, yes, Granules is in focus because Elara has written a note on Granules. They've initiated with a buy and a target price of 775. According to them, it is a vertically integrated pharmaceutical manufacturer which has capabilities across APIs, PFIs as well as finished dosages. It has a strong presence in regulated markets, and competitive positioning of the company is backed by US backward integration, cost efficiency, scale economics. Now, there is increasing contribution from low competition products, which is structurally improving the quality of business according to them, and the remediation of their regulatory issues at one of their plants is likely to be in the near term. Now, additional capacity is commissioned at the Genome Valley plant, which will also support growth according to them, and they project mid to high teen top line growth with 100 basis points in terms of EBITDA margin expansion over the next 2 odd years. So as you can see, Granules is up around 3% today.
Well, that's right, Ekta. Granules up 3%. Some regulatory relief coming in as far as one of the US subsidiaries is concerned as well. But two other pharma stocks in focus. This on the back of important approvals coming through. Ekta, you're tracking Natco as well as Aurobindo Pharma today, right? What's the kind of assessment that this particular node has?
Well, Natco as well as Aurobindo, both of them have in fact got approval for Pomalyst generic, which is basically by Celgene, which is a pharmaceutical company. Now, Natco in particular has partnered with Breckenridge Pharmaceuticals to launch this particular drug in the US markets. The US sales of Pomalyst is at around $3.2 billion in the US market. So it's a big drug. It's an oncology product. Now, interestingly, both Natco as well as Aurobindo have 180-day first to file exclusivity on it. So they will have 180-day exclusivity on it. However, it will be shared by both the companies. So the impact is that, there could be more players who could join into the fray. So there could be around 3 companies more which could possibly launch this particular drug, Teva, Hetero as well as Apotex. If in case there are only 2 other companies which would possibly, sell the drug, then they can probably even generate $250 to $300 million in terms of sales. But if there are 5 players odd, then the opportunity can possibly shrink to around $50 million at this point in time. We will also have to see what the shared exclusivity would look like for both Natco as well as Aurobindo at this point in time. But the street seems to be quite positive on it.
Take that point, Ekta. Thank you so much for explaining what's happening here. So Natco are 5% and Aurobindo too is higher by 2% in trade today. We'll slip into a short break. When we come back, we'll get you more on the markets and stock-specific action on the other side. Stay tuned. Welcome back. You're still tuned into Mid-Cap Radar. Markets have come off from the highs versus when we started the show, the Nifty was above the 24,650 mark. We've come off from those levels at the 24,620 mark, and it's courtesy Bank Nifty which has led to this fall from the highs. The Bank Nifty has turned into the red. When we started the show, it was up 0.1%, and now it's down 0.1% at the day's low as we speak. So this is what the market moves look like. We have Axis Bank, SBI, it's Tech Mahindra, ICICI Bank, all these major big heavyweights in the Nifty which are leading to the fall as we speak. But couple of stocks in the broader markets which are surging. We have the likes of LT Foods which did see a lot of weakness in last 3 trading sessions, so it's up around 12% as we speak. Mazagon Dock, as Vivek pointed out earlier, is up 9%. We do have Garden Reach Shipbuilders also, which is up 6.5%. Sterla Technologies is the other one which is up around 5.5%. But there is definitely some cooling off from the highs of the day as we speak.
That's right. The other set of stocks, yesterday that did quite well was the entire IT pack. The entire IT pack yesterday were one of the few names that actually were in the green. But today, you've seen a note coming in from Kotak. They've gone ahead and cut EPS estimates across the entire universe. They've also cut valuation multiples. Now, when you're looking at some of the names like Emphasis, when you're looking at some of the names like KPIT Tech, most of these names are near the day's lowest point. So you are seeing selling across most of the IT names, the mid-cap IT pack, especially under quite a bit of pressure today. And the fertilizer pack, something that you've been highlighting since yesterday. Look at a name like Bayer Crop, that's continued its fall today. Look at a name like Coromandel International, that particular stock too has seen quite a bit of a fall. So on the back of that, you will see a lot of worries especially emerge across most of the companies that have value chain disruption due to the conflict. But one particular sector that's doing quite well is the North America Class 8 truck orders. Names like Bharat Forge as well as RK Forging or Ramkrishna Forging today doing quite well. It's been a strong set of numbers that's come in the month of Feb. Sudarshan joins in with more details and some perspective.
So today early in the morning, we have got the February Class 8 truck orders for North America, and it's seen a huge increase if you compare both on a month-on-month basis as well as year-on-year. So on month-on-month, North America Class 8 truck orders are up 47%. On YOY, if you take a look, it's up almost 160%, and it's the best February that we have seen since September of 2022. And the order is up more than 20% YOY for third straight month. So basically, there are two major segments, on highway and vocational truck, and in the month of February both these segments have contributed very significantly, or in simple term, both the segments have seen a huge growth. So why it's positive for Bharat Forge? So Bharat Forge is one of the suppliers of forged components, and these forged components form almost 16% of its standalone revenue. So amongst all the Indian companies which has the notable exposure to North America Class 8 truck orders is Bharat Forge. That's the reason you are seeing a big uptick in the stock price.
Okay, all right, take that point. Thank you so much, Sudarshan, for joining us. But we have been talking about the impact of gas supplies which have been cut, and fertilizer is a big sector which has gas as one of the biggest raw materials. So what's happening currently? Suresh Kumar Chaudhary, Director General of Fertilizer Association of India, is joining in to fill us in with the current situation. Mr. Chaudhary, good afternoon. Thank you so much for joining in. We've been hearing from a lot of companies, be it GAIL, Petronet LNG, Gujarat Gas. Most of them either have not received enough supply from Qatar, it has gone down to zero, and Gujarat Gas has cut its supplies to industrial customers by 50%. Give us a sense of what the situation is currently when it comes to supply of gas to the fertilizer industry.
Yeah, because present situation is really a matter of concern. The government of India is keeping close track on this, and so far fertilizer sector is concerned. Till now, everything is going on well, and present situation, if it continues for a long time, then it will be certainly a matter of concern for us. Countries which are affecting by this tension, India import large quantity of finished products, intermediates, and also gases from this country. And also crude oil prices which are going up, they are all concerned. But present day situation is not very bad, I tell you.
There is enough gas supply to the sector. It is equal to what you were getting before the conflict as well?
Yeah, at present, almost same.
Okay. Mr. Chaudhary, so what you're saying is that at this point of time, there has been no disruption in terms of the supply. But what we want to understand is, what is the price at which you're getting this particular gas? And the other thing we want to understand is, going forward, in case there is an extension as far as this particular conflict is concerned, are you worried that there could be disruptions?
Under fertilizer subsidy regime, supply disruption of prices increases would always lead to higher subsidy burden and increased production, import costs, and working capital stress on fertilizer sector. It is true, but at present, things are as usual going. So present immediately, I don't see any crisis there, but certainly government is taking appropriate step, and also fertilizer sector is closely in contact with the government, and some contingency plans and everything, they are in place, and things are moving as per the plans at present.
Okay, we'll just come to you in a bit, Mr. Chaudhary. Important flashes at the bottom of your screen. There's a sharp fall in US futures, both Dow and NASDAQ. Dow is down around 300 points. NASDAQ is down around 130 points. We are seeing a similar action in our own markets. Of course, it's not a sharp fall, but we have come off from the highs of the day. And that is something that we'll be tracking closely, because we have come off after that 3 days of cuts. So we did see some recovery, but that is getting sold into. Mr. Chaudhary, coming back to you, you did indicate that supplies have been usual, but my colleague asked whether these supplies are coming in at a higher price, and also wanted to check the urea prices, because urea is one of the fertilizers that has the maximum input as gas, right? Are urea prices also increasing?
Presently, there is not much fluctuation in the prices, but if this crisis continues for a long time, then certainly, like other sectors, these are going to affect the fertilizer sector, also more so the urea sector. But present situation is just like a normal situation, and government is going immediate some contingency steps that will certainly support the fertilizer sector. As such, the fertilizer supply in the country and fertilizer stocks, they are presently, if you look at, and for the coming season, Kharif season, I think we are very well placed. So there is no immediate concerns that will really harm the agriculture sector. So far, Kharif is concerned, probably compared to other countries, our condition is stable.
Okay, so Mr. Chaudhary, you're saying that this time around there has not been a sharp spike as far as urea prices are concerned, contrary to what a few sell-side analysts have been telling us, especially in terms of the kind of ground checks that they have been doing. What we also want to understand from you this time around is that the Russia-Ukraine war, you actually saw a bit of an increase or an expansion in spread, and this was on account of the change in prices or the volatility in prices due to nitrogen as well as phosphate inputs. In this particular scenario, do you feel fertilizer companies can enjoy the same kind of spread expansion benefit?
No, fertilizer company will certainly experience some stress. But then, since this sector is closely working with the government support, so government is also there to take appropriate step, changes in policies, and also changes in some kind of incentives which are being given, and also in the subsidy regime, what best possible scenario could emerge. So government is also aware of this, and fertilizer sector is also aware of this as a association of fertilizer, because FAI doesn't produce anything, but as an association, certainly our role is to just monitor the situation very closely and take appropriate steps so that with the appropriate policies, we can really counter the situation and come up with best possible solution.
Take that point, Mr. Chaudhary. Thank you so much for joining in today with your thoughts and giving us a sense of what the ground situation is looking like. So that's the word coming in from Fertilizer Association of India. No, there is uninterrupted gas supply for now to the fertilizer sector. However, if the conflict continues, the situation could be dire and there could be some impact on this particular sector as well. Slip into a short break. We'll get you more on the markets and stock-specific action on the other side.
Well, welcome back to Mid-Cap Radar. Well, the fall that we've seen in the market in the last 20 minutes continues, and the Nifty Bank continues to slide. Most of the heavyweights on the Nifty Bank, ICICI Bank, Axis Bank and SBI, all at the day's lowest points. One particular stock from the broad end of the market that's seen a very sharp fall all of a sudden is Netweb Technologies. That particular stock down almost 7% near the day's lowest point. But with that, it's all the time we have on this edition of Mid-Cap Radar. MF Corner when we return.
Hello and welcome to MF Corner. I'm Sonal Putra. With me as always is Vinny Motiwala. And in today's Mutual Fund Corner, we'll focus on investing in mutual funds for the long term. How do you stay invested, especially in a volatile environment? To understand the ideal holding period, common mistakes one should avoid and more, we have with us Kinjal Desai, who's the fund manager at Nippon India Mutual Fund, joining us now. Hey, Vinny.
Hi Sonal, good afternoon, and Kinjal, good afternoon to you as well. So today obviously Sonal explained the topic that we're discussing as well. Let's start by discussing the basics. For investors with a 10 to 15 year horizon, how should they think about equity allocation in today's valuation environment? What should they be looking at? Kinjal.
So the way that I would look at it is that from the last 20 odd months, so we've seen that the equity markets have largely moved sideways. With earnings growth in several sectors have come to about 8 to 10%. Some of that excess valuation does seem to be gradually getting corrected. What I would kind of see is that long-term investors should use the next 6 to 12 odd months to build or increase their equity allocations. And India is still in very early stages of its growth cycle, with several of the emerging sectors are yet to scale up. There are multiple opportunities which will get created for investors who have, that kind of a longer time horizon thought process.
Okay. Kinjal, we are speaking to you at a time when there's so much happening, and at these times, investors look out for sane voices as to what to do when we are seeing these sharper drawdowns and there's so much uncertainty. So how do you balance staying invested for the long term? There is tactical rebalancing that we are looking at as well. We are looking at markets seeing lower lows every day. So what would your advice be to investors at this point in time?
So while definitely there is a lot of external noise which is taking place, no doubts about it. But what normally ends up happening is that investors, the problems arise when investors are trying to chase for the fear of missing out. In these times, having a very disciplined asset allocation approach, especially with periodic rebalancing every 1 to 2 years, depends on the valuation. Depending on how the valuations are panning out, definitely help manage this kind of risks that are taking place. Just as an example, we have seen, over the last 2-3 years, the kind of rally in precious metals. So that would have really supported a portfolio which had some, asset allocation on those lines, and that kind of helps you balance, whatever rough weather that comes along the way.
Kinjal, over a period of time, or what is the data indicating in terms of the idle holding period, that actually truly benefits from equity mutual funds in India? Is there anything on those sorts of a line and data point?
So the way we think about this is that India has a very strong secular growth story, and we are a relatively very young structure of economy. So having a 10 to 20 year kind of investment horizon works best for us. There will definitely be cycles along the ways, but broadly one can kind of think that returns over time will broadly follow the underlying economic opportunities and the growth potential of the country. Our per capita still is just at around $3,000, and we are in very early stages. So there is a definitely much longer runway for growth.
Okay, there is runway for growth. Of course, we're seeing these short-term blips and just trying to understand the secular story when it comes to domestic investing as well. But when we talk about long-term portfolios, how important is fund selection versus asset allocation in driving returns? Because this is something which can get very tricky at times.
So asset allocation is absolutely paramount to achieve one's goals. There is no two ways about that. However, fund selection, especially when you have strong fund manager track records, can definitely help increase the probability of better outcomes of wealth creation over a period of time. But at no point can asset allocation be the second in line in your thought process.
Asset allocation is key. It cannot be second in line to your thought process. That's a very key important takeaway there, Kinjal. Kinjal, to SIP investors maybe who, there are so many ups and downs in the market. So who actually survive through those downturns, do they actually meaningfully outperform? Or those who pause, is there something of a difference in terms of the returns there?
So SIPs are actually created for the downturns, right? You technically get more units per rupee invested during these times, which definitely help the better long-term compounding effect, on the portfolio. It's like in any other activity, you get better quality at better valuations during these times. So staying invested during the downturn, especially in SIPs, and if possible to top up during that time, really helps over a period of time.
Okay, and that's where the behavioral investing part of your investment thesis works, right? When you are patient and calm during these downturns. So say over a 15 to 20 year period, what are the biggest behavioral mistakes that erode compounding, and how should investors avoid them, Kinjal?
So 2-3 things come to mind out here. First is most people tend to fear volatility, but actually that can be your friend when it comes to improving these long-term returns. So that's it kind of ties in with the SIP thing that we talked about before. Another point which comes to mind is that being extremely disciplined in your investment approach, that one can define it either through time horizon or goal-based investing, whatever helps you. But this particular discipline does tend to help you remain invested through the cycles. Very often we see actually investors, they abandon asset allocation, right? Because of the fear of missing out. And that is when it is needed the most. And that does tend to hurt long-term compounding as well. And lastly is every investor needs to have a very clear individual financial plan, as it at the end of the day, definitely it depends on your risk appetite and your individual liquidity needs and how you are planning out, your future. So I think these are the 3-4 points which, does tend to kind of erode the compounding.
Okay. Kinjal, key points made over there, but thank you so much for joining us on the show this afternoon and explaining us in terms of details of investing in mutual funds for the long term and how do you actually stay invested, especially when the environment is so volatile. So thanks, Kinjal, for joining us. On that note, we're actually going to slip into a very short break. We'll come back with more on MF Corner. Stay tuned in. Welcome back. You're still tuned into MF Corner. Well, with International Women's Day around the corner, we are talking money inequality. The Lakshmi report shows female labour force participation at 41.7% versus 78.8% for men, with over 60% women working in the informal sector. It also highlights how financial products designed around uninterrupted male income often disadvantage women facing career breaks or other responsibilities. What are some of the ideas of the authors and what can be done to change this particular data? And how are women investing now to explore why the gender gap in wealth accumulation persists and what can be done about it? We are now joined by Preeti Rathi Gupta, founder of Lakshmi. Preeti, good afternoon. Always a pleasure speaking with you. Good to have you on the show with us. Very interesting report. So let's talk about it. The report says over 89% of Indian women now have bank accounts, yet financial security hasn't improved proportionately. Where do you think exactly is the drop-off happening between access and wealth accumulation?
Thank you, Sonal. Always a pleasure talking to you, and thank you for having me here. I think this report is an extensive coverage on what is happening between women and wealth, right? What are the challenges, what are the barriers, and what are the opportunities? As we can see, India has solved for financial access for women, right? The next challenge is financial ownership. Women are, if you look at women, they're highly visible at entry points of finance, whether it's bank accounts, etc., but largely absent at its end points. So financial inclusion has happened, financial power hasn't. When we talk about bank accounts, right, what we are saying is that we've given women access. Now, access, is that really equal to ownership? Probably not. And we know those numbers are amazing in terms of access, that 89% women have bank accounts. In fact, 56% of the Jan Dhan accounts opened were by women, which means that almost 29 crore women are financially included, right? But what are these accounts used for? These are essentially used for government transfers, withdrawals, or cash storage. Not necessarily saving, investing, or wealth building. We've created, we have this score in the report, which is called the Women's Financial Prosperity Index score, where women score a 28.1% out of 100. Now, this tells us that while access has expanded, but outcomes have still not kept pace. This score mentions or measures women's participation across, access, inclusion, the agency they have, as well as the outcome. So, net, what I'm saying is that access was obviously the door, but we never built the staircase or the pathway once that door opens.
Absolutely. So building that path is going to be key now, right? Because 28.1% is a very low score that comes in. Preeti, obviously you mentioned in the report that the labor force, women labor force participation was at 41.7%, men at 78.8%. But this gap, or building that path that you're talking about, right? Mainly, do you think it was that jobs were not enough, and now because we are getting more jobs, or if this number increases, the problem for that and the path would also be built, or it's more of a finance related or literacy kind of a problem now?
I think solving the jobs problem, which is also very critical, and we've done a fairly good job over the last few years, but without fixing the financial system, we'll still leave women behind, right? Both need to move simultaneously. I mean, even if you look at just the jobs, today you have 53 women participate in the workforce for every 100 men. And interestingly, Sonal, in the urban India, that metric is still very poor. There are about 28 women only for every 100 men, right? So not enough women are earning. Now that if you couple with the gender pay gap, large percentage of women still in the informal economy, earning in cash, different patterns of savings and spending for women only compound this problem. Let's not forget that we are a savings economy. Women in every household, whether they are working or not working, have their own savings. Why are these savings not being channelized into growth or investment products? I think is the big question to solve for.
And during demonetization, we realized women are better savers than men for sure. We could all see it in our mothers, big almiras, etc. But having said that, women still earn 73 for every 100 earned by men, according to your report. How much of the 40% retirement wealth gap is purely income driven versus structurally driven? Do you think there are gaps to that as well?
Well, the income gap definitely plays a very big role, right? But if the gap was purely income driven, then we would say then women would typically accumulate only 73% of men's retirement wealth, right? But they accumulate only 60%. Now, in our report, we've actually done a case study where we talk about, a man and a woman, same age, same job, but yet by the time they retire, a woman loses the opportunity of retiring with almost 7.5 crores less than a man, right? Which is 40% lesser than what a man would retire with. Now, what are the reasons? I think look at it from, just the investment pattern as well, right? Today, we put a lot of our savings into maybe, safe haven products like gold. So today you have 32% investments done by women versus 25% by men in gold. Cash and chit funds, today you have 18.7% women investing in cash and chit funds versus 9.4%. So a lot of these, metrics matter on what women are doing with the savings. One, they're earning less. What are they actually doing with the savings? And when you look at those numbers, you have just, 8.6% women who are investing in mutual fund versus 22% men, right? average age of a woman, for example, she starts investing at the age of 35, whereas a man starts investing at 30. Ticket sizes are almost half than that of a man. Today, look at numbers. We know on our channels that 25% of equity, only 25% of equity of mutual fund investors are women, right? So we retire with almost 40% less wealth than men, one, owing to the earnings. But second, also, what are we doing with our savings? We're making suboptimal choices with that. And India, by the way, actually ranks even lower. World over, if you look at that that number, that percentage, women today retire less, 26 or 27% less than that retirement wealth of men. Versus in India, it's still a huge gap, 40% less.
Preeti, this is Vinny this side as well. So in terms for women, now, do you think women are over-indexed, maybe more towards gold, fixed deposits, and under-indexed on equity side or pensions? And do you think this is a risk appetite issue or maybe a lack in terms of trust that comes in for formal markets? What is your thought on this? What is the reading that one should look at?
So, I mean, I'm going to lay out something very important here. I think women are great investors. Right? We've always heard the slogan from Warren Buffett saying, invest like a woman. I think, but while they make for great investors, the journey to making these investments in capital markets or using efficient investment tools is still not very intuitive for us. I mean, our financial systems are actually designed for linear male careers, whereas as women, we live cyclical financial lives. Whether it is career breaks, whether it is, caregiving breaks, or it is just lower compounding because of the investment tools that we choose, the hesitation towards investment, and of course, retirement vulnerability, right? So it is both, Vinny, a trust as well, a trust deficit, as well as I think it's a rational response to our volatile income earning conditions and patterns, right? Which is why our over-reliance on gold, fixed deposits, or informal schemes, which is essentially displaying a cautious approach to saving. Versus really looking at growth, right? Now, I think what I've heard always is, in the financial services, people misinterpret this as low ambition or risk averse, right? But it is actually a rational behavior shaped by our need for safety and liquidity. So I think it's a mix of both of that, and it's more about now designing financial products that align with women's financial realities, right? Where pauses in contributions, say I take a career break and my pause in an SIP is not penalized, right? Where entry barriers are lowered, which we've done a great job of, but I think there's still a lot more to go. So I think what we've even in this report covered is where is our money going? It's going more towards household expenditure, care, responsibility, and supporting families, which doesn't leave too much space for long-term wealth creation. So yeah, a mix of both of these, right?
Okay, as you know, you actually answered my next question because I wanted to ask whether financial products are limited or they have their own limitations when it comes to women investing in them as well. But something that you would like to leave us with, we have around 2 minutes on the show left, Preeti. I wanted to talk a lot more. It's such an interesting report, but there is retirement wealth, which is wider. Why do you think India's disparity is structurally deeper despite recent inclusion gains? Is this largely due to cultural norms? Do you think there's a policy design in itself?
I think it is, once again, there's a lot that policy design can solve for, but I think the issues, the barriers are essentially our cultural norms, right? Where meaningful participation still remains constrained or financial authority is not there. Either the woman is not earning. If she's earning, she doesn't have the financial authority, right? There's the economic reality. Like I said, we have cyclical financial lives. We take care, career breaks, caregiving gaps, etc. There is also financial and digital literacy, right? Only 21% in our of women in our country are financially literate. And we've seen that once that literacy comes in, women's participation in investment products increases by 15 to 25%, right? More than the classroom-based literacy. Then there's things like comfort, familiarity, and most important is fragmented journeys, right? Because here we are expected to do payments somewhere, save, bank somewhere, invest somewhere, and borrow somewhere, right? Now, that fragmented journey is very difficult for women to do, and which is why I think there's a lot that we've done build on the platform, and that shows those positive results, right? We see that 59% women who invested within the first month. They doubled their AUM in the first 1.5 months. Policy design products design must address this because we're looking at a 40 trillion rupees opportunity, right, in the next decade. And when women invest, I think households become stable, its capital markets deepen, and of course, your economies become more resilient. So I think women building wealth is actually not just inclusion, it's transformation, and which is why even policy as well as system design both need to come together and bridge this gap.
Okay, Preeti, point taken there, but thank you so much for joining us on the show this afternoon, talking to us about women in investing as well. So thank you so much for joining in. And with that, we're absolutely out of time on this edition of Mutual Fund Corner on CNBC TV 18. Thank you so much for tuning in. We have Closing Bell up next to take you to the last hour of trade.
Beyond market headlines to understand the reasons for the day's movers and shakers and get your portfolio ready for tomorrow. Beaming live from the CNBC TV 18 Motilal Oswal studio.
of the Nifty implied open that is indicating a positive start or gap up start today for the Indian markets.
Strong belief that the tariff rates will be back to their old rate within 5 months.
Both Jefferies as well as Motilal Oswal today have come out with reports opposed the fall that the stock has seen. Both of them have gone ahead and cut their target prices.
The Nifty opens above 24,600.
The stock is high on the back of strong North America Class 8 truck order.
At this stage, it would be premature to draw firm conclusions.
Yes, the domestic coal price increase would be at a lag and at a much lower rate than what the international price is.
But probably 3,600 is where you've got to say a line in the sand.
The rupee is up about 0.65%, countering yesterday's 0.75% fall.
Aluminium prices have moved to the highest levels that you've seen, in the last few trading sessions.
If the things are not getting resolved soon, I assume that a similar action will be taken not only by India but most of the countries.
I think this could be, positive for some of our Indian refined products exporters.
The peak of the fear has already been priced in.
There is a process for reassessment of the AGR dues.
Mid caps, they're outperforming today, and it is after 3 days of relentless selling, there is some green on the screen.
Well, that was the day so far. Hello and welcome to Closing Bell. We are coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Nigel. With me, as always, is Rima, and the markets are up close to under 100 points. We've come off a little bit in the last 1 hour or so, but we are still holding on to the gain of around 110 points or thereabouts. The Nifty Bank, well, that's virtually unmoved. And even the IT index actually is under pressure. So the heavy lifting actually has been done by Reliance Industries today, Rima.
Hi, but finally, right, after 3 days of losses when the Nifty was down 1,000 points, we are seeing a bit of a relief rally. And if you look at that intraday chart, the Nifty's been gyrating in a 100-point band. It's been 24,550 approximately on the way down to 24,650 on the way up. There you have it. There have been multiple times we've gone up, tested the level of 24,670 to be precise, and come down to levels of 24,550. And once again, in the last 10 minutes, after coming towards the lower end of that trading band, markets are trying to climb higher. 24,600 as we speak, up nearly about 0.5%. The Sensex has gained close to about 300 odd points. The mid-cap index has been outperforming since morning, and that's got a gain of close to about 0.4%. As Nigel pointed out, it's Reliance Industries, which is providing that leadership. That stock is up close to about 2.5%. China has taken a major decision ordering refiners to halt exports of diesel and gasoline, as a result of which the expectation is Singapore refining margins will go up, and that explains the powerful rally that you can see in Reliance Industries. Banks have been a bit subdued, and you can see softness in names like an ICICI Bank that's down nearly 2%, SBI has lost 1%, Axis Bank under pressure as well, and IT names led by TCS are a bit on the back foot. But Yeah,
I mean, we have some news coming in on Force Motors. SEBI has sought some details with regard to insiders, designated persons. For earnings, actually, that was in September 2024. So that's why the stock has come off a little bit. For the time being, this information that's asked, there's no allegation as of now. So we'll have to keep an eye out on that. But SEBI has asked them to furnish some details, and they're saying that they're going ahead and they're doing that. So just thought we'll highlight that. Highlighting it because the stock was up 4%. Now it's slipped from the high point of the day.
Sharp knee-jerk reaction coming through on Force Motors. A couple of other names, Coal India, Hindalco, it's fresh highs for these PSU names. And the entire one basket, which is showing considerable up move today, are the defense names. So whether it's BEL, HAL, Garden Reach Shipbuilders, across the board, you are seeing a big up move in the defense names. The index sector itself is up nearly about 2.5%. But let's also tell you what we've lined up on Closing Bell today as we unpack the final hour of trade. The Nifty hovers around 24,600. Broader markets come off from the highs but continue to outperform the larger peers. IT stocks are weak in trade. Metals extend gains. Brokerages turn upbeat on Coal India amid expectations of rising coal prices amid ongoing geopolitical issues. We'll decode the triggers. Masgao Dock Shipbuilders holds gains in anticipation of a large submarine order from the Indian Navy.
How do you position yourself in the final hour of trade? Midesh Thakkar is back with us. Midesh, the markets are holding with a gain of around 100 points, but it's been far from convincing actually today. A day when you see a gap up of around 100 points, you'll want to build on to those gains. And I think both the top batsmen, both the Nifty Bank as well as the Nifty IT index, they've been off form. So there's only so much that can happen in terms of a gain. Your view, do you think this is just a bounce before we go lower? If yes, would you look to short into this bounce? And fill us in with a couple of your trading ideas.
Good afternoon, Nigel. So I think, the indices which you picked up, which is the Nifty Bank, I think I'm actually now watching the Nifty Bank very closely. If you recall the last couple of weeks when the market was declining, the Nifty Bank was continuously a pillar of strength, making fresh highs or even, holding well in a market which was negative. But today it is now trading at a very key weekly, which is a medium-term support level, which is around 58,480 to about 58,385. I think that band is a very important band. And today I think we got a low of 58,393. In case you see the Nifty Bank break below these levels, then I think the Nifty Bank would have a correction of its own, which obviously in turn will affect the Nifty. I would, then pencil in a test of around 57,750, 800 to begin with, and maybe even lower levels. So I think the next idea, if I want to short, I would want to see the Nifty Bank either break below the support level, or in case the Nifty Bank doesn't do that, then I think there'll be one more bounce back before the decline happens. For the time being, I have a sell call on SBI cards with a stop at 736. For targets of 695, and a sell on Pidilite with a stop at 1451 for targets of 1385.
Okay, those are some trading ideas for the last hour. Nalco, Hindalco, big surge in the stock prices, and aluminium prices, the base metal prices, have hit a 4-year high?
Well, that's right. Aluminium prices have hit multi-year highs on supply constraints, which has kept the prices elevated. As a result of reduced gas availability, Quartalum's announced the curtailment of its 650,000 ton smelter. Now, post that, you had Aluminium Bahrain with a capacity of roughly around 1.6 million tons capacity. They've announced a forced merger owing to the shipment constraint. Now, both these two, if you put it together, they constitute around 2.5 to around 3% of the global aluminium supply. While GCC countries, you put them together, they contribute close to 8 to around 9% to the global aluminium supply. And most of the supply in GCC regions is gas-based smelting capacity. You also should keep in mind that smelter restarts are actually time-consuming, and they could take time once a smelter is curtailed for a while. So it's not just a shutdown. Restarting these smelters as well could be a bit of an issue. So that's why, in fact, the street believes that maybe supply is going to be restrained. And as it is, the aluminium market was expected to be in a bit of a deficit. Now it goes into a greater deficit. And if the greater deficit is there, then aluminium prices get some kind of tailwind and get a bit of a lift. Let's analyze companies. Nalco, they'll be a big beneficiary because they have the benefit of high aluminium prices. While its captive coal mines, they supply close to 57% of the coal requirements. So they are protected from higher coal prices. Benefit of higher selling price and input cost more or less kept under wraps is good news. Vedanta, they benefit from their exposure to oil, their exposure to aluminium, as well as their exposure to silver. While Hindalco, the street is getting a little bit optimistic. Novelis could turn around in the coming quarters. Indian operations as is will benefit from aluminium prices. So put all of that together. Well, that's the reason why all these stocks are buzzing around. Well, we have gotten some news coming in, on CNN News 18, and I'm just reading it. Actually, I sent it to my ticker team as well to confirm it. What the reports are suggesting is that Iran has made a conditional offer to the United States. They're ready to abandon the nuclear program as of now. And let's get so the statements coming in from the foreign minister. They're ready to make a conditional offer to the United States, ready to abandon the nuclear. So that'll be heartening if it's actually correct, and if it's actually factual. We've been getting a lot of news reports, but just checking with our ticker team as well. For the time being, we're referring to what CNN News 18 is putting out. Hopefully this happens, Rima, for the good of humanity, for the good of the markets, good of economic activity as well across the globe. You want this war to end.
Indeed. It looks like maybe there is some hope that there will be a diplomatic development between the two sides, because up until, and I remember even yesterday, right, there was this New York Times article which again suggested that some Iranian officials had reached out directly to the CIA, and there was this conditional offer attached to it. They had laid out 3 conditions, basis which perhaps there was willingness to talk about it and end the war. But after that, Iran officials, there was, I think Tehsin had reported that, completely, baseless, not accurate. and just psychological warfare. Those were the words used by the Iranian officials, quoting two sources when they dismissed the fact that there were overtures made by the Iranian officials to the US government. But let's see, this is what CNN News 18 reports, and this is coming from the Iranian Deputy Foreign Minister. We'll have to hope that maybe there is a willingness from both sides to talk and end the war, which has taken so many lives, resulted in so much destruction. So let's, fingers crossed to wait to see how this plays out. They've been
and I think I'm not sure whether we can get the Dow Jones futures up for you on the screen. I recall our ticker team putting out just, I think, an hour or so ago that it was down 325 points. The last I checked, it's down around 25 points. So there's a big recovery in the Dow futures as well, Dow Jones futures. Volume will be questionable out there, but from minus 300, it's almost moved into the green. So hopefully we're bracing for a better US trading session as well, Rima. Okay, but let's get in Deven Choksi, MD at DR Choksi Finserv, who joins us on the show. Hi, Deven. Good afternoon. Good to see you. When the aluminium stocks continue to remain in focus, they're doing very well. We discussed about it 2 days ago. What would you say? Now there is talk about this war ending as well. In that case, then a lot of the supply constraint could actually get leveled out. Would you take profits on some of these names?
And Michael, good afternoon. Well, I think it's a good point to, book some profit if you are a trader, for sure. However, I think if you are looking at the business and the prospects there, probably the long-term tailwind is already in place for white metals as we see it. And there may be some price corrections to the current rally that is not ruled out. But overall, the fundamentals of the companies are improving and improving on 2 counts. On one side, the prices of metal remaining steady and firmer. On the other side, Indian metal becomes, I think, more attractive, both ferrous as well as non-ferrous, largely because of the depreciated currency. The cost involved, I think, for buying Indian metal would be relatively cheaper compared to, I think, buying the metal from overseas at a higher depreciated currency. And last but not the least, I think most of the metal manufacturers are actually, I think, relying on significant percentage of the renewable powers. And that's where probably, I think, we're likely to see next 3 to 5 years, profit margin also remaining improving in this kind of a situation. So we believe that overall environment is becoming more conducive for metal as a whole, with demand scenario and profit scenario both showing relative amount of growth prospects going forward.
Okay, all right. We're not done with discussing, these stocks, Deven. Let's talk about Coal India. But first, let me just put out a piece. Brokerages, they are turning incrementally positive on Coal India, getting a little bit constructive out there. Citi, they have maintained a neutral rating, but they've raised their target price to 430 rupees. And they've placed the stock on a 90-day upside catalyst watch. The brokerage expects the elevated LNG prices to drive gas to coal switching. That in turn could support demand in the near term. Meanwhile, as Axis Capital, they've gone ahead, they've upgraded Coal India to add from reduce. They have increased the target price by around 10% to around 480 rupees. They have also raised their PAT estimates for the next 2 fiscals by around 8 to around 11%. Axis notes that its base case does not factor in the potential, any impact from the potential US-Iran conflict. However, they are pointing out if e-auction premiums were to rise to around 100%, they're working with around 60% or thereabouts. The brokerage estimates that the EBITDA could go up by around 12%. That in turn will push up the target price to around 540 rupees. Now, speaking of CNBC TV 18, the Coal India management said that international coal prices could move higher due to the geopolitical developments, though they said it's too early to conclude that Coal India's e-auction prices will move up. They also clarified on the e-auction segment. They said that the premiums have largely normalized around the 50%, though they've inched up both in February as well as in March 2026. The focus, however, they're saying, is increasing e-auction volumes rather than pushing up prices. With FY27, they're saying that the e-auction volumes could be around 10 million tons higher than what they do in FY26. This is only on the e-auction volumes. Overall, the company is targeting around a 5% volume growth, which will be a relief after the last few years. On the cost fronts, they say that the employee wage revision, that's due in July 2026, though the final quantum remains a little bit uncertain. Coal India also highlighted, when they spoke to us, that they are balancing their capital allocation strategy. Dividend payout has been around 45 to around 50% for the last few years, but the future payouts will factor in the capex requirement, which they are planning at around 17,000 crores per annum over the next few years. Finally, the company has reiterated its plans. They believe they are unlocking value for shareholders by listing some of their subsidiaries. And they're saying CMPDI will be listed this month, MCL and SECL will get listed during the course of the calendar year. But all that together, Coal India is higher in today's trading session. Devin, what do you make of this one? Volume growth has been, actually there's been degrowth. Pricing has been weak. Power demand has been weak. But the street believes that there is a story from here on. Do you believe?
Yeah, Nigel, I think you're counted on each and every point. And yes, I think that's true. The larger amount of volume is happening in Coal India on a consistent basis year after year. So that definitely gives you the confidence that the incrementally higher volume year after year is distinctly, I think, achievable and possible for this company. Now, today the situation is the coal prices are firming up because of the global conditions right now. Now, if this particular prices remain or it sustains at the current level or maybe I think go a little firmer, then certainly it makes a case for adding the stock into the portfolio, maybe for a momentum reason as well. As of now, downside risk we don't see, but how much further upside you want to see in a given turbulent situation, unable to make any comment. So if you are trading, then I think you'll have to trade with a strict amount of discipline as I see it. But investors, maybe I think the corrected price, always welcome to add into the portfolio.
There's been a sharp surge in the last 10 minutes following that news flow. The Nifty's crossed 24,700. It's now 1 percentage point gain. The Nifty Bank, which was flat with a negative bias, is now up 155 points. The mid-cap index is raised to a 1.25 percentage point up move. And the advanced decline ratio also fairly supportive. 2 stocks is to 1. But we'll have to wait by to see if there are indeed diplomatic talks and if it leads to a successful negotiation and a closure of the hostilities between the two nations. But for now, the street seems to be reacting to that headline, which is coming through, reported by CNN News 18, that Iran has made a conditional offer to the US ready to abandon the nuclear program. But more details or contours of that is not known as of now. Devin, L&T is also coming for a big rebound, 4.25% up on L&T after getting smashed in the last 3 days. We had many people coming out and say on the channel that it's an attractive proposition. This is one of those few companies which over the medium term is going to see a double-digit earnings growth. So the correction is an attractive entry point. Would you concur?
Yes, absolutely, Rima. I guess I think the visibility of next 3.5 to 4 years definitely is seen in the revenue. Now, taking a view that the company might get impacted on the margin, I think it's only a view at this point of time. I would not concur with that particular view, which is basically talked about by many analysts. But at the same time, I think more importantly, if we understand the situation correctly, I think this war-related activity cannot last forever. And hereafter, I think the rebuilding of the entire territory regions are going to take place. Should that be the situation, I think there is no end to it. Probably likes of L&T would have relatively much better times, particularly because of their presence also in the Middle East region. I find that I think they are in a better prospects, I think, if this war-related situation comes down. So keep the finger crossed, but yes, I think it is available at a good corrected price. So could be, I think, an opportunity also in the downside is definitely, I think, not seen as much at this point of time.
Okay, all right. Well, let's focus on Mazagon Dock. That stock is surging in trade on anticipation of a large order. Ria joins us to break us through what's the news piece. Ria?
Well, yes, Mazagon Dock is surging in today's trade and they have a lot of large orders on the anvil. The first one is the P75I submarine order, which is estimated to be, the order value is estimated to be about rupees 1 lakh crores, and this was earlier 70,000 crores. So now the order value has been increased as per some reports. Now the company has said that the negotiations for P75 are already over, and they do expect this order to come through by the end of FY26. And once this order comes through, the order book for the company will also cross 1 lakh crores once the order comes through. Now, apart from this, they also have an order for the additional 3 P75 Scorpion submarines, which is also expected to come soon. The company has said that the Navy is currently in the process of finalizing the deal, and they expect to close this by the end of FY26 or by early FY27 as well. And this is as per comments made by the company at the end of Q2 of FY26. Now, there are also some other potential orders that the company is bidding for. The first one is the landing platform dock, which is in the range of 35 to 40,000 crores. crores. The mine countermeasure vessels, which is expected to be about 40 to 45,000 crores, and the P-17 Bravo ships, which will be in the range of 50 to 60,000 crores. The current order book, remember, of the company is just about rupees 24,000 crores. So once all of these new orders come in, the order book will inflate quite a bit for them. Apart from this, they had also given guidance at the end of quarter 2 of FY26. The revenue at the end of this year is expected to close at rupees 12,500 crores for them, which is a 9% year-on-year growth. And they will also see about 5% revenue growth in FY27 as well. In terms of margins, the margins will remain at around 15% for both FY26 and 27. And the company has also highlighted that they do not expect any major reversals or further increase in provisions going ahead.
Okay, all right. Thanks a lot for that, Ria. Well, Deven, coming across to ask you about Mazagon. But, by the way, just pull up a few stocks. If in case things are de-escalating, then those that got hit will actually see some relief. Case in point being an Interglobe Aviation. The stock was down close to 3%. It's seen a big recovery from the day's low. So hope that travel goes back to normal, one stock. The other one is Asian Paints. Input costs would go up. That would hurt their margins. So paint stocks as well are seeing a bit of a relief rally. Adani Ports, the fear that some of their ports would get impacted. If things are going to stabilize, then you'll see a bit of a recovery out there. And the OMCs, remember, if crude oil prices move up, the beneficiaries are the producers. The ones that get hurt will be the OMCs. So you have, not ONGC has moved down because crude oil prices could potentially cool off. IOC, BPCL as well as HPCL, all three of them should come up here on the screen. They as well as seeing a bit of recovery. The producers pulling back, the OMCs seeing a bit of a spike. Deven, what's your view on Mazagon Dock? You heard what Ria had to say?
Yeah, I think probably one of the best deals, if this is through, could possibly give the larger amount of visibility for next few years as far as the company's order book is concerned. And even though the valuations have somewhat corrected, they are, I think, looking relatively more attractive now. I feel that the company, if it executes the kind of order that we are talking about, if it ends up executing it in a better manner, I think that this particular stock may have further tailwind to talk about. So yes, I think one can remain positive about the possibility. Once the order gets confirmed, it is going to be all the more happy situation, I believe.
Okay. Any thoughts on oil marketing companies? As Nigel was pointing out, there's been a sharp reversal in oil marketing companies and crude prices. When we started the trading session, Brent crude was at $83.50 per barrel, a little higher than that. And now it's cooled off to 82.4. And all this has happened just in the last few minutes with that news flow, that headline coming through of hopes that there will be some sort of a breakthrough in the conflict and hostilities. So crude prices have cooled off, and oil marketing companies have surged. Where do you stand on IOC, HPCL, BPCL? Because this too shall pass at some point of time.
So save and accept the momentum which is coming up into this particular stock for reasons one day plus other day minus. But if you remove that part of it, I think these most of the stocks are already trading at a fair valuation. And we don't necessarily trade the crude volatility as far as these companies are concerned. So immediately a view is not immediately forthcoming as far as the buying interest in the counter is concerned. Yes, other than this volatility, there is going to be some amount of stability seen in the business performance of this company. Once the crude oil prices remain a little bit more stable, one can take a view on that.
Okay, very quickly on Reliance Industries, what are the current GRMs, Singapore GRMs? Because I believe they've surged, which is driving the rally in Reliance.
So diesel cracks have possibly been giving them a larger thrust because of the given situation in the global market and the European market, particularly where they are exporting. The opportunity in front of them is largely in the area of procuring the highest sulfur grade crude. From even this kind of a situation where they are getting the advantage out of it. Venezuela crude, which I am referring to, is getting an advantage out of it. And even the kind of GRM margin on the diesel that you are enjoying, and if the China indeed stops exporting diesel, probably this can even go further, stand further. So Reliance remains, in a favorable spot as far as this opportunity is concerned. So I strictly don't believe that overnight the contracts gets changed. It takes time for somebody to absorb those kind of contracts. But as of now, the momentum works in favor of Reliance at this point of time.
You can see that. Thank you very much, Dipan, for joining in. Reliance Industries now surging to a 3.5% gain. Get into a break on the other side. An interesting excerpt of a chat that we had with Motilal Oswal's Ramdev Agrawal on the other side. Stay tuned.
Welcome back. Well, we're getting some lies on Bloomberg that Iran's state-run IRNA sites by foreign minister on earlier US talks. We don't know whether these comments that came out actually that resulted in this big relief rally, whether they were actually earlier. We have seen a good 150-point rally just in the last few minutes. If these comments are actually earlier, then we could see some kind of a cool-off, Rima. So still very, very fluid the situation out there. We'll have to wait for further clarity on this front. But in the last 20 minutes, you had a big surge on all asset classes, that were risk on, and you had crude that cooled off. But I think now crude is back holding at around $84 per barrel mark. And, we'll have to still wait by, there's no much clarity, Reem, I think so.
No, there has been a lot of flip-flop on the situation. And it's also, for a clap, you need both sides to agree, right? So even if overtures are made by Iran, Israel has its own agenda, Israel and US. So they also have to agree. Yes. And it all depends on what the conditional agreement, what the offer is, what are the conditional agreements to that. And for now, as we said, we don't even know if the statements made by the Deputy Foreign Minister are fresh or not, or it was a part of earlier diplomatic channels. Earlier, we don't even know how long back. Was it prior to the conflict, or were there some backdoor negotiations which took place in the last 6 days? So we don't even have any clarity on what the earlier stands for, how many days back. But for now, I think the only thing we can summarize is says that we don't know what the situation is right now, and the markets seem to be reacting to that. There has been a big 200-point surge in the last 10 minutes on hopes of de-escalation. We'll have to see. We've got 30 minutes to go before we wrap for trade, where the markets come off in the last 30 minutes because of this uncertainty persisting.
Yeah, I think we saw a big surge now because of this, whether or not these comments are actually new. They're seeing actually the markets have fallen for 50, 60 points in the last few minutes because it's still very, very fluid. But I think for the time being, let's go across to Hormuz. He's here to tell us, all the top movers in trade. Hormuz, let's get back to the market action.
Well, what the last few minutes have been for the markets as of now. But the bigger talking point has been specific stocks, and one name that has been in the spotlight all through the day has been Mazagon Dock. And from a start of around 2 to 3%, the stock has built onto those gains, now trading 8% higher, the biggest single day gain in volumes that the stock has had since May of last year. It snapped a 3-day losing streak, possibly the only defense stock that was underperforming in the last 3 sessions. The premium here on the 2400 call option has gone up by almost 300% in today's session on the FNO side of things. On today, as of now, close to 90 lakh shares have been traded so far on Mazagon Dock. The 20-day average is of around 6.5 lakh shares, and almost 2,000 crore worth of shares have changed hands so far. When considering the volumes, only 15% of the total number of shares that have been traded so far are marked for delivery on Mazagon Dock, which is now the third most traded stock on the Nifty 500 in today's session. On the downside today, Aegis Vopak, of course, a news flow driven name, still down 6%. The top loser on the Nifty small cap in today's session. It's the 5th straight day of losses for the stock. It shed 20% in the last 5 sessions during this 5-day losing streak. And today is the second day in a row where more than 10 lakh shares have been traded on the stock. That close to 30 lakh shares already been traded in today's session. The 20-day average is around 6 lakh shares. And 1/3 of those shares that have been traded today have been marked for delivery. And as a result of this 5-day fall, the stock now trades below its IPO price. It's a recent listing below its IPO price now of 235. Now LT Foods, on the other hand, the top gainer on the Nifty 500 today, 15% higher on the stock, the biggest single day gain in a month. It had gained a similar quantum in February as well. It snapped a 6-day losing streak today. Volumes today are the highest since September of 2009 for LT Foods. Now 3 crore shares have been traded on the stock today. The 20-day average is around 7.5 lakh shares, and out of those 3 crore shares that have been traded, 12% of those are marked for delivery, and the turnover today so far 1300 crore rupees, 23% of its free float market cap. And lastly, Netweb Technologies, that stock is showing no signs of any cool off. 6.5% lower today as well. The top loser on the Nifty 500 is slightly off the day's low, was down around 8.5-9% a few minutes back. Now it's down around 17% in the last 3 sessions. Volumes though have been declining for 4 straight sessions. Today's session we have had 40 lakh shares traded, 20-day average of around 30 lakh shares. A quarter of those shares are marked for delivery, and turnover today as well is more than a quarter of its free float market capitalization. Now of course we have 30 minutes for the markets to end, and just after that we divert our attention back to the Wankhede Stadium, just a few minutes away from now, and the big India-England semi-final.
Few minutes? It's at 7 o'clock. It's 3 o'clock.
For a cricket enthusiast, it's few minutes, so you can say that it doesn't take too long.
All right. So I'm clear. I'm guessing that all of us are betting on India, winning this and making us through to the final. But who do you think is going to be the star player today?
Who do you think?
Who do you think?
As long as the team wins, it doesn't matter who's the star player.
But I just said in the last match there was this one Sanju Samson, right?
Yeah, it was, and you would bet that if the openers, it's a big match theory, right? You get the runs on the board, it's always good. For the runs on the board, you need the openers to fire. And if Sanju Samson does what he did just a few nights ago, it's always going to be a good thing. It bodes well for the team. A good start is always a good finish.
And as I said this morning, the semi-final is a resistance level, right? If we win, we break out.
We break out.
And for the final, it'll be all-time highs. So it's going to be amazing because, just if you recollect the last time, I think India played a semi-final against England was in 1983, the Prudential Cup, and we went on to lift the cup. So I'm hoping that the boys in blue do it yet again, and I'll tell you what, when it's at Wankhede, I can't miss the game. Going to be there with my son, wearing the blue jersey and cheering for the men in blue. It's going to be an absolute spectacle, and I'll tell you what, I'm very, very confident today. India is coming out on top. The Black Caps, we're coming for you.
We break the semi-final jinx, of course. That's one thing because
there is a semi-final.
There is a semi-final jinx actually because we do have pleasant memories of the Wankhede back from 2011. But the last time we played a World T20 semi-final at the Wankhede in 2016, we ended up on the wrong side of the stick. That's not what we would expect.
Not this time.
Not this time. Yeah, we keep our fingers crossed for that.
There are various other jinx as well, but we don't talk about the jinx for today. We cheer the boys in blue, and they're going to come out on top. So, Rima, make sure you're here to borrow the ball.
For me, it's Hormus at 7:30, right?
No, it's going to be Vidi at 7:30.
Very bad. Clearly, we've got one eye on the markets and one eye on the cricket match, and we'll be watching it. But in the meantime, let's get some advice then from viewers. How should investors be positioning themselves in such a volatile environment? Nimesh spoke with market veteran Ramdev Agrawal of Motilal Oswal Financial Services. Listen in.
All the users of the technology, see these platforms are built on the bedrock of say internet or what are other technology, digital technologies. So they are adopting very fast.
Sure.
In fact, they are adopting very fast. And other day I was meeting a company, and he was saying that we are growing at 40%, but my number of tech guys, they're at 200, and we don't need. And whosoever is living from the 200, we are not redeploying. So if 200 goes to 180. We work with 180, but my growth is 40%.
Correct.
So, that's so basically the capability of a tech team is going up. So all the users will be very happy.
Sure.
If I'm running a 600 people IT team in India, in Motilal Oswal, I think I can grow 5x or 6x, and still I may not need significantly more number of people.
So you're still bullish that the TAM is very large for these platform businesses, and maybe Eternal can become a 10 lakh crore market cap, Swiggy can become a 1 lakh crore market cap.
Those opportunities are not impacted by AI. If anything, if there were 5 guys surviving and winning, it will become 4.
Okay.
See, one of the big thing about the world wealth creation, if you see, there is a massive concentration of wealth among the top 10, 20, 30 guys.
Right.
And every single segment, whichever is the wealth segment, like say if it is a quick commerce, or is it a, say, social media, or is it a search, there is one guy, and that guy is almost like $1 trillion. So the winner takes it all kind of situations there.
Yeah.
So increasingly more and more segment of the commerce or the industry is becoming winner takes it all.
Sure.
And hence betting on the leader, even in a physical world, is becoming quite rewarding.
Ramdev, you spoke about, you can firmly talk about the capital markets, and in that vertical, what will do well. Give us some ideas on what within the capital markets is expected to do well.
Yeah, again,
the AMCs or the broking companies, because you all are a mix of everything. But what segments, according to you,
wherever the guy is good, wherever the guy is leader, who is the volume leader, who is the cost leader, and hence the profit leader, he's the guy who is going to do well.
No, but
and every segment will have one big winner. Say in mutual funds, which is going to be huge. Like right now, maybe it is 80 lakh crores, and I think in next 10 years it will be 800 lakh crores.
The mutual fund business.
Mutual fund AUM.
AUM, sure. 80 lakh crore.
Right now it is 80 lakh crores.
80 lakh crore.
In 10 years it will become anywhere between 600 to 800 lakh crores.
Wow. Okay. So that big is the TAM.
That big is the TAM right now. And after that 10 years also another 10 years there.
Okay.
So it is very scary to talk about that.
Sure.
So, but then I don't think the top 5 are going to change in next 5 years.
Sure.
So all of them are going to mint money.
Correct.
Unless they are completely mismanaged.
Yeah.
So all these top companies, they are managed well. So all of them have the same chance.
Yeah.
Now something is at 20p, something is 40p, something 35p. Now it is all depending on the leadership.
Yeah.
So where the leadership is good, and you think it is likely to remain good, I think those guys will win big.
Correct. Amruji, the other big thing was the big support for this market in the last, say, 2-3 years has been the retail money. The problem is in the last 18 months, the returns have been quite negative or flat. Are you getting a sense now that there's a bit of frustration, people are getting tired, the SIP flow can actually slow down or turn negative? Is that a risk for the markets?
Yeah, I mean it's all investor behavior, crowd behavior. I mean broadly still they are sustaining, but yes, it can slow down significantly. Say if they are bringing, say, this thing SIP money, say 25,000-30,000, that might come down to 15,000 or 12,000 or whatever. That can happen. But see, the prices, the markets will not be made by who is coming and who is going.
Yeah.
Price will be made by how well my corporate world is doing.
Sure.
If my earnings fire up, then retail will come, foreigners will come, and HNIs will come. Everybody wants to buy.
Right.
But if companies are doing well, everybody wants to sell.
Sure.
So the real issue is not about what retail is doing. The real issue is what the corporate performance is doing.
No, which is fine. So you are expecting 15-16% kind of earnings growth, right?
I'm expecting 15%.
Which means like a 15-16% returns, but that will also be very, very selective, right? So in current environment, given so much of uncertainty, other asset classes doing good, is there a risk of the retail money which was helping the markets to float high, that can actually fizzle out?
See, on 12 months basis, something can do very well. Sure. But on a compounded basis, it is very tough to find equity kind of asset class.
Sure.
At around 12-15%, that's the index return.
Yeah.
If you are smart, you can make 18%, 20%. So those kind of possibilities are not there in many asset classes, and the amount of money it can absorb.
Yeah.
I mean, you can, I don't know, I mean, I've never bought gold or real estate, but they are very chaotic asset class.
Yeah,
I mean, like in real estate, yes, you can buy a land parcel and it might give, but to handle a 100-acre land parcel is
it's not easy,
nightmare,
absolutely. And even entry exits are
But
tough.
here, you can have a 10,000 crore portfolio and you don't have to come to office.
Right.
So liquidity is T+1. Here, if you want a piece of land and you want to sell it, I think it's a Hercules task. So I think what is important is to understand the power of equity, the compounding power of equity, and that 12-15% comes with an up and down both.
Yeah.
It's not that this downturn which is there right now recently is not part of that 12%. When you say equity is going to do 12%, it is actually going to do 20% and minus 8% of decline.
Yeah,
so right now we are enjoying the downside.
In fact, Nimesh is also joining in now to talk about what he's picked up from dealing rooms. It's D Street Chatter time. Nimesh, great conversation with Ramdev. What was the one point that stood out for you? And then tell us, what did you learn after speaking to multiple people in the dealing rooms?
As far as Ramdev's interview is concerned, one of the biggest takeaway for me was, even for a value investor like Ramdev Agarwal, the biggest challenge right now is the valuations, and at ease at which you can buy buy stocks or build the portfolio. There are a lot of good companies. I asked him about what are the trademarks with regards to, say, Bharti, when he bought initially at 40 rupees, or for that matter Hero MotoCorp, or for that matter AU as well, where he's made 100x. His response was, there are a lot of good companies right now. The only issue is the valuation. He's not getting at the comfort at the value at which he would love to buy. So that's the biggest challenge for an investor like Ramdev at this valuation. So that was the biggest takeaway for me, honestly, from whatever he spoke about. From a market perspective, Rima, it looks like it's a powerful short covering rally, and this was something which was expected. If there is some noise with regards to the Iran deal or some ceasefire, you would see this kind of a sharp pullback rallies on short covering, and that's exactly played out in the last 1 hour of trade. Having said that, I've been saying for a while now that the flows are not that negative. Even yesterday, when the FI sold 7,000 crores, there was an equally large, big number from the DIs in terms of buying, so the net number was positive. Even today, the sense is that the FIs, or for that matter, the numbers are not that negative, and there is buying interest, especially in the large cap names from the larger institutions. I guess, still from a technical point of view, the Nifty range seems to be 24,250 on the downside. That's a very crucial support to watch out for, and maybe we are heading into the resistance, near-term resistance of 24,850 on the Nifty. So that's something to watch out for. Again, you'll see this kind of noise and big rallies as and when you hear as to what happens to this entire geopolitical risk. So that's something to watch out for. But I guess today's move seems to be more of short covering And to a larger extent, if there is buying, that's largely in very, very selective large cap names.
Indeed. What about stocks? What have you picked up?
So the first stock on my list is Bandhan Bank. That's been buzzing in trade and good volumes as well. Again, my sense is that there is a buying interest from large institutions into Bandhan Bank, but equally there is a big buzz that maybe you'll see some corporate development, a potential fundraising could be lined up in Bandhan Bank as well. So that's a trigger as far as Bandhan Bank is concerned. The second name is Wipro. IT in general has been negative, but Wipro stands out because even after such a correction, there is massive selling pressure in Wipro from institutional investors. In fact, a global fund seems to be an active seller in Wipro even at current levels. And last couple of names where there is delivery-based buying today, UCO Bank stands out, as well as IOC. So both PSU names, but in both these names there is very strong delivery-based buying. So it may not reflect in the stock price movement today, but at least from a delivery point of view, you'll probably witness that there is delivery-based buying in both those names today.
Okay, thank you very much for that. We're seeing the markets cool off. In the last 1 hour, there was a powerful 200-point rally on the Nifty. The Nifty rallied from levels of 24,550. Actually, it was a near 300-point rally, 24,550 to almost 24,820 thereabout. And from that level, we've seen the markets cool off. So at the session's high, we had conquered 24,800. And now, as you can see, we've slipped about 100 points from that level. Get into a break. On the other side, we'll get you a few BTST calls. We'll invite Mitesh Thakkar back on the show. Welcome back. 12 minutes to go to wrap up trade. The Nifty will end in the green. It's a powerful short covering rally after 3 days of losses, but we've come off about 130 points from the session highs. What should you do? Mitesh Thakkar is now joining in once again. Mitesh, what is the call?
Yeah. So, a slightly tricky market, but I would go with some long positions. Sun Pharma is a BTST. Keep a stop at about, let's say, 1772 and target of 1800, 1805 for tomorrow looks quite plausible. And the other one, see, the metal stocks have done. We had a buy call on Nalco yesterday and today as well. It still looks like strong to me, so BTST here can be taken with a stop at about 394 for targets of 404.
Today, it's Natco and Aurobindo Pharma in the pharmaceutical space, which are advancing as both the companies have launched a generic version of an oncology drug. Pomalist generic in the US market, where the market size or opportunity is $3.2 billion, and Natco and Aurobindo Pharma both have a 180-day exclusivity on this oncology drug generic version, Natco and Aurobindo Pharma, and you can see interest in these names. Sudeep Bandyopadhyay, market expert, joining us on the show. Sudeep, thank you very much for joining in. You want to tell us any interesting stock ideas that have swum into your care?
Well, I think, last time also I mentioned it's a great opportunity to pick up Larsen and Toubro. I think post the correction, it did look very, very attractive. These war and this conflict will get resolved. It's a matter of time. But the kind of contract Larsen and Toubro has, I think the opportunity of them is getting more contracts and more business post-war for the reconstruction even increases. Domestic business has been strong, and their defense unit has started doing very well, getting incremental orders. The valuation definitely even now looks attractive. So Larsen definitely is a buy post this correction which we have seen over the last few weeks. There are multiple other opportunities and some stocks which one always wanted to buy, but because of valuation challenges, one couldn't and didn't buy. I think it's been a great opportunity, this correction, for those kind of stock picking from long-term perspective.
So do you want to tell us what you have bought?
Well, I did buy Larsen and Toubro. And I think,
other than that?
Yeah, other than that, I did buy some Eternal. Again, the correction in Eternal I thought was a great opportunity for buying. I have been accumulating Vedanta for some time, and I think my logic and my thesis on Vedanta still stands strong. All these conflicts, these were not planned, but they do help Vedanta in a big way. Look at what's happening in as far as aluminium prices is concerned, and Vedanta anyway gets about 50% of its EBITDA from aluminium business. And with the way the aluminium prices are going to shoot up based on the shortage which we are now going to witness, I think it's again good time for Vedanta. Oil and gas price going up again suits Vedanta. So does silver. So I think from all points of view, I think Larsen, Vedanta, Eternal, and many more such good quality stocks with strong management are good for picking up at this stage.
Kada, we'll come back and continue our conversation. For now, it's time for a short break. Welcome back. 4 minutes to go, and looks like the Nifty may be able to defend that 24,700 mark, though it did cool off from the highs. Remember, Asia had a very strong session. Key indices gained up 2 to 3%. Kospi in particular surged 10-odd%. For the Indian markets, after losing 1,000 points in the last 3 trading sessions, we recouped about 250 points. So about a fourth of the losses that we had in the prior 3 sessions were recovered today. In conversation with Sudeep for the last leg of the show, Sudeep, anything in the defense stocks that you like right now?
Well, I talked about Larsen already, and though it's not classified as a defense stock, but I believe there's a fantastic defense business inside Larsen, and definitely it's a good buy. Of course, there's a lot of excitement in Masgao Dock based on the expectation of some of these order wins, which can take their order book to about 1 lakh crore, which should be fantastic for Masgao Dock going forward. But yes, at this stage, till the time it crystallizes, it's very difficult to predict. We have been liking Bharat Electronics for quite some time, and the stock hasn't corrected. I was waiting for some correction. It hasn't corrected, but if you're a long-term investor, I think it's still a great buy if you have at least 1 year plus time horizon in mind. Other stock in the private sector which is building a defense business is Bharat Ports. Again, it's a small business at this stage, but the order flow is steady, and I think it's going to grow going forward. So one can look at Bharat Ports also. Even the other businesses have started performing well.
Reliance Industries, what's the analysis? Basis the crude price rise, Singapore GRMs?
Absolutely. I think with this China announcing the stopping of exports, the Singapore GRM is definitely expected to go up. In any case, Reliance has the capacity to refine multiple grades, and their GRM is always much better than Singapore GRM. But with Singapore GRM itself going up, their GRM also should be significantly higher. So obviously they do benefit in a big way. And I think anyway Reliance is available at a very reasonable valuation when you compare with the market generally.
Okay, Reliance's valuations are also reasonable. Petronet LNG, 5% up on that. One would have thought the Qatar LNG news, the supply shock is negative, but stock is up.
Well, I think it's got to do with the news which is coming that some kind of ceasefire and some kind of cessation in hostilities may be announced very soon. And I think that's kind of getting the market excited, including these stocks like Petronet LNG. But I'll be extremely cautious. I think we'll have to wait and watch. There are multiple news floating in the market, and it's very difficult to rely on some of these and go and start getting long on Petronet LNG. They have a genuine problem if the war continues beyond the point.
Sudeep, just winding down today's trading session. We'll come back to you and chat with you in markets forward. For now, the Nifty and the Sensex likely to end today's trading session with a gain of 1%. The Nifty higher by 250 points to close above 24,700, though it came off about 100 points from the top. The Sensex has surged 1,100 points, but it's ending with a gain of 800 points. On the winners list, it's Adani Ports right on top with a gain of 4%. Hindalco, Nalco advancing 3.5%. L&T was the big mover. It had corrected 10% on Monday and Wednesday combined. Today, it's recovered 3.5% of that. Defense stocks continue to see upward momentum. A stock like BEL has gained 3.5% today. Masgao Docks was the big winner. And data patterns also up and about. Reliance Industries made a powerful up move today, 3% up. Coal India, fresh highs on that. Shriram Finance, M&M, even Interglobe Aviation. So that's the extent of the short covering. On the way down, banks were a bit subdued. The Nifty Bank managed to close up in the green, but you had an ICICI Bank, SBI, Axis Bank closing in the red. And IT names like Tech Mahindra, HCL Tech, TCS also retreated. Yesterday, they were resilient, but today they came under pressure. Kotak has cut down the target price on many of these IT names, saying that they now expect higher deflation of 3.5% annually versus 2 to 3% earlier, and that's driving a cut in their revenue expectations and therefore a cut in the target price also. Well, that brings us to a close in today's trading session. Midcaps did very well. The midcap index ending with a gain of 1.5% with more than 2,000 stocks advancing. Thank you very much for watching Closing Bell. Don't go anywhere. On the other side is Markets Forward.
Markets snap a 3-day losing streak with frontline indices gaining nearly 1% each. The Nifty closed above the 24,700 mark. Broader markets outperformed.
Aluminium prices hit a 4-year high after rising nearly 5% in the past week as refiners in the Gulf region halt production. Falling inventories on the London exchange further fueled the rally. Shares of Hindalco and Nalco move higher.
Order buzz lifts defense names. Class A truck orders surge 159%, powering Bharat Forge, while Mazagon Dock gains on reports of a 99,000 crore Indian Navy contract.
The Indian rupee rebounded sharply following intervention by the RBI in offshore markets to curb speculation. Weaker dollar index and strong equities lend support to the currency.
Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to gear up for the next trading day. I'm Sonal Bhutra and with me is my colleague Vivek Iyer. Vivek, good afternoon. After 3 days of relentless selling, we did see some green on the screen. It was the last hour rally that took Nifty higher above the 24,750 mark. We closed high by 1.1%. Mid-caps did well, outperforming the benchmarks, up 1.5%. We have the metals index. We did have some of these energy names did really well. But yes, markets did come off from the highs of the day, the closing highs that we saw. And that was a last-minute move itself. A lot of sectors in focus that we'll discuss through the course of the show, but a lot of individual names that were in focus on the back of news updates.
That's right. Good afternoon, Sonal. What a topsy-turvy session we witnessed today. But at the end of the day, what we have to show is that all of the sectoral indices, all of the markets, all of the indices managed to end the day with gains of anywhere between 0.8 to more than 1%. But here's a lineup of what we have in store for you today. We start with the top movers and shakers of the day with Hormuz. We will tell you why metal and pharma stocks, along with select defense names, were among the top gainers in trade today. Last but not the least, we'll delve into the key market events to watch out for in tomorrow's trading session. But now to our first segment of the day, Hormuz Fataka joins us now from the Big Wall with the top movers and shakers of the day. Hormuz, over to you.
Almost feels like two different trading sessions, before 3 p.m. and after 3 p.m. That's the kind of market that we had today. But of course, a lot will hinge on what transpires overnight. But for today, the metal stocks were the ones that were shining bright in today's session. Almost every stock on the metals index did well. Nalco leading the pack. It was the aluminum producers that did well. Nalco, Hindalco, Coal India did fairly well for itself as well, nearing a 52-week high. JSW Steel too ending the day with gains. The other pocket that has done well today is the ones that took a bit of a beating in the last 2-3 sessions. The exposed stocks to the Middle East, they staged a bit of a rebound today, led by L&T ending 4% higher. LT Foods 17% up move today. Viet Techwabak, KEC International also seeing some gains, more so particularly in the last 30 minutes of the trading session. Defense names continue to do well in today's session. Mazagon Dock leading the charge today, 9% higher on the stock. At one point was up even 11%. Data Patterns is at a 52-week high. Bharat Forge, of course, the Class A truck orders boosting fortunes for the stock here. And BEL, a new high for the stock, 460 now for the defense name. And lastly, IT names were the ones that were underperforming today, although they did recover from the lows of the day. Most of these names, be it Coforge, the large cap IT, mid cap IT, seeing losses of anywhere between 1% to 2% in today's trading session.
Okay, all right. Thank you so much for joining us, Hormuz. So those are some stocks which were buzzing around in the broader markets. But one sector that did really well, metal stocks like Nalco, Vedanta and Hindalco rallied after aluminium prices jumped on Middle East supply disruptions. The index also surged 3%. Nigel is joining us with more details on this one. Nigel.
Well, that's right. Aluminium prices have moved to the highest levels that you've seen in the last few trading sessions, and it's at the highest level we have seen actually in 4 years. A couple of reasons have played out. One is Qatalum smelter, they have initiated controlled shutdown. Qatalum, remember, is an aluminium smelter that's a JV between Qatar Energy as well as Nox Hydro. The capacity is around 650,000 tons. That's point number one. The other factor is that Aluminium Bahrain, with around 1.6 million ton capacity, they've announced a force majeure. So, put this together, there is some supply that's actually gone out of the system. And the big question is, because of this spike we have seen in gas prices and the availability as well has come in question, Because of that, the GCC region's total capacity could be at a bit of a risk. That's what the street believes. The total capacity, remember, is around 6.5 million tons as of the last calendar year, that's 2025. And 6.5 million tons would be approximately 8% of the global aluminium production. So less supply coming into the system is leading to aluminium prices moving up. And that's why some of these Indian-based companies, well, they're standing to gain. Let's explain it to you. First with Nalco. Nalco has a double engine that's firing. Why is that? They'll gain because aluminium prices are moving up. So that flows down into the profitability. And also coal prices are moving up. So some of the aluminium players globally could get hit because coal prices are moving up. That is an input cost. But for Nalco, I understand close to around 55% of their coal requirement comes in from their own backyard, from the captive sources. So they'll gain on both fronts. Though you need to keep in mind that alumina prices as well have been soft. But for the time being, the street is reading it positively. Nalco is the big outperformer. Next, Vedanta. They have exposure to both oil and gas as well as to Brent crude prices. Brent crude prices as well as aluminium. And both those prices are moving up. So Vedanta will gain in that case. And remember, they have been working on backward integration with regard to coal as well as with regard to bauxite and alumina. So because of that, they are well placed. And finally, Hindalco, if you take a last 3-month chart, you'll see actually Hindalco has been a relative underperformer. Because of the fire at the Oswego unit, it's hit their cash flows, it's hit their EBITDA as well. But now the Midwest premium has moved to a level when instead of reporting, a tariff hit, it could be actually a benefit with the Midwest premium moving up. So the street believes that the worst of Novelis is actually behind. Things will gradually improve in the coming quarters. And as is the gain, because their Indian operations are linked to aluminium price move. So put everything together, aluminium prices have moved up. There's a bit of a supply shock that we're seeing globally. And because of that, our Indian aluminium players are doing very, very well. Back to you.
Thank you so much, Nigel, for joining in and giving us all of the details why all of the stocks with exposure to alumina doing very well in this session today. Well, we are now joined by Sudeep Bandyopadhyay of IndiTrade Capital and Ruchit Jain from Motilal Oswal Financial Services. Well, thank you so much, gentlemen, for joining us. First, Ruchit, let me come across to you. You've seen a bit of a bounce post the 3-day relentless selling pressure we saw. Do you now feel that Nifty has a near-term bottom in place?
Yeah, hi, very good afternoon. Well, too early to say whether we have seen a bottom in place, but yes, the pullback move was much required. Firstly, because of the recent correction, markets were in oversold zone. The 24,300, 350 was a very crucial support where even August 2025 lows were seen. So because the markets were trading around the supports and the oversold zone was there, I think we are witnessing a pullback move. But on the higher side, it's very difficult to take out the 25,000 mark on the immediate zone. So I think it depends upon how the follow-up moves are there. And also, we all know that the short-term momentum is more dependent on the global news flows which are going on and which are a bit unpredictable as of now. So I think one should take it as a pullback move around 24,900, 25,000. I think markets could witness some selling pressure again over there.
Okay, all right, take that point. Sudeep, we'll come to you in just a bit, but let's talk about some stocks now. Shares of Bharat Forge gained 4% as North America's Class A truck orders in February more than doubled on a YOY basis. Sudarshan is joining us with more details on this one. Sudarshan.
So today early in the morning, we have got the February Class A truck orders for North America, and it's seen a huge increase if you compare both on a month-on-month basis as well as year-on-year. So on month-on-month, North America Class A truck orders are up 47%. On YOY, if you take a look, it's up almost 160%, and it's the best February that we have seen since September of 2022. And the order is up more than 20% YOY for third straight month. So basically, there are two major segments on highway and vocational truck, and in the month of February both these segments have contributed very significantly, or in simple term, both these segments have seen a huge growth. So why it's positive for Bharat Forge? So Bharat Forge is one of the suppliers of forged components, and these forged components form almost 16% of its standalone revenue. So amongst all the Indian companies which has the notable exposure to North America Class A truck orders is Bharat Forge. That's the reason you are seeing a big uptick in the stock price.
Thank you so much, Sudarshan, for joining in and giving us all of the details as far as the North America Class A truck orders are concerned. bodes quite well as far as the shares of both Bharat Forge and RK Forging are concerned. Well, moving on, Indian pharma companies are strengthening their play in the US oncology market, with Natco and Aurobindo Pharma launching the generic version of blood cancer drug after getting the green light from the US Food and Drug Administration. Ekta Batra joins in with more details.
Well, yes, Natco and Aurobindo are in focus in today's trading session because they have launched an oncology drug, Pomalyst generic, in the US markets. Now, the market size of this particular drug is large. It's over $3 billion. Natco and Aurobindo, more interestingly, will have 180-day exclusivity on this particular drug. So that means that they will be the only generics that will be selling this particular drug for the first 6 months of the drug going off patent in the US. Now, Natco is partnering with Breckenridge Pharmaceuticals for this particular drug. Now, in terms of the analysis or the impact of this is that Aurobindo and Natco do have shared exclusivity, but there could be more companies that could join the fray in terms of selling this Pomalyst generic in Pomalyst generic. Oh God.
Okay. Okay, all right. Thank you, Ekta, for joining us with all those details. Sudeep, coming to you. Pharma index has been doing well. I wouldn't say for last couple of days, but it has been quite resilient versus the other sectors. Anything that you like from the space? And if not pharma, is there any other bet that you would be playing on right now, considering that market did recover? Do you expect that to continue?
I think pharma is definitely one safe space which people can resort to. And we have been liking the domestic pharma space for quite some time. We do like Mankind Pharma quite a bit. Amongst the large pharma companies, we do like Sun from a long-term perspective. And definitely both Mankind and Sun can be picked up at current levels as well. Of course, this war and other global challenges doesn't directly impact the pharmaceutical companies, and that's a positive. Amongst the other sectors, we have been liking the agrochemical, chemical and specialty chemical segments for some time. And we believe that the green shoots are visible. This was a completely bombed out sector for a very long time. But now things have started improving. And the trade deals which India has signed in the recent past does help this sector, because of roughly around 25 to 50% of their production gets exported to US and Europe. Also, the basic logic for this sector to start doing well in India, which is China plus one, still exists very much. Overall, we do like scripts like UPL, we do like RP Industries, and some others from this segment.
Well, thank you so much, Sudeep, for your views as far as the entire pharma space is concerned. Well, Rujit, quickly coming across to you. Any view as far as the metal space is concerned? You've seen the rally as far as Hindalco and Nalco is concerned. Do you feel further upside is possible for these stocks?
I think not the sector as a whole, but definitely certain stocks are looking positive, especially the aluminum stocks, such as the names which you mentioned, Hindalco and Nalco. So those stocks can further do about 5 to 7% up move from current levels, as it has kept the short-term momentum intact. But the good thing is that the Nifty Metal Index itself has taken support around this 50-day EMA. So I think depending upon the market moves, we would see the broader momentum. But yes, the aluminum-related stocks can see a relative outperformance in the near term.
All right, we'll track that move. But moving on to the next one, shares of Coal India moved higher after rating upgrades from Citi and Axis Capital. Brokerages see potential upside from rising global coal prices driven by escalating West Asia tensions. Nigel breaks down what the upgrades mean and what could be next for the stock. Nigel.
Well, that's right. Brokerages have turned incrementally constructive on Coal India. Citi has maintained a neutral rating, but they've raised the target price to around 430. They've placed the stock on a 90-day upside catalyst watch. The brokerage expects elevated LNG prices to drive the gas to coal switching, which could support demand in the near term. Meanwhile, Axis Capital, they have upgraded Coal India to add from reduce. They're increasing their target price by around 10% to around 480 rupees. The brokerage has also raised their FY27 and FY28 PAT estimates by around 8 to around 11%. They note that its base case does not factor any kind of impact from the potential US-Iran conflict. However, if e-auction premiums were to rise to around 100%, the brokerage estimates that EBITDA could rise by close to around 12%, which could push the target price closer to around 540 rupees. Well, earlier today, we spoke to the manager of Coal India, and they said that international coal prices could move higher due to the geopolitical developments, though they said it's too early to draw any kind of firm conclusions that Coal India's e-auction prices will also move up. On the e-auction segment, the company said that the premiums are largely normalized at around 50%, though they've inched up both in the months of Feb as well as in March 2026. The focus, however, is on increasing volumes rather than pushing up e-auction prices, with FY27 e-auction volumes expected to be around 10 million tons higher than what they'll do in FY26. And overall, the company is targeting around a 5% volume growth in FY27. On the cost front, they say that the employee wage revision, that's due in the middle of this year, though the final quantum remains a little bit uncertain. They also highlight that it's balanced its capital allocation strategy. The dividend payout in the last few years has been 45 to around 50%, but the future payouts will also need to take into account the capex requirements, with the core capex planned per annum at around 17,000 crores over the next few years. Finally, the company reiterated its plan to unlock shareholder value, which they believe will be via listing some of their subsidiaries. They're expecting CMPDI to be listed in March 2026, while MCL and SECL could see listings by the end of this calendar year.
Well, thank you so much, Nigel, for joining and giving us all of the details as far as Coal India is concerned. Well, Sudeep, coming across to you, do you have a view on Coal India and any view as far as Tata Power is concerned, which also has a net long position when it comes to coal?
Well, we do like Coal India, and we have a target price of 550 on Coal India. I'm not sure whether the e-auction prices will go up immediately or not, but fundamentally, with the kind of energy demand which India is witnessing, I think Coal India has a bright future. Efficiency at ground level is increasing, and I think the unlocking the value of the subsidiaries through listing is a process which will benefit the shareholders. That's pretty much as far as Coal India is concerned. As far as Tata Power is concerned, we do like Tata Power, and we believe that the kind of capacity which they're planning to set up going forward should stand them in good stead. Operational efficiency is increasing, and the past issues which have been plaguing the company are, to a great extent, have been resolved. So yes, Tata Power from a long-term perspective does look good. We are actually positive on the entire power sector from a structural point of view, though this sector hasn't given any great returns in the recent past, but structurally we are positive.
All right, take that point. Thank you, Sudeep and Ruchit, for joining in today with your thoughts on specific sectors and stocks as well. With that, it's time for a short break. When we come back, we'll tell you why Rupee recovered sharply today and the key market events to watch out for on the other side. Welcome back. You're still tuned into Markets Forward. The rupee jumped sharply in early trade, rising nearly 0.6% and held on to those gains through the day, largely on the back of heavy dollar selling by the RBI. Bond yields also fell sharply. Lata joins us with a wrap of the action in the FX and bond market. Lata.
It was a standout day for the currency because it rose by about 0.6% even before market opened in pre-opening trades, because the Reserve Bank apparently has intervened in the NDF market and it maintained those gains. In fact, we were an outperformer, the rupee. Most other EM currencies were still weaker, with the dollar remaining strong. The surprise was, why was the Reserve Bank selling such large quantities? The guess of the dealers is that probably the Reserve Bank is wanting to ensure that long-term investors are not afraid of coming into the market because the rupee seems so choppy. So it looked like a determination to ensure that the rupee doesn't fall too much. There were, of course, some intraday jitters when there was news about an Iranian deputy minister saying that they were ready to withdraw their nuclear arsenal, and then the news was kind of treated as old news. But for the jitters, the rupee remained strong throughout the day. And the positive, of course, for the rupee was there was a small fall in the DXY itself. And of course, stock markets were strong. But the negative really was that crude continued to be expensive, and the shutting of the Strait of Hormuz remains a danger for imports and exports, and therefore negative for the rupee. A brief word on bond markets. Bond yields fell, which was a surprise because crude prices are so high that if anything, bond yields should keep rising. But the fall again was because of very big Reserve Bank intervention. And this is no secret. You can find out from the NDS OM, the clearing corp data, which whatever comes under the term others is because of Reserve Bank. And there was 20,000 crore of bond buying on Wednesday and 10,000 crore on Monday. The logic that the market tells me is that the Reserve Bank, when it supplies dollars, is pulling back liquidity. It wants to push that liquidity back by buying bonds so as to keep the market liquid. This is the guess of the market. But anyway, the important part is the actor of the day is Reserve Bank, whichever fixed income market you look at, currency or debt.
Well, thank you so much, Lata, for joining us and giving us all of the details that helps us decode the move as far as the rupee is concerned. And before we wrap, we bring you the key market events to watch out for. Upasana Bhatt is standing by the wall with the key events to watch out for in tomorrow's trading session.
Well, first up, let us look at the global economic cues. US coming there first. Non-payroll unemployment rate and even retail sales data for the month of February will be out tomorrow. Now, in terms of the domestic cues, bank loan and deposit growth data will also be out along with the foreign exchange reserves. Now, let us look at some of the key stocks that will be in focus on the back of corporate action. BEL, SBI Life, both these counters goes ex-dividend tomorrow. Even IOC and Sun TV will be in focus as board meeting is scheduled to declare interim dividend for FY 25-26. And lastly, coming to Quality Walls India, this company will be reporting its Q3 result tomorrow. And lastly, in terms of other events, mind you that the IMF holds conference on Asia's future challenges and opportunities ahead of its 2026 annual meeting in Thailand. So we'll be keeping an eye out on that as well. So all in all, looks like quite an eventful day tomorrow. All right, Upasana, thank you so much for joining us with all those details. With that, it's a wrap on this edition of Markets Forward. We'll be back with more news and updates on the other side.
Good evening. Thanks for joining us on Business 360. I'm Shriram. The headlines that we're tracking for you this evening. The US and Israel continue to bomb Iran as the war in West Asia enters day 6. Iran's foreign minister warns of terrorist movements along the Iraq border amidst reports that the US was seeking to arm Kurdish forces. Iran state media reports that Tehran hit an American oil tanker off the Persian Gulf. Iran's foreign minister says the US will bitterly regret attacking its warship in the Indian Ocean. The ship was a guest of the Indian Navy and was attacked in international waters while returning from an event in Visakhapatnam. Opposition leader Rahul Gandhi questions the silence of the government, saying the war has reached our backyard. India feels the jitters as Iran claims control of the Strait of Hormuz, bringing energy shipments via the route close to a grinding halt. The world's largest gas company, Qatar Energy, invokes a force majeure, notifies buyers, including GAIL, that it may be unable to meet supply commitments. Gujarat Gas cuts its supply to industrial consumers by half. The Sensex and the Nifty snap a 3-day losing streak. Mid-caps outperformed. The rupee gains more than 50 paise against the dollar after strong dollar sales by the RBI in the offshore markets. An interim trade deal between India and the US is close to the finish line, says the US Deputy Secretary of State Christopher Landau, who's in New Delhi. Also says India should look at the US as a strong alternate energy source. China signals an era of slower growth, sets GDP growth target for this year between 4.5% to 5%, which is the lowest since 1991. China's GDP grew at 5% last year, meeting the official target. Vodafone Idea's AGR dues to the government could drop by around 60%. Sources say officials are in the process of completing the reassessment of the overall dues before the end of the month. The Supreme Court warns against strategic litigation by unsuccessful bidders under the bankruptcy law for a second shot, says commercial wisdom of the Committee of Creditors must enjoy primacy, and cautions Company Law Tribunal against expansive scrutiny. It is now official. JDU leader Nitish Kumar files his nomination for the Rajya Sabha elections, clearing the decks for a new chief minister in Bihar. Promises full cooperation and guidance to the new government that will be formed in the state. The new BJP president Nitin Nabin also files his Rajya Sabha nomination. Nepal goes to the polls 6 months after Gen Z-led protests toppled the government. 65 political parties in the fray for 275 parliamentary seats. 35-year-old rapper turned politician Balan Shah takes on KP Oli on the veterans' home turf. But the top story this evening, the war in West Asia now into day 6 as the US and Israel continue their military campaign against Iran. The death toll has crossed 1,000. Explosions were reported across the Islamic nation after Israel and the US launched a new wave of strikes. Israeli forces said air defense systems were activated after detecting a fresh barrage of missiles fired from Iran. Israel continues what they called their bombardment of Iran-backed Hezbollah positions in Beirut. Iran has already warned of what it calls complete destruction of the region's military and economic infrastructure. The country's state media reported that Tehran hit an American oil tanker off the Persian Gulf. Multiple explosions were heard across Qatar, Bahrain and Azerbaijan. 3 Indian nationals are feared dead in 2 separate incidents involving attacks on merchant shipping vehicles off the coast of Oman. Meanwhile, back in Washington, the Republican-controlled Senate backed President Donald Trump's military campaign against Iran. Lawmakers voted 53 to 47 to block a bipartisan resolution that sought to halt the air war and require congressional approval for any further hostilities against Iran. Speaking at the White House, Trump said he would rate the U.S. war success at 15 on a scale of 1 to 10.
We're doing very well on the war front, to put it mildly, I would say. Somebody said, on a scale of 10, where would you rate it? I said about a 15. And we're going to continue to do well. We have the greatest military in the world by far. And that was a tremendous threat to us for many years. 47 years they've been killing our people and killing people from all over the world. And I think we have great support. And I think if we didn't do it first, they would have done it to Israel and give us a shot if that was possible. And if we didn't terminate the worst deal, one of the worst deals ever made, the Obama nuclear deal, I call it the Obama nuclear deal, where he gave everything to Iran.
And the United States has sunk an Iranian warship carrying nearly 130 Navy personnel in the Indian Ocean near the coast of Sri Lanka. U.S. Secretary of War Pete Hegseth took credit for the attack, boasting about what he called the first torpedo strike by submarine on a warship since World War II. The Iranian warship was sailing back from Visakhapatnam, where it took part in a naval exercise at India's invitation. The Indian government and the Indian Navy are yet to make any official comment on this incident.
Led by Lieutenant Jeffrey Matthew.
These are Iranian Navy personnel marching on the street of Visakhapatnam on the 19th of February. They were in India at the invitation of the Indian Navy to participate in International Fleet Review and a multilateral exercise called Milan 2026. On the 17th of February, the Eastern Command of the Indian Navy extended a warm welcome to the warship and its crew on social media, saying it reflects long-standing cultural links between the two nations. On the 4th of March, as the warship was sailing back to Iran, it came under attack. A torpedo attack by the U.S. submarine sunk the warship near the coast of Sri Lanka in international waters, effectively bringing the war in West Asia to the Indian Ocean.
Their Navy not a factor. Pick your adjective. It is no more. In fact, yesterday, in the Indian Ocean, and we'll play it on the screen there, an American submarine sunk an Iranian warship that thought it was safe in international waters. Instead, it was sunk by a torpedo. Quiet death. The first sinking of an enemy ship by a torpedo since World War II.
Iran's Foreign Minister Abbas Araghchi has warned the U.S. will bitterly regret attacking the warship, terming it as an atrocity. He said the ship was a guest of the Indian Navy and was struck in international waters without any warning.
We have a good relation with the Indian government. We are expected from our brothers to stand in these situations.
Sri Lankan government says more than 30 injured Iranian Navy personnel have been rescued. More than 80 dead bodies have been recovered. Opposition leaders in Sri Lanka allege the country's sovereignty has been violated by the US. They claim any military action at an exclusive economic zone is against international law. Leader of opposition in the Lok Sabha, Rahul Gandhi, questioned the silence of Prime Minister Modi, saying the conflict has now reached India's backyard. Bureau Report, CNBC TV 18.
And as the war continues to escalate, Iran has officially denied launching a missile towards Turkey. Iranian state media said the country respects Turkey's sovereignty and rejected claims that any missile had targeted Turkish territory. Spain, meanwhile, has pushed back against claims from the White House that Madrid was cooperating militarily with Washington in the war against Iran. The denial comes after President Trump threatened to use trade measures against Spain over its position. As the conflict deepens, Anthony Albanese said Australia has deployed military assets to the Middle East as part of contingency preparation. Meanwhile, crude oil prices remain elevated despite President Trump's promise to provide insurance and military support to oil tankers attempting to cross the Strait of Hormuz. This statement has come after a warning from Iran's Revolutionary Guard to attack ships that attempt to cross the strait. China has reportedly urged refiners to suspend fuel exports. According to Reuters, China has asked companies to stop signing new contracts to export refined fuel. The government has also urged companies to try and cancel shipments that have already been committed to. Now, the Indian government is feeling the jitters as Iran claims control of the Strait of Hormuz, as it has brought energy shipments via the route close to a grinding halt. Sonal Bhutta joins us now with more details. Sonal, what does this mean now for India's energy demand and energy security?
You know, during geopolitical concerns, we usually speak about crude oil prices, crude oil supplies, but gas this time could be a bigger issue for India, and not only India, other Asian countries as well. Let me take you through the news first. Qatar Energy announced force majeure to affected buyers after announcing a halt in production last week. They indicated that the supplier can suspend deliveries without penalties. This is according to the contract, of course, and Qatar is one of the biggest producers of gas in the world, and this news has come in as a shock for the entire industry as well. They have formally notified the buyers that they will be unable to meet supply commitments due to circumstances which are outside their control. Now, if we talk about supplies coming in from Qatar or UAE to Asia, let's look at the numbers first up. India gets 59% of its total LNG requirements from Qatar, which is around 29% of its total gas requirements. Taiwan has 37% of its total gas supply coming in from Qatar or UAE. Bangladesh has 16% 30% of LNG supply, 20% of total supply. China has 31% of LNG supply, 7% of total supply. The total supply percentage is lower because they do have a lot of domestic production as well. For Pakistan, it's 99% of LNG imports. And if we talk about the Strait of Hormuz, by end of February 2026, 91% of year-to-date transactions or deliveries went to Asian cargoes. So that was up from 81% in 2023 and 89% in 2025. So that particular strait is extremely important for gas passage to the Asian countries. Now do remember there has been an impact on Indian companies as well. For instance, Gujarat Gas announced that they will be cutting gas supplies by 50% to their industrial customers. GAIL said today that they are not getting any gas under contractual agreements from Qatar because of this force majeure. We did speak to Fertilizer Association of India today as well. They said there has been no problem with supplies till date, but if the conflict continues, they will see a big problem because their major raw material is gas when it comes to production of urea. And this will have ripple effect when it comes to household gases, LPG. We've not seen that yet because government could prioritize that and maybe increase allocation from domestic gas quota. However, if this conflict continues, there could be a bigger worry. So gas supplies will be the key to watch out for if this conflict continues.
Sonal, many thanks. And staying with that, government sources believe that there will be no cuts or rationing of cooking gas and fuel for consumers. Sapna joins us now with more details. Sapna, so for the retail consumer, unlikely to be any cuts or rationing, but for industrial users, there could be reprioritization, quote unquote, in the government's words.
Absolutely. So reprioritization of gas supplies is definitely an option that the government, kind of retains at its end. It may be required to exercise that. We are aware of the kind of force majeures that have come into place, especially with the disruption of the, the LNG supplies from Qatar. Also, however, we need to keep in mind the fact that the retail consumers are unlikely to be impacted with any kind of a reprioritization, so to speak. It's the industrial users that may get impacted. There are already some reports suggesting that. However, within that also we are given to understand, within that bracket also, we are given to understand that the farm sector is not going to be impacted. It's a priority sector. So I suppose farm sector would also, kind of entail use of fertilizers. So all of that. So of course, but these are decisions that have yet to be taken. This is just a kind of a suggestion or kind of an option that the government is retaining at its end. Sources also indicating that the administrative ministry, which is MOPNG, they will not be taking these decisions alone. They have to be in conversation with, say, the fertilizer department or the Ministry of Chemicals and Fertilizers. Also, GAIL is going to be the coordinator for all of this. So we'll have to wait and watch and see how that priority allocation ladder really actually works out. Coming back very quickly to the retail consumers here, as of now, at least top government sources are very clear that absolutely no question of any cut in LPG supplies, cylinders rather, or any kind of an impact on the individual consumer of CGD. So basically, you are talking of PNG and CNG. So their individual consumers are absolutely unlikely to be impacted. However, these are early days. We'll have to wait and watch and see what really happens on in that Strait of Hormuz. There are also indications that have been given by government sources that they are in touch with all the top global crude oil suppliers. They are rather the government sources, the Indian government sources also indicate they are in conversation with US authorities to try and work something out in terms of the insurance cover available, or rather not available at the moment, but try and make it work for the transit of vessels in Straits of Hormuz. So all kinds of stakeholder discussions are on, right from the Prime Minister's level to the administrative ministries which are concerned in all of this. So we'll have to wait and watch and see how the situation pans out. One disruption has come in terms of the LNG supplies from Qatar, but none expected beyond that, at least for individual customers of CGD as well as LPG.
All right, Sapna, many thanks for joining us. Let's take stock of the market action. Asian markets recovering after a massive sell-off. South Korea's Kospi staged a sharp rebound today, jumped as much as 12% intraday. Japan's Nikkei also rose nearly 2%, and stocks in Shanghai closed marginally in the green. And back home, the Lal Street snapping the three-day losing streak, with the frontline indices gaining over 1% each. The Nifty closing above 24,750. Mid-caps outperformed, but the banks underperformed. The blue chips, except for IT, all sectoral indices closed higher today. The rupee recovered over 0.5% to end at 91.60 against the dollar. Strong dollar selling by the central bank helped the currency counter most of yesterday's fall. A weaker dollar index and strong equities aided sentiment, so a sharp pullback there for the dollar rupee. Now, the U.S. Deputy Secretary of State Christopher Landau says a trade deal between India and the U.S. is close to the finish line and could unlock huge economic potential for both nations. Speaking at the Raisina Dialogue in New Delhi, Landau said India should look at the U.S. as a strong energy source. Take a look.
We are very excited about the trade deal that is almost at the finish line now, and think that can be the basis for really unlocking almost limitless potential. We are seeing some changes in the U.S.-India relationship, cooperation in defense and other areas that I think would have been impossible some years ago. And I hope that that's an area that we can continue to lean into. I think the energy cooperation possibilities, again, are limitless.
That is the Deputy Secretary of State, Christopher Landau, there on energy and the deepening of the energy partnership between India and the U.S. Remember, the U.S. has insisted that India commits to buying no Russian oil. In a setback to the Trump administration, a U.S. federal court has ruled that companies that paid tariffs are in fact entitled to refunds. The court added that the government collected over $130 billion in tariffs and refunds, and that could in fact amount to $175 billion. Speaking to CNBC yesterday, U.S. Treasury Secretary Scott Bessent said global tariffs will be raised from the current 10% to 15% sometime this week. He added the tariffs will be back to their old rates, that is pre the U.S. Supreme Court ruling, within 5 months. Take a look. President Trump has officially nominated Kevin Warsh as the next Federal Reserve Chair. If confirmed by the Senate, Warsh will succeed Fed Chief Jerome Powell for a 4-year term. However, Republican Senator Tillis has said that he would block Warsh's nomination from proceeding in the state until a federal criminal investigation of Powell is dropped. China has signaled an era of slower growth. It has set a GDP growth target for the year between 4.5 to 5%, which is the lowest since 1991. China's GDP grew by 5% last year, meeting the official target. CNBC's Elaine New brings us more.
The NPC has kicked off now, and we're getting the numbers now, according to a report from seen by CNBC. China has set its growth target at a range of 4.5 to 5%, so trimming slightly its growth target compared to last year, which investors say will lower the pressure for a broader-based stimulus. Meanwhile, we're also getting the CPI inflation for this year at around 2%, the same as last year. And a key metric many investors are focused on, the fiscal deficit ratio, is set at around 4% of GDP. That was largely seen as the base case, and is the same as last year as well. While defense spending is set to rise 7% in 2026 versus a slightly higher 7.2% in 2025.
Well, that is the latest from China. Up next, Vodafone Idea's AGR dues to the government could drop by about 60%. That and more when we return. Morgan Stanley has laid off about 3% of its global workforce, which translates to roughly 2,500 employees. The job cuts span the bank's key divisions, which include institutional securities, wealth management and investment management. The move is said to be driven by strategic priorities and individual performance. Amazon has laid off several employees across its robotics unit. According to Reuters, this round of firing will impact at least 100 employees. This comes after the company cut around 16,000 jobs earlier this year. Now, the telecom department has almost completed the process of reassessing Vodafone Idea's AGR dues. Sources say the company's license fee may fall by about 60% after the reassessment. Ashmit joins us now with more details. Ashmit, what could this now mean as far as Vodafone Idea is concerned?
Well, the latest that we're picking up from the DOT, what sources are telling us is that there is a process for reassessment of the AGR dues, which are already underway. The first leg of this process is the field offices. License fee is calculated as a part of dues that are coming in from individual circles. So the field offices of the DOT have done this initial reassessment. The license fee component of that, the reassessment has been completed as far as the field offices are concerned. This, of course, is subject to a final review and then final call being taken by the cabinet-approved DOT committee. That is yet to happen. But at least from the field officer's perspective, the reassessment for the license fee dues has been completed. We're given to understand that on accounting for various computational and arithmetic errors, the license fee dues for Vodafone Idea could be lower by as much as 60%. Now, here are the caveats which are important to bear in mind. Number one, this is not a final call taken by the DOT committee. This is the field offices that are communicating their recommendations from individual license circles back to the DOT. That's one. Number two, the process that has been completed so far is only pertaining to the license fee. Bear in mind that the total AGR demand had accounted for both the license fee as well as the SUC. And that's the third aspect to bear in mind. The SUC exercise, the spectrum user charge component of that, the reassessment for that is yet to be undertaken. The broad timeline that sources are telling us is likely the end of month, by March 31st. That's when a better picture will emerge with respect to both license fee as well as the SUC component. But for now, the field office is reporting that the license fee dues for Vodafone Idea could come down by as much as about 60%. Back to you.
All right, Ashwin, many thanks for joining us. And with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on cnbc TV 18. Stay tuned. We're back in a minute with more.
joining me now is Ramdev Agarwal. Ramdevji, thank you very much for talking to CNBC TV 18. After 2 weeks back, there was AI. In the last 1 week, there is Iran. There's so much of uncertainty. People are panicking. What's your sense? Is it a time to be greedy or is it time to be fearful?
Yes, you have to be sensible in the sense that
sure.
You have to be careful about the markets, because there are multiple things happening and it's very chaotic. In the sense, how do you find order in this disorderly world?
Yeah.
So investing is becoming very complex because multiple forces are hitting you. In fact, India is one place where actually you are at a lot of peace.
Yeah.
At least in this part of the world, India is one place which is very large, very self-sufficient and very peaceful. And I think at some point of time, India will start getting recognized as a place of stability and peace and prosperity.
Sure.
So that is little later. So right now, market is correcting. We are seeing the Iran happening. So I don't know whether it is a peak of fear. Of course, at the peak of the fear, you have to be peak of greediness also.
Yeah.
So clearly, I'm nobody to call whether there is an end of war or see. Markets will always move ahead of that. So markets in 2-3 days, 4 days, they price more than what Iran could damage. So the markets are. The war will move at a particular pace, but the market can move a much faster pace, and that's what really happened. So my sense is the peak of the fear has already been priced in. Unless some completely untoward incidents happens in Iran, I think we have seen the worst of Iran war, and hence
so worst
it is
of
there in
Iran
the
war
price.
and worst of the correction as well, or you think there could be more pain?
No,
at
so
least in the very near
then we have our own problem of earnings, and that side is very good news in the sense that corporate performance. If you see Q3, I think we saw about 50. Across the board, what we cover about 350 companies. The performance is very good.
Yeah.
If you go and visit the companies, I think you are finding more bullish companies than bearish companies.
Correct.
So the performance is clearly picking up, consumption is picking up. So I think as far as ultimately the price will reflect what is happening in the real economy.
True.
So real economy is on pickup stage. You might have seen the Q3 numbers also, 7.8% of GDP growth rate, and that is now visible little more widespread way. So Iran is one aspect of it. But what's happening in real economy? I think real economy is on the positive side, and hence and Iran has helped, or Iran has caused some quick correction.
Correct.
So now Nifty is trading at less than 22 times or 21 half times current year earnings. It is trading, which is, I would say, it's not grossly overpriced. It's a fairly priced.
But it's not even cheap, right?
It's not
at 21 times. It's not cheap. So there is a
not
risk
bet
of
the house kind of thing.
Yeah, correct.
It is much more investable market, sensible, but it's not throwaway market.
Sure. Ramdevji, I'll come to you on the earnings because that's been the big advocate and bullishness for you to be bullish because you believe the earnings are going to pick up. But just to finish the global point in terms of Middle East, or for that matter, even for that matter, US tariffs. Yesterday there was a Supreme Court judgment in the US as well that maybe US will have to give back the tariff amount that they've collected back. And there is so much of uncertainty with that as well, with the tariffs and all. Given the global context, how do you see? What's your prognosis? How do you approach this market?
Yeah, so you have to be extremely selective.
Sure.
You have to, because there are a lot of businesses which is completely, the impact is very little. So if you look at banking, banking is basically domestic stuff, or consumption, some consumption which is very domestic. Those companies are not impacted that much by what's happening globally.
Sure.
So we have to be very careful.
So basically, time to be very selective in the domestic facing companies.
And if you're not competent to do that, because there are a lot of new investors, millions and millions of new investors, everybody is not competent to select stocks.
Correct.
So they should not get into that job.
Sure.
Then they should give it to the fund managers who are doing reasonably well in terms of which are the schemes, which are the managers who are doing well. And even if that is difficult, in that case, index is always there.
Sure.
And today, index is doing better than most of the managers.
Absolutely.
So if you buy S&P 500, you buy Nifty, you buy 100 or 250, I think top 250 or something like that. So index investing is one of the, would have been best performing kind of a segment.
Sure. Ramdevji, I was looking at some past data. And typically the big pain in the Jan-Feb March quarter seems to be a buying opportunity, and after that in the next 9-10 months you see very good returns. And since the COVID times, at least there have been 6 instances, and I was looking at the data, all the 6 instances March to December after the big fall has been positive between 15 to 25%. You think we are ripe for that sort of a return, that maybe let the March pain get over and you might see a very big return over the next 9 months from here?
I would not bet on anything like this.
Sure.
I would go about having a moderate expectation of about 12 to 15% kind of return, because that is what the earnings alignment is.
Yeah.
I am not too hopeful on the P getting re-rated again.
Sure.
So 21 half, maybe even it might come down by another 5-7%
Correct.
to more like 20. So at 21 or so, what is the kind of earnings I see? And that's why when the earnings are looking to be 10 to 15%, my ambitious goal is to earn 15% in next 12 months.
Right. Ramdevji, is that earning thesis getting challenged now with the global environment, with the, there are so many sectors which will get impacted because of rising crude and logistics issues and everything.
I only hope that this is a temporary problem, in the sense that, I mean, if it gets very prolonged and the Gulf of Hormuz actually gets blocked and nothing comes out, the gas doesn't come out, petrochemical doesn't come out, crude doesn't come out, obviously we'll have far more intense issues, but I mean, we'll tackle it as it comes. Right now, clearly there is disruption in all the petroleum-based supplies. So you are seeing, you must have read about Morbi. They stopped the tile production because there's no enough gas available. Even Petronet LNG itself has.
That entire basket is under question, right? The OMCs, aviation, gas companies, everybody will be.
And eventually it is the inflation, I mean, I think world will find enough energy sources, enough oil supply, enough petrochem, but it's a sudden disruption. So, I mean, there is a clearly some kind of headache right now. But I think world will come around, and I mean, you have to wait and watch, in the sense that another 1 week, 2 weeks, 3 weeks, and then the world will find a way to get normalized.
Right.
And I'm hoping that 95, 97% chance that it will get normalized in the weeks ahead, and we have seen the worst of it. That's what my reading is.
Your reading is.
But you should also be ready if by chance things further get kind of worsen. It's not end of anything. It can get prolonged because they are the kind of guys they can keep fighting despite getting hit. So we have to keep ears and eyes open, and if by chance, see, one is the index to go down by 10% or say 5-7%, and other is that there are stocks which have gone down by 25-30%.
Absolutely.
And that's where the opportunity is.
Right.
You know the stock.
Right.
The stock is worth $1,000. The stock is trading at 700 or 600.
Right.
I mean, you should. And now, can it go to 500? Of course, it can go to 500.
Right.
But this is the time when you are getting actually sensible price of those stocks.
I'll ask you about those stocks as well. But the other big disruption recently has been the AI, and that's impacted your portfolio as well into some extent, IT and the platform businesses and all. Your take on AI, and is it going to be disruptive for India, or is it going to be a bit of a support for the Indian companies? What's your take?
I still think, I mean, the impact will be quite big.
Okay.
But probably we are underestimating the long-term impact, and we are overestimating grossly the short-term impact.
Short-term impact. Okay.
That the jobs will just get finished, or it will become 50%, and those kind of things. They are completely figment of imagination at this juncture. But what will happen after 5 years when this AI movement becomes even deeper? Then what kind of whatever models coming now, they will become even more sophisticated. So the eventually, I think need for the people, need for the kind of people we have in those jobs, I mean, that will change. So I think it's a very disruptive force, and one has to be very careful which company is on the right side of the disruption.
Ramdevji, because you're a value investor, you look at deep value and all. Is there a risk of the terminal value for the IT companies getting questioned? I'm asking this simply because in your Focus 35, the top big holdings are the IT names, the Persistence, the Coforges of the world. How are you positioned in those names now after the disruption that you've seen? And do you really question the terminal value for these IT companies?
Yeah. So don't ask me anything about what AMC is doing.
Sure. No, of course.
The fund managers are doing themselves, and they are in and out.
Your view on IT.
Yeah, so I'm talking about in person. Sure. You know, what I think that there is too much of noise about what is possible, what is going to happen in short term, and it is taken as if the companies will not change.
Yeah.
See, companies also have an opportunity to change themselves. No?
Right. Right.
They will do retraining of all the staff.
Yeah.
I mean, and the clients are not suddenly become AI enabled.
Yeah.
The clients also need help from somebody to do the AI enabling, and that will be done by this company. Okay. It's not that AI projects are not. I mean, I think Infosys declared that 5% or 7% of revenue is AI projects. So that's how the new services they come in, and these companies wave after wave. When initially they started in '95, they are doing just the body. I mean, staffing for Y2K problem.
Yes.
Then came the entire internet stuff, then web enabling, then mobile enabling, then ERP, and whole lot of things. It's a wave of, and we have seen that they have absorbed more and more services, more and more projects.
So you believe the IT companies will also change?
They will change.
And
this time
there is an opportunity to invest in IT companies.
I'm not saying that.
Sure.
I'm not saying that. Actually my understanding of IT today is worse than anybody else.
Okay.
It is not that clear that this company is going to win.
Sure.
I know it is very exciting time, but I would say they are headwinded.
So it's difficult to find the right to win as of now in IT.
If you are expert, you can figure out.
Sure.
You know, if I'm expert in say financial markets, so if you ask me which part of the financial markets will do better, probably I'm better positioned to talk about that.
I'll ask you that as well.
No, but IT side, it's a very complex. You have to, whenever you speak to anybody, they have a different kind of a take.
Kind of a view.
And particularly if the company is listed, he says that it's a business as usual.
Correct.
But when you speak to the guy who is not, who is the other side, I mean, he says, I mean, like one of the experts, by 2030 there won't be any IT jobs only.
Okay.
So, you know, that kind of extreme thought process are there. So, it is very difficult for me to really take a clear position.
Sure.
It is clearly headwinded. I mean, there are problems in the sector.
What about the platform businesses, Ramdevji? Because, you know, again, that's been tagged to AI disruptions, and stocks have got corrected as well. You've been very bullish on the platform businesses for the last many years now. Your initial take, because you talk to the companies as well, what's your sense? As far as the platform business, Zomato, Zepto, Swiggy.
So all the users of the technology, you know, see these platforms are built on the bedrock of say internet or what are other technology, digital technologies. So they are adopting very fast.
Sure.
In fact, they are adopting very fast. And other day I was meeting a company, and he was saying that we are growing at 40%, but my number of tech guys, they're at 200, and we don't need. I mean, and whosoever is living from the 200, we are not redeploying. So if 200 goes to 180, we work with 180, but my growth is 40%.
Correct.
So, I mean, that's so basically the capability of a tech team is going up. So all the users will be very happy.
Sure.
If I'm running a 600 people IT team in India, in Motilal Oswal, I think I can grow 5x or 6x, and still I may not need significantly more number of people.
So you're still bullish that the TAM is very large for these platform businesses, and maybe Eternal can become a 10 lakh crore market cap, Swiggy can become a 1 lakh crore market cap.
Those opportunities are not impacted by AI. If anything, if there were 5 guys surviving and winning, it will become 4.
Okay.
See, one of the big thing about the world wealth creation, if you see, there is a massive concentration of wealth among the top 10, 20, 30 guys.
Right.
And every single segment, whichever is the wealth segment, I mean, like say if it is a quick commerce, or is it a, say, social media, or is it a search, you know, there is one guy, and that guy is almost like $1 trillion. You know, so the winner takes it all kind of situations there.
Yeah.
So increasingly more and more segment of the commerce or the industry is becoming winner takes it all.
Sure.
And hence betting on the leader, even in a physical world, is becoming quite rewarding.
Sure.
And betting on the small guys at times is the small guy in size can also be leader in that small niche.
Yeah.
You know, so it is becoming very different kind of world where the wealth is growing, okay, but wealth of the bigger companies are growing much faster.
I think that's visible in India as well.
Yeah, it's becoming
across all sectors, whether it's between say even in aviation or in platform or in telecom, the winner takes it all. I mean, Bharat is becoming bigger and bigger. Indigo has become bigger and bigger.
I mean, the full telecom sector is about 2 guys.
2 guys, exactly.
Yeah.
And
whole, you know, kind of automotive industry In car it is 2 guys. In motorcycle it is 2 guys.
2 guys, correct.
I mean, if we produce 30 million cars, say like China is doing 35 million cars now. In next 15 years, 17 years, if we go from 5 million to say, forget about 30, even if you go to 15 million, 20 million, where are the car companies? These are only 2 or 3 car companies who will do, some guy will do 10 million, other guy will do 8 million. That's the kind of possibility.
Ramdev, you spoke about, you can firmly talk about the capital markets, and in that vertical, what will do well. Give us some ideas on what within the capital markets is expected to do well.
Yeah, again,
the AMCs or the broking companies, because you all are a mix of everything. But what segments, according to you,
wherever the guy is good, wherever the guy is leader, I mean, who is the volume leader, who is the cost leader, and hence the profit leader, he's the guy who is going to do well.
No, but
and every segment will have one big winner. Say like say mutual funds, which is going to be huge. Like right now, maybe it is 80 lakh crores, and I think in next 10 years it will be 800 lakh crores.
The mutual fund business.
Mutual fund AUM.
AUM, sure. 80 lakh crore.
Right now it is 80 lakh crores.
80 lakh crore.
In 10 years it will become anywhere between 600 to 800 lakh crores.
Wow. Okay. So that big is the TAM.
That big is the TAM right now. And after that 10 years also another 10 years there.
Okay.
So it is very scary to talk about that.
Sure.
So, but then I don't think the top 5 are going to change in next 5 years.
Sure.
So all of them are going to mint money.
Correct.
Unless they are completely mismanaged.
Yeah.
So all these top companies, they are managed well. So all of them have the same chance.
Yeah.
Now something is at 20p, something is 40p, something 35p. Now it is all depending on the leadership.
Yeah.
So where the leadership is good, and you think it is likely to remain good, I think those guys will win big.
Correct. Amruji, the other big thing was the big support for this market in the last, say, 2-3 years has been the retail money. The problem is in the last 18 months, the returns have been quite negative or flat. Are you getting a sense now that there's a bit of frustration, people are getting tired, the SIP flow can actually slow down or turn negative? Is that a risk for the markets?
Yeah, I mean it's all investor behavior, crowd behavior. I mean broadly still they are sustaining, but yes, it can slow down significantly. Say if they are bringing, say this thing SIP money, say 25,000-30,000, that might come down to 15,000 or 12,000 or whatever. That can happen. But see, the markets will not be made by who is coming and who is going.
Yeah.
Price will be made by how well my corporate world is doing.
Sure.
If my earnings fire up, then retail will come, foreigners will come, and HNIs will come. Everybody wants to buy.
Right.
But if companies are doing well, everybody wants to sell.
Sure.
So the real issue is not about what retail is doing. The real issue is what the corporate performance is doing.
No, which is fine. So you are expecting 15-16% kind of earnings growth, right?
I'm expecting 15%.
Which means like a 15-16% returns, but that will also be very, very selective, right? So in current environment, given so much of uncertainty, other asset classes doing good, is there a risk of the retail money which was helping the markets to float high, that can actually fizzle out?
See, on 12 months basis, something can do very well. Sure. But on a compounded basis, it is very tough to find equity kind of asset class.
Sure.
At around 12-15%, that's the index return.
Yeah.
If you are smart, you can make 18%, 20%. So those kind of possibilities are not there in many asset classes, and the amount of money it can absorb.
Yeah.
I mean, you can, I don't know, I mean, I've never bought gold or real estate, but they are very chaotic asset class. Yeah, I mean, like in real estate, yes, you can buy a land parcel and it might give, but to handle a 100-acre land parcel,
it's not easy, absolutely. And even entry exits are
But
tough.
Here, you can have a 10,000 crore portfolio and you don't have to come to office.
Right.
So, liquidity is T+1. Here, if you want a piece of land and you want to sell it, I think it's a Hercules task. So, I think what is important is to understand the power of equity, the compounding power of equity, and that 12-15% comes with the up and down both.
Yeah.
It's not that this downturn which is there right now recently is not part of that 12%. When you say equity is going to do 12%, it is actually going to do 20% and minus 8% of decline.
Yeah,
so right now we are enjoying the downside.
Sure. Ramdeji, the other big thing was the broader markets. It's been a bit of an underperformance in the broader market names in the last 18 months, 12 months, 6 months, one month. In all category, those have underperformed. You think, given that the earnings have been quite strong, even in Q3 for the broader markets, now time to look at the broader market names because Naren has opened up the small cap fund, Sunil Singhania of Abacus is launching a small cap fund. What's your sense? Is it time to now look at the broader market names?
Yeah, smart guys are doing the stuff.
Exactly.
You must take the cue from them rather than what I say. But basically, see, earlier when 2020 from the bottom when the market started rocketing at 20-25%, the broader market went at 40-50%.
Right.
So everybody loved that. Now, when the markets are correcting by, say, actually market is even now as we speak, year on year, Nifty is up by 10%.
Correct.
You can't complain.
Actually, year on year.
Year on year it is up by 10%.
Correct.
Year on year it is up by 10%.
Yeah.
So it's not that gloom or doom or anything like that. But broader market is probably down by 10-15%.
Exactly.
Okay.
So since September, the small cap index is down 15%. So,
ठीक है यार, you can keep doing the thing. But what I'm saying is the broader market also did extremely well.
Absolutely.
When it went from say 10,000 to 25,000, it was say 2.5 times. I think the broader market went up by 3.5-4 times.
Yeah.
So you have to give up some excess return, no?
Sure.
And that's what is happening.
Correct.
And if you are very unfortunate and you are stuck with some crazy stuff at the top, so then you have to pay for it. But otherwise, broader market will also cool down the moment the earnings start firing up.
Sure. The one sector which has done in general well, and that's worked for you guys as well at the AMC level, is the financials. The bank Nifty is up 6% since the beginning of the year, and it's been one of the best performing asset class. What's your view on the financials? Because I know you own HDFC Bank, you own ICICI Bank as well, some of those NBFCs as well. Broadly, is the financial in a sweet spot, at least in the very near term?
I think this is a golden period for the banking.
Sure.
They have the best possible book right now.
Yeah.
I mean, across the board, PSU, private, small, large, everybody has the lowest gross NPA and least net NPA.
Correct.
Coverage ratio is running at 80-90%.
Right.
So this is the best time. And now credit flow has picked up in last 7-8 months to more like 13.5%.
Yeah.
So in between it had come down to in single digit, but now it is 13.5%. So this is the first year of double-digit credit growth. So we are seeing more selective recovery in the consumption.
Right.
But as the credit flow remains sustained, 30% this year and then next 13 years, then you see the kind of chain effect of broadening of the corporate earnings and performance improving and things like that.
But what would be your favorite within the financials? You'll stick to the large private banks, or I think there is time to look
then
at.
You have to go about figuring out I would still go for the big ones like SBIs of the world. So wherever there is earnings growth and the multiple is reasonable, I don't mind buying them. If the earnings growth is 20% and the P multiple is 12, 13, 14, that's a great place to be in.
Amdiji, thank you very much for attending to CNBC TV 18. Thank you.
Hello and welcome to a special broadcast right here. I'm Ashmit Kumar. The West Asia war is nearing a week with no signs of restraint from either Israel, United States or Iran. Explosions were heard across Tehran after Israel carried out fresh attacks. Attacks were reported also in Israel as well, with the air raid sirens going off in Tel Aviv. More than 1,000 people have been killed so far in Iran, as per the state media. Israel, meanwhile, carried out a wave of airstrikes on Hezbollah positions in Beirut. Explosions were also reported in Bahrain and Qatar. Drones targeted Azerbaijan as Iran continued its retaliatory strikes on the Gulf nations. Iran's state media, meanwhile, has reported that Tehran hit an American oil tanker off the Persian Gulf. 3 Indian nationals are feared dead in 2 separate incidents involving attacks on merchant shipping vessels off the coast of Oman. The war has reached Indian Ocean. The US sunk an Iranian warship carrying nearly 130 Navy personnel near the coast of Sri Lanka early on Wednesday. US Secretary of War Pete Hegseth called it the first torpedo strike by a submarine on a warship since World War II. The Iranian warship was sailing back from Visakhapatnam after taking part in a naval event here in India. Iran's foreign minister said that the US will bitterly regret the attack. Foreign Secretary Vikram Misri, meanwhile, was at the Iranian embassy to offer his condolences on behalf of the government over the killing of Ayatollah Ali Khamenei. This was the first time in close to a week that India formally condoled the death of Iran's supreme leader. Crude oil prices, meanwhile, remain elevated despite President Trump's promise to provide insurance and military support to oil tankers attempting to cross the Strait of Hormuz. Back in Washington, the Republican-controlled Senate blocked a bipartisan resolution that sought to rein in Trump's war powers on Iran. Speaking at the White House, Trump said that he would rate the United States' war success at 15 on a scale of 1 to 10.
We're doing very well on the war front, to put it mildly, I would say. Somebody said, on a scale of 10, where would you rate it? I said about a 15. And we're going to continue to do well. We have the greatest military in the world by far. And that was a tremendous threat to us for many years. 47 years they've been killing our people and killing people from all over the world. And I think we have great support. And I think if we didn't do it first, they would have done it to Israel and give us a shot if that was possible. And if we didn't terminate the worst deal, one of the worst deals ever made, the Obama nuclear deal, I call it the Obama nuclear deal, where he gave everything to Iran.
Good relation with the Indian government. We are expected from our brothers to stand in these situations, and we are expected to all countries.
Well, the U.S. Deputy Secretary of State Christopher Landau is in New Delhi for the Raisina dialogue. He said that Washington wants to partner New Delhi's rise as it serves the interests of both nations. He believes that the next few years could lay the foundation for decades of strong U.S.-India cooperation. On West Asia tensions and energy supplies, Landau said that India should view the United States as a strong alternative energy source, adding that energy is a key area for deeper cooperation between the two countries. Meanwhile, Russian envoy in India stated that Russia is always open to supplying crude oil to India.
We are seeing some changes in the U.S.-India relationship, cooperation in defense and other areas that I think would have been impossible, some years ago. And I hope that that's an area that we can continue to lean into. I think the energy cooperation possibilities, again, are limitless.
Well, joining us now to discuss this with us is our panel. We'll be extending that panel in just a bit. But first up, we have Ambassador Shashank, former Foreign Secretary of India, joining us. Ambassador, thank you so much for joining us. First questions, before we dive into the politics of oil and then where we head from there, the first question I want to get a sense on is the diplomatic situation that came up on account of sinking of the Iranian warship not very far from India's coast. Does that put India in an embarrassing position diplomatically? Does that call into question the strategic autonomy that India has been championing for the last few years?
I don't think it's a question of strategic autonomy, but I am quite sure it's a very unfortunate situation that India was hosting a Milan exercise where so many navies were involved, the least could have been done to advise the Iranian Navy not to send the ship into the open sea, maybe take shelter either in India or Sri Lanka, and stay there for some time till the war was over. So we do not know what were the circumstances in which this torpedo was used against the naval ship. I'm not very sure whether the Americans had very clear-cut idea that it was really going to embarrass the Indian government and the Indian people. So I think it's an unfortunate development.
Speaking of a diplomatic tightrope, Ambassador, again, I do not envy the Ministry of External Affairs when it comes to managing this position that we are in. India, very close ties with Israel, also working towards a tight relationship with the United States, but historically has also had a significant relationship with Iran. And more recently, we've seen investing of huge amount of political capital behind the GCC countries. Again, is it a tightrope walk that India has to perform, or has India already chosen sides by being silent on the death of Ayatollah Khamenei for nearly a week now?
Ayatollah Khamenei is a respected leader of the Iranian people, and many people in India also have great respect for him. Therefore, the death of a leader like this should be mourned in India also. Only thing is that, yes, he was also seen as the leader who was promoting directly or indirectly the various terrorist organizations, and especially the terrorist act of 7th October, which was carried out by Hamas, was clearly condemned by the Indian government. So therefore, I'm not very sure whether it's a question of India throwing in its lot totally with the US and Israel, or is it a question of our own interest in making sure that terrorism is not condoned, has to be met at all levels. And we saw that while we were looking for support from the United States in anti-terrorism actions by India, we found that the United States actually supported Pakistan. So therefore, support of Israel was very welcome by the Indian government, and also not only support, verbal support, but also technical and meeting all kinds of partnerships in different areas, joint development, joint research, etc., which are very welcome. So I think there are many issues which have to be taken into account in this relationship. And with Iran, while we were developing Chabahar port facilities and also linking through Iran to Central Asia, to Afghanistan in particular, and we had received a special dispensation even from the United States for our transshipments to Afghanistan via Chabahar. But we found that actually it was not working out that well, because we had to stop and go every time, because the Americans would just tell us that they would put sanctions on the Indian companies which were involved in either buying oil from Iran or in using the Iranian route to go to Central Asia and other countries. So therefore, it was a very troubled relationship with Iran.
So, Ambassador, a tricky position that India finds itself in, again, India has invested significant political capital behind the GCC countries as well, which are on the receiving end as we speak of a barrage of missiles being thrown from Iran. But going ahead and exploring the dimensions with respect to oil, we also have with us Mr. Andon Pavlov, Director of Oil and Tanker Research at Kepler. Mr. Pavlov, thank you so much for joining us, being a part of this conversation. Let me begin. A lot of conversations within India are about what are the options on the table for India in terms of securing energy supplies. So before we dive in, first a sense, is India still buying Russian oil as we speak?
Yes, a portion of the Russian crude diet is still coming from the Indian crude diet is still coming from Russia, yes.
Just to follow that up, Mr. Pavlov, what we're hearing is that this is going to be an eventuality that India will have to square with in terms of turning towards Russia for oil. What I want to get a sense on is that how close are these supplies to India should India call out to Russia for support? We're getting to understand that there are, as far as these large tankers are concerned, there's inventory of about 10 million barrels. That's not very far from the Indian coast. Are you seeing reports of certain tankers or VLCCs, as they are called, moving towards India? Are you seeing any movement there?
As for towards India, I'm not aware of particular ones, but we are aware of a lot of vessels that are standing close to Indian shores at this point in time.
What is the kind of capacity that these vessels close to India have on board, should India need to call for support from Russia for their crude oil?
It would be sufficient to bring back Indian buying to where it was prior to the US-India negotiations, roughly speaking.
Mr. Pavlov, one aspect that I want to get a little color on is that Christopher Landau was here in New Delhi today. He made an overture on behalf of the United States that India should look at the US for support in terms of energy security. Meanwhile, earlier today, we also had the Russian ambassador express a similar tone to the Indian establishment, saying that Russia is always willing to support the energy needs of India. At this point, are both the options realistically on the table? Can US be seen as an energy supplier, especially in the near term, on account of the halt or the crisis that we're seeing at the Strait of Hormuz?
Right. The biggest problem here is the quality, right? What the US crude exports are is predominantly light crude that is not very well suited for what India needs right now. So the best bet that India had prior to the war was to scale down buying of Russian and turn to Middle Eastern crude. There is no viable alternative now to displace this crude from Russia with more US one, unless you're going to start seeing undesirable outputs coming out of the Indian refineries, because Indian refineries are predominantly configured to run on medium crude, such as the Russian one. So I think part of it could be more Russian, more US crude, but eventually we're going to end up in a situation where Indian refiners are going to start ramping up Russian crude imports.
Would it be fair then to summarize that in the absence of Middle Eastern crude, India will have no option but to be geared towards Russian supplies?
Well, no option is a strong wording. I would say a difficult situation is more accurate. No option means there are no technical options. I don't think that is the case. But it will be more expensive and it will be less suitable for the Indian refineries, absolutely.
Also, do you have any data that suggests what the inventory levels are with the Indian refiners, how long they can weather this storm as far as the Strait of Hormuz is concerned?
Yes, a little bit better than other countries. But as things stand, we anticipate that there will be eventually some run cuts across India because of the lack of suitable crude supply, to the tune of around 10-11% of current levels, which is quite substantial if you think about it. It's 400 KBD, if not more.
Sure. Right, Mr. Pavlov. We're heading into a very short break, but we'll continue this conversation with Mr. Pavlov from Kepler and Ambassador Shashank on the other side of this short break. Welcome back, Ambassador Shashank and on Pavlov. We are still on the issue of the crisis in Iran and the implications that it has for India going forward. Ambassador Shashank, let me come to you. The situation that India finds itself in terms of securing energy supplies, what does that mean when we look at it from a perspective of a wider India-US relationship? Today, the US Deputy Secretary of State said that we're nearing the finishing line when it comes to securing the bilateral trade agreement. Yet, as what Mr. Pavlov tells us, is that India will have very limited options and is more likely to be geared towards Russian oil. What fallout do you see as far as India-US ties are concerned?
There are two phases. One was when we were negotiating with the United States before the Israel-Iran war. And the second phase is now, after the war. So the whole scenario has changed, and we have seen many statements, even from Europe, that they would have to turn to energy sources from Russia. And for India also, it remains a very important alternative source of supply, while keeping in mind that the Americans are very touchy about this whole thing. But then there are 2 points. One is that this Iran conflict, and second is the Americans are keen that the Ukraine-Russia conflict should end. And there are two dynamics on which India has very little to say, but India needs about 85% of its energy supplies from abroad. And as Andon has been saying, that we have to make sure that our refineries can use that oil that we get. We will definitely try to get from Africa and from other parts of the world, but I'm quite sure that if oil is available from Russia and the Americans understand that the relationship with with India is a long-term relationship, and if they have their global ambitions of various kinds, India may fit in some way, but India also has to take care of its interests of the people. And therefore, any government in India will have to give that the first priority.
There have been reports of the US granting a waiver to sanctions to Rosneft's German subsidiary based out of Europe. Is that an indication that perhaps there is some wiggle room if India does want to continue buying Russian oil?
I think, Andon, you have to answer that question.
In my humble opinion, I think this is an indication. Yes. Also, just to point out one other thing, the European Union has been increasing its call to Ukraine to repair the Druzhba pipeline and resume flows of Russian crude into two Central European countries, Hungary and Slovakia. I think this is quite symptomatic of the status quo in this environment. Yes, security will eventually take priority over politics.
Sure. But since we have you, Mr. Pavlov, also a broader question with respect to oil pricing. Many analysts say that the surge in pricing, while there has been a considerable surge, it's not been as dramatic as what had been anticipated. There's a lot of confidence that the US will not allow this blockade at the mouth of Strait of Hormuz to continue. What I want to ask is that given what we've seen over the last 5 to 6 days, is that confidence misplaced, given as how Iran has shown conventional capabilities, has shown capabilities to strike at tankers? Just this morning, there were reports of a tanker just off the coast of Kuwait being struck. So is that confidence misplaced? Are we seeing a situation where this could stretch from days into weeks as far as the blockade is concerned?
Right. This is a great question. The big problem here is that a lot of countries, particularly across Asia, have very thin forward demand cover for crude, which basically means unless the strait is being opened in the next couple of days, given travel time, we're going to have to start seeing rationalizations in a lot of places. Vietnam, South Korea, Thailand, Singapore, among others. Even India would probably have to consider that option in the next couple of days. So yes, I think there is a real risk, and I think the market has been generally expecting a scenario in which closure of the strait was something too big to happen. Eventually, it will be opened. As we see, we are now in day 5 of the war. There really isn't much of an indication anything is going to happen. I think it's safe to say we will have at least a week or two of a disruption. I think any day increases the chances of this disruption being longer.
And in case that were to happen, that this stretches across weeks, what are the price levels that we're looking at as far as Brent crude is concerned, for example?
Well, let me give you one brief calculation here. The spike in jet cracks in Singapore as of the past couple of days, if crude were to follow the same trajectory as that, we would have been looking at crude oil prices in the region of $150. So really, the sky is the limit. I mean, if things start to get ugly in that area, in that market, we could start testing $100, I would say, soon. If no resolution, we could be going way above that.
Way above that, you've given us an ominous-looking figure of nearly $150 per barrel. Mr. Pavlov, one final question to you. There are reports coming from the Indian Petroleum Ministry which says that at the retail level, at the end user and customer level, there are no restrictions, there is no rationing, but there may be reprioritization of supplies to the industrial sector. With the blockade likely to continue over the next few days, do you see that countries like India will have to do more tightening of the belt, even when it comes to retail customers?
Initially, like if there is no resolution and the current impasse into Russian crude supplies from other places remains in place, we could be looking at a drop in Indian processing in the region of 10% of what's currently happening. So you can extrapolate this across the entire value chain, I think it's fair to say. Although it's also fair to say that the first thing that's going to happen is that clean product exports out of India will be eventually rationalized or banned before we start talking about an impact on the domestic market. So I would say, yes, 5 to 10% is a non-zero probability at this point.
Sure. Ambassador Shashank, I'll come to you for one final closing comment, that the situation that India finds itself in, especially that it has to navigate with the Gulf countries who are on the receiving end from Iran, which has been a long time associate country, ally, as far as India is concerned. How does India over the next few days navigate this situation with the Gulf countries?
No, while we stand with the Gulf countries, but we also know that Iran has been quite discreet in attacking the facilities in the Gulf countries. I mean, they are attacking mainly the American bases, the places where Americans stay, especially those from the Army and the CIA. I must say that they must be having fairly good information about the places where the American Army and CIA stay. So I don't think that is the priority to hit the people in the Gulf countries. But nevertheless, the Gulf countries will be suffering a lot because in case Iran is now widening the attacks on the oil resources and once again to bring back the oil resources or the energy back onto the pipe gas, etc., that will take several weeks and it will affect both India as well as the Gulf countries. But we are with them. We are taking all possible options for the, let's say, evacuation of the Indian people. But there are 10 million Indians living there. So they have to just protect themselves and the local governments have to protect their own people and the expatriates living there.
Right, Ambassador. Right, Mr. Pavlov. Thank you so much for joining us. No easy decisions here for India going forward, either on the diplomatic or on the energy front. But that's all the time that we have for it. It's a wrap on this special broadcast on West Asia War. More news and updates continue right here on CNBC TV 18.
Let's Talk Money.
Hello and welcome to a brand new edition of Let's Talk Money. I'm your host, Rupee Upadhyay. It's that time of the year. That time when the date tells us that the spotlight needs to be on women. And therefore, we in the media obviously do that. But you know, if you've been following this show, that a conversation on women, their well-being, their finances, their financial security is an ongoing conversation on Let's Talk Money. And hopefully, it's an ongoing conversation for you with your families as well. Well, as we get set to celebrate International Women's Day, yes, we will celebrate the date here on the show as well. And to help me do that today on the show, I have three women who are stalwarts in their respective fields. They're strong women. They definitely manage a lot of money, help clients deal with a lot of money, and they're here to help us move up the value chain. That's what I call this show. We are all well aware that as women, we need to be responsible for our financial destiny. But how do we do it? Sometimes it's easier said than done. The done is what we'll focus on the show this week. So let me welcome in our guests on the show. Arunima Jain, Head of Wealth and Family Office at Axis AMC, joins in. We have Devina Mehra, Founder and Chairperson and MD of First Global. Of course, we've had these conversations with Devina several times in the past as well. And Neha Pathak, Head of Trust and Estate Planning at Motilal Oswal. And you'll of course recognize Neha on the show as well, talking about all those important legal matters when it comes to money. Thank you so much, all three of you, for joining us on the show. And let's start by wishing each other a very happy Women's Day.
Yes.
Happy Women's Day to
you too. And happy Holi also.
Yes. Happy Holi as
happy
well.
Holi.
Yes, absolutely, because the country has been celebrating through two different dates. Ladies, first of all, I'm so glad that you could take out time from your busy schedules to be here for this conversation, because sometimes in person just works best. And before we talk about asset allocation and investments and savings, I want to start with absolute raw bare basics, right? So the stats are telling us that Indian women are more independent, a lot of women are working, a lot of women are investing, women are juggling these multiple roles. But I want to know from your experience in your professional spheres and personal spheres, whether that visible change indeed is happening, where a woman is allowed to be fully independent and fully financially secure. Neha?
So I would not say that it's fully there, but it's partially getting there. So there are people who are welcoming this with open arms. They are saying that let the women or the lady of the house have the investments in her name. Let the lady do the investments, be a part of the meetings when the wealth manager is meeting, plan for the family, how the investments should be done, how things should work out for the family. So yes, family inclusion is happening, but then at the same time, there are a lot of women who are not being included, or they don't want to include themselves. That's also one of the points.
So either it could be from the woman's end, that I don't want to bother with this, it's too technical, or it could be from the family side, saying that, look, you stay out of it. This is our turf. Devina, what are you seeing around?
Yeah, I mean, it is changing, but very slowly. And also we talk about investments in women's name. And you even use the word allow. See, have you ever heard of...
I used it very deliberately.
Yes, I know.
I used it with intent.
Yes, but that's what the point is. Do we ever say that are men allowed to manage their own money? So, that is the whole point, that the cultural conditioning is so strong right from the beginning. The money conversations happen with sons, not with daughters. The first time women think about money is probably when they're working and in their 20s. And therefore, they also are more hesitant themselves. So even I find that even when the so-called investment is in the woman's name, oftentimes the discussion is by the men, and they might even tell you that, yes, we want to invest and yes, we want to redeem whatever. But the message might come from the woman's email, but that they are not taking the final decisions. And this is a cause for me. So, because there's no independence till you manage your own money. I mean, it is as simple as that. So don't leave it to the men in the house. It's not that hard. Please take charge of your own money.
I completely agree with you. Arunima, what are your experiences, professional and personal?
Sure.
What do they tell you?
No, so I see some change, right? And as we were talking earlier, and I was pointing out that I don't see that change just today. I've been seeing that the women who are bold and the women who are more confident have been managing wealth for quite some time. I've seen my mother do it. I've seen my grandmother do it. So I think the onus is on us as well, that we have to be more confident. A lot of us would have seen that movie English Winglish. I'm sure a lot of you women in the audience have seen it.
And Sridevi helped herself, right?
Yeah.
She went and learned the language that she wanted to speak. So I think the onus is on women as well to learn about finances, to ask the family that I want to be involved, and to manage it well for themselves.
You know, before we get to the to-do section of this conversation, I just want to get your sense, Devina and Arunima, particularly you, both of you. Now with digital and so much of the financial industry moving to DIY and everything happening on the phone, has it made it simpler for women or has it made it more complicated for women? Because there's just so much choices, news, noise, investing, products. What do you think?
I think the access is more, which is good. So if you want to learn, if you have not had the opportunity to learn about finances, you can learn. But I would also put a caution there that don't be on either end of the risk spectrum. And too often I find women are either in fixed deposits and PF only, or they think they can become day traders, that now the children are gone, let me spend my time trading options or day trading. So don't do that either. Be in the middle and do a sensible asset allocation. As I say, money management is neither as simple nor as complex as you think it is. You get the broad asset allocation right, you're 90% of the way through. You don't need to know the magic formula for multi-baggers and news. Your husband doesn't know it either. You know, just because he talks in parties about it doesn't mean that they know it, because confidence does not equal competence. Always remember that the men in your life, and this is data also, that actually when women invest, their results are better, but men are more confident.
Sound better. maybe. But absolutely. So, Neha, okay, let's start with the bare basics. And I think it's probably simple to divide us women folk into two categories, right? There are women who are earning their own money, and let's draw up some sort of a framework for them in terms of, and that money might be shared as well. That's where it gets complicated. Shared with, parents who are dependents, shared with the family, with the spouse, and obviously being spent on children. So there's that, bucket of women. And then there are women who are anyway dependent on either their inheritance, spouse's money, or parents, and they're living in parents' houses or owning parents' assets. So first of all, is the approach different for each? I'm guessing yes, because it's that conversation of my money versus your money versus dad's money versus husband's money. And that's where the complications begin.
So actually, it's not so complicated if you just put up some initial framework for yourself. So if you have a framework for yourself that it is money, it's not ours, theirs, mine. Let's put a framework. Do I know where the money is being invested? Simple things like insurance. Now, if you are working, you have health insurance from the company. There are women who are not working. Do they have health insurance? Do they have their own personal insurance? Are they relying on their parents or their spouse's health insurance? Now, these are small, basic things, but one needs to know about it. Other things, I am inheriting from my father. Do I know what my father's assets are? So that's a simple, basic thing. Again, I need to understand that what is that my father owns, or my husband, what does he own? Do I own any part of it? Do I, if I do own that, is it a house? Is it an investment? Am I a nominee? Am I a joint holder? Now, in that case, we need to figure that woman has to understand that this is a basic step. These are basics that one needs to get clear.
Yeah. At least be aware.
Be aware.
Ask the questions about where is the money, whose money or whose asset it is, and whether you have any part in it or not in terms of either a nominee or a joint holder. And the two are very different. And if you go back to earlier episodes, the one that we've done with Neha, nominations are not equal to ownership of that asset. So be awareness about things like that.
Correct.
So Arunima, let's ask you that question. The approach towards financial self-reliance and financial independence for women who are earning their own money and women who happen to be dependent.
Sure. So I'll
how are the two
start
different?
With women who are dependent. I would say not earning is not equal to not owning, right? So we need to get that very clear. If you're not stepping out of the house and earning money, does not mean if an asset is being bought, you're not a joint holder. So you have to own each asset, whether it's a house where you live or the mutual fund investments that your husband is doing. You have to be aware and you have to have those conversations from day one. What is the life cover that your husband has? I've seen in many cases that husbands are not covered. And, you know, and then it's sudden, you know, if something happens to the husband, you know, there's a big issue in terms of kids' education, retirement, etc. Like health insurance, you know, if you're dependent on your husband's policy and tomorrow your husband is out of job, then you don't have a health cover because, you know, that policy is from the company where he was working. So these conversations need to happen. There needs to be an asset register, both for your physical assets as well as for your digital assets, right? There are many a times that women do not know how many accounts the husband has. He might have so many broking accounts. Is she a nominee there? What are the passwords in case, you know, there is some issue? So a digital register for assets and a physical asset register is needed. And of course, will is something that is needed. So this is what I would say for women who are dependent, owning assets. Also, do your personal SIP. Today, like you earlier asked, you know, you have digital ways of investing. You have simple products like mutual funds. You don't have to do complicated investments. And women are used to saving. Whatever money they have, out of that also they are used to saving some money, right? And that usually is lying somewhere in the house or, you know, it's in an FD. So I would also recommend that they have a SIP where the folio is not owned jointly. The folio should be only in their name and all their personal rainy day saving for 6 to 9 months at least of expenses should be in that folio. And then they can have some goal-based folios as well for the family.
Okay. Devina, I'm going to ask the hardest question to you because this is the hard part, right? Making sure that even if you are, you know, a part of a family, you know, whether as a daughter, whether as a wife, a mother, obviously there are some obligations and contributions, but how do you still ensure that you yourself are secure? Because anything can happen tomorrow.
Yes. So first of all, I would say one of the decisions that women take without thinking about it and which has the greatest consequence for their future health and their financial health is either giving up their career or going into the slow lane in their career because of family obligations. I mean, currently the situation is, I read about somebody who was divorcing because his mother was unwell and he wanted his wife to quit her job and she refused to. I mean, now just think about if the wife's parent is unwell and she asks the husband to quit the job. I mean, how absurd that sounds. So every time, you know, you reverse the gender and it sounds absurd, you know where that's coming from. So this is one thing I must tell people, that if at all you are making that change, then at the very least make sure 50% of your husband's salary is coming to your account. Only then you are I mean, it's not funny. I mean, women end up later in life and find there's nothing in their names, you know. So that's the whole point, that this is, and this I actually heard of Aparna Sen's daughter doing 40 years ago, that if you want me to change cities, 50% of your income comes to me. So, you know, so that's, you have to put your foot down in the beginning, because as I said, too many women drift into this decision without thinking it through. Also, many working women later in life find that, oh, the way the household was being run, I was doing all the daily expenses or monthly expenses, and the assets were all being built out of husband's income and mainly in his name. So, you know, these are hard, uncomfortable conversations to have, but you have to make sure that the assets are in your name jointly and not as nominee. A nominee can be changed anytime. A financial planner told me that my male clients come to me, you know, at various stages, but the women almost always come to me when they are widowed or separating. Because they have not thought of their financial health prior to that. So.
Very well said. And I think that is the change that we are trying to sort of champion through media, through shows like the one that you're watching right now, that do not wake up and think about money when it's too late, when disaster is already struck. Think today, think as of yesterday. And on that note, let's take a very quick break. So now that we've established how you need to think about money and how you need to have those conversations in the family, the next is the easier part. The way you should invest, the way you should look at different instruments in the market, your asset allocation. That's still easier. We'll talk about that after the break.
Let's talk money.
Welcome back here with the Women's Day special edition of Let's Talk Money. And here, more than talking about the money itself or gold versus silver versus equity, the conversation is about awareness. The conversation is about how you need to really take charge of your own security and your financial destiny, because no one else is going to do it for you. We are, of course, in conversation with Devina Mehra, with Arunima Nain, and, of course, Neha Pathak from Motilal Oswal. So, ladies, I think we've established that those hard conversations need to be had. There is no beginning without that. Now, let's take it to the next step and, talk about both the buckets. So, let's start with women who are earning. What should the checklist be for them, Arunima? And in terms of basic investments and also that division, which I asked Devina as well, that, right, there's a pool of capital going towards joint finances, etc. But what should be that proportion that you want to save in your name? Just some, framework will help.
Sure.
Yeah.
So women who are working, of course, will contribute towards the household expenses as well. The ideal way to do is open a joint bank account along with your husband. You both decide, how much each will contribute towards the household expenses. Apart from that, whatever you save has to be managed and invested by you. Right? And there I see a lot of women not wanting to do that, not wanting to take that work on themselves. Like Devina was saying that, they feel that their husband knows more than them about finances. The husband is talking about stocks all day. Does not mean that he knows more than you. And there are simple ways of investing now. You do not have to be a stock trader, or you do not have to know technical charts to invest. There are simple products like mutual fund, and we are seeing women participation in mutual fund increasing. 1 out of every 4 folio now belongs to a woman. So we've already seen that going up. And I will encourage women to use mutual funds. And there are all kinds of mutual funds. Of course, you don't have to take more risk. If you love investing in gold, you can invest in a gold fund. If you love investing into, safe instruments, then there are debt funds. So there are all kinds of funds. Options. You don't have to, investing sometimes women feel is associated with risk. And I have seen personally women being more risk averse. So I think they need to understand and educate themselves more in terms of investment risk, and start managing their savings themselves. Right?
Devina, so that's on the investment side, and mutual funds offer a great route now, very simple route to start securing yourself. I want to ask you about assets as well and creating assets. Now, in the event that you realize that a lot of assets are already in the husband's name or the father's name, and there's a brother, and there are too many complications, and you want to have your own assets as well, first of all, would you recommend that? Will you tell that to your clients, whether it's a property, whether it is any other kind of physical asset? How should a woman think about it? Or is it just best to keep parking some money in those SIPs? Retirement security, those longer term goals that we think about.
So, when you're talking physical assets, I'm not a great one for advocating real estate assets, because that is a very illiquid investment. So one house which you live in has another consideration, but real estate as investment has a major problem that if you want the money, even within 6 months, it will qualify as a distress sale. And actually, RBI data shows that the compounding in real estate has been way below what it has been for equity, in spite of that higher illiquidity risk. The thing is that what women often do is that they're good at saving, but they are not investing with intention. And I will tell you what happens, that if you put 1 lakh a year in, let us say, a bank account for 30 years, at the end you will have 75 lakhs. If you put that same 1 lakh in a multi-asset portfolio built through, let us say, mutual funds, which compounds 9.5%, you'll have 1.6, 1.7 crores. If you invest in something that compounds 12% plus, more equity oriented, you'll have 3 crores. So 75 lakhs and 3 crores is the difference.
Huge difference.
It's a huge difference. So you cannot run away from risk assets absolutely and say I'll be 100% safe, because then you don't get the compounding. So you have to take some risk, and the caveat to that is that if you take risk, yes, it's not an if, you will at some point, if you are in, for instance, equity oriented assets, you will have a loss. And whether you're investing directly or through mutual fund, PMS, whatever, you will have a loss. And oftentimes the woman's self-talk and the talk in the family is, you didn't know this, why did you get into it? So, and whereas when the man loses money, the woman doesn't want to disturb the peace in the house. And many men, when I have men in the audience, they tell me, how will she even know that I've lost money? I'm not going to tell her. So,
that's where we come to point number 1. Ask all the questions. Make sure everything about the house finances. Yeah.
Yes. So, don't be at either end of the risk spectrum, but it is much simpler than what you think it is. And be ready to take some losses in the middle. And whatever you need as an emergency fund, obviously, should never be in an equity-oriented asset. Equity-oriented assets should be money you don't require for at least 8 to 10 years, because there is no buddy who can tell you what an index will do in 6 months or even 2 years.
Neha, let's talk, some of the legal points which are important to at least know from the top of our heads, like the one on nominations. And I think it was a revelation for a lot of people who watched the show as well, that if you're a nominee, it doesn't mean that you get the asset.
Correct.
I mean, you don't own the asset. Anyone else can be made a nominee as well. So from a legal standpoint, what are the 2 or 3 things that every woman must be aware of, whether it is inheritance, whether it is, an unforeseen situation like a divorce? Just what are the 2, be aware of these things kind of a list?
See, there are quite a few, but I'll list down few of them. One is, like we talked about it earlier, health insurance is one of the things. But you should be aware of what are the assets that are held by the family. Very, very important to understand, because in case of any eventuality, be it death, divorce, separation, anything, at least you're aware where are you supposed to get these assets from and from whom. So that, and the location of these assets. Where is it located? If you have a bank account with which bank, if there is a locker, are you a joint holder or a nominee, or you're the owner? You should be aware of things like this. Second thing is, as Devina and Arunima said, that you need to have that certain amount in your name. Make sure that at least 6 months of that is something that is there in your name. So it's simple, like how you talk in the flight. They tell you in the flight that secure yourself before securing others. So you need to have your security in place. Third is, if there are any wills, trusts, nominations, you should be aware. And if the nominations are there, updated. Be in any asset class, real estate, investments, anything. Have that updation of nomination in place. You should be aware, if you are signing documents, you should be aware that how are you exposed? Where is the risk that you have taken? Has your husband or father taken a loan? So how badly are you exposed? How badly is your credit score going down, or is it going to be maintained? If the loan is not paid, how badly are you getting into any kind of trouble? Plus, you should be aware of the fact that there are other members in the family. How are they taken care of? Are they well supported? With your husband's money, with your money, how are they supported? And how are you planning your retirement? Very important. Old age is the most important part. You need to plan for your retirement well. So those golden years should not be about asking for funds.
Or asking about where's the will, where's the bank account, where's the password. The where should be well taken off, care of. Great conversation, ladies. So quick 10 seconds to each one of you. Your 10-word or whatever 15-word advice to all the women out there. Arunima, what would it be?
So I started with that. I will request all women to be more bold and confident, help themselves, learn about investments, strictly have an asset register in the house, which takes care of both financial and digital assets and physical assets.
Devina?
Take charge of your finances and don't be at extreme ends of the risk spectrum.
All right. And Neha?
Look out for your security first before going and helping your husband out.
Strong statements by strong women, and there's no other way to be. We have to be strong women for ourselves first, and then of course for our families. Fantastic conversation. Thank you so much for taking out the time and spelling this out as clearly as one possibly can. I think it's going to be a very helpful sort of advice, and it'll go a long way for all our viewers, all the women who are watching, and even the husbands and the fathers, everybody who's watching this show.
Everyone who has women in their lives.
Absolutely. Thank you so much. Well, viewers, do keep sending us your feedback. Tell us how you found this conversation. Your comments are always very, very interesting, and we'll see you with another theme next week on the show. Thanks for watching.
Let's talk money.
Good evening. Thanks for joining us on Business 360. I'm Shriram. The headlines that we're tracking for you this evening. The US and Israel continue to bomb Iran as the war in West Asia enters day 6. Iran's foreign minister warns of terrorist movements along the Iraq border amidst reports that the US was seeking to arm Kurdish forces. Iran state media reports that Tehran hit an American oil tanker off the Persian Gulf. Iran's foreign minister says the US will bitterly regret attacking its warship in the Indian Ocean. The ship was a guest of the Indian Navy and was attacked in international waters while returning from an event in Visakhapatnam. Opposition leader Rahul Gandhi questions the silence of the government, saying the war has reached our backyard. India feels the jitters as Iran claims control of the Strait of Hormuz, bringing energy shipments via the route close to a grinding halt. The world's largest gas company, Qatar Energy, invokes a force majeure, notifies buyers, including GAIL, that it may be unable to meet supply commitments. Gujarat Gas cuts its supply to industrial consumers by half. The Sensex and the Nifty snap a 3-day losing streak. Mid-caps outperformed. The Rupee gains more than 50 paise against the dollar after strong dollar sales by the RBI in the offshore markets. An interim trade deal between India and the US is close to the finish line, says the US Deputy Secretary of State Christopher Landau, who's in New Delhi. Also says India should look at the US as a strong alternate energy source. China signals an era of slower growth, sets GDP growth target for this year between 4.5% to 5%, which is the lowest since 1991. China's GDP grew at 5% last year, meeting the official target. Vodafone Idea's AGR dues to the government could drop by around 60%. Sources say officials are in the process of completing the reassessment of the overall dues before the end of the month. The Supreme Court warns against strategic litigation by unsuccessful bidders under the bankruptcy law for a second shot. Says commercial wisdom of the Committee of Creditors must enjoy primacy and cautions Company Law Tribunal against expansive scrutiny. It is now official. JDU leader Nitish Kumar files his nomination for the Rajya Sabha elections, clearing the decks for a new chief minister in Bihar. Promises full cooperation and guidance to the new government that will be formed in the state. The new BJP president Nitin Nabin also files his Rajya Sabha nomination. Nepal goes to the polls 6 months after Gen Z-led protests toppled the government. 65 political parties in the fray for 275 parliamentary seats. 35-year-old rapper turned politician Balan Shah takes on KP Oli on the veterans' home turf. But the top story this evening, the war in West Asia now into day 6 as the US and Israel continue their military campaign against Iran. The death toll has crossed 1,000. Explosions were reported across the Islamic nation after Israel and the US launched a new wave of strikes. Israeli forces said air defense systems were activated after detecting a fresh barrage of missiles fired from Iran. Israel continues what they called their bombardment of Iran-backed Hezbollah positions in Beirut. Iran has already warned of what it calls complete destruction of the region's military and economic infrastructure. The country's state media reported that Tehran hit an American oil tanker off the Persian Gulf. Multiple explosions were heard across Qatar, Bahrain and Azerbaijan. 3 Indian nationals are feared dead in 2 separate incidents involving attacks on merchant shipping vehicles off the coast of Oman. Meanwhile, back in Washington, the Republican-controlled Senate backed President Donald Trump's military campaign against Iran. Lawmakers voted 53 to 47 to block a bipartisan resolution that sought to halt the air war and require congressional approval for any further hostilities against Iran. Speaking at the White House, Trump said he would rate the U.S. war success at 15 on a scale of 1 to 10.
We're doing very well on the war front, to put it mildly, I would say. Somebody said, on a scale of 10, where would you rate it? I said about a 15. And we're going to continue to do well. We have the greatest military in the world by far. And that was a tremendous threat to us for many years. 47 years they've been killing our people and killing people from all over the world. And I think we have great support. And I think if we didn't do it first, they would have done it to Israel and give us a shot if that was possible. And if we didn't terminate the worst deal, one of the worst deals ever made, the Obama nuclear deal, I call it the Obama nuclear deal, where he gave everything to Iran.
And the United States has sunk an Iranian warship carrying nearly 130 Navy personnel in the Indian Ocean near the coast of Sri Lanka. U.S. Secretary of War Pete Hegseth took credit for the attack, boasting about what he called the first torpedo strike by a submarine on a warship since World War II. The Iranian warship was sailing back from Visakhapatnam, where it took part in a naval exercise at India's invitation. The Indian government and the Indian Navy are yet to make any official comment on this incident.
Led by Lieutenant Jeffrey Matthew.
These are Iranian Navy personnel marching on the street of Visakhapatnam on the 19th of February. They were in India at the invitation of the Indian Navy to participate in International Fleet Review and a multilateral exercise called Milan 2026. On the 17th of February, the Eastern Command of the Indian Navy extended a warm welcome to the warship and its crew on social media, saying it reflects long-standing cultural links between the two nations. On the 4th of March, as the warship was sailing back to Iran, it came under attack. A torpedo attack by the U.S. submarine sunk the warship near the coast of Sri Lanka in international waters, effectively bringing the war in West Asia to the Indian Ocean.
Their Navy not a factor. Pick your adjective. It is no more. In fact, yesterday, in the Indian Ocean, and we'll play it on the screen there, an American submarine sunk an Iranian warship that thought it was safe in international waters. Instead, it was sunk by a torpedo. Quiet death. The first sinking of an enemy ship by a torpedo since World War II.
Iran's Foreign Minister Abbas Araghchi has warned the U.S. will bitterly regret attacking the warship, terming it as an atrocity. He said the ship was a guest of the Indian Navy and was struck in international waters without any warning.
We have a good relation with the Indian government. We are expected from our brothers to stand in these situations.
Sri Lankan government says more than 30 injured Iranian Navy personnel have been rescued. More than 80 dead bodies have been recovered. Opposition leaders in Sri Lanka allege the country's sovereignty has been violated by the US. They claim any military action at an exclusive economic zone is against international law. Leader of opposition in the Lok Sabha, Rahul Gandhi, questioned the silence of Prime Minister Modi, saying the conflict has now reached India's backyard. Bureau Report, CNBC TV 18.
And as the war continues to escalate, Iran has officially denied launching a missile towards Turkey. Iranian state media said the country respects Turkey's sovereignty and rejected claims that any missile had targeted Turkish territory. Spain, meanwhile, has pushed back against claims from the White House that Madrid was cooperating militarily with Washington in the war against Iran. The denial comes after President Trump threatened to use trade measures against Spain over its position. As the conflict deepens, Anthony Albanese said Australia has deployed military assets to the Middle East as part of contingency preparation. Meanwhile, crude oil prices remain elevated despite President Trump's promise to provide insurance and military support to oil tankers attempting to cross the Strait of Hormuz. This statement has come after a warning from Iran's Revolutionary Guard to attack ships that attempt to cross the strait. China has reportedly urged refiners to suspend fuel exports. According to Reuters, China has asked companies to stop signing new contracts to export refined fuel. The government has also urged companies to try and cancel shipments that have already been committed to. Now, the Indian government is feeling the jitters as Iran claims control of the Strait of Hormuz, as it has brought energy shipments via the route close to a grinding halt. Sonal Bhutta joins us now with more details. Sonal, what does this mean now for India's energy demand and energy security?
You know, during geopolitical concerns, we usually speak about crude oil prices, crude oil supplies, but gas this time could be a bigger issue for India, and not only India, other Asian countries as well. Let me take you through the news first. Qatar Energy announced force majeure to affected buyers after announcing a halt in production last week. They indicated that the supplier can suspend deliveries without penalties. This is according to the contract, of course, and Qatar is one of the biggest producers of gas in the world, and this news has come in as a shock for the entire industry as well. They have formally notified the buyers that they will be unable to meet supply commitments due to circumstances which are outside their control. Now, if we talk about supplies coming in from Qatar or UAE to Asia, let's look at the numbers first up. India gets 59% of its total LNG requirements from Qatar, which is around 29% of its total gas requirements. Taiwan has 37% of its total gas supply coming in from Qatar or UAE. Bangladesh has 60% of LNG supply, 20% of total supply. China has 31% of LNG supply, 7% of total supply. The total supply percentage is lower because they do have a lot of domestic production as well. For Pakistan, it's 99% of LNG imports. And if we talk about the Strait of Hormuz, by end of February 2026, 91% of year-to-date transactions or deliveries went to Asian cargoes. So that was up from 81% in 2023 and 89% in 2025. So that particular strait is extremely important for gas passage to the Asian countries. Now do remember there has been an impact on Indian companies as well. For instance, Gujarat Gas announced that they will be cutting gas supplies by 50% to their industrial customers. GAIL said today that they are not getting any gas under contractual agreements from Qatar because of this force majeure. We did speak to Fertilizer Association of India today as well. They said there has been no problem with supply till date, but if the conflict continues, they will see a big problem because their major raw material is gas when it comes to production of urea. And this will have ripple effect when it comes to household gases, LPG. We've not seen that yet because government could prioritize that and maybe increase allocation from domestic gas quota. However, if this conflict continues, there could be a bigger worry. So gas supplies will be the key to watch out for if this conflict continues.
Sonal, many thanks. And staying with that, government sources believe that there will be no cuts or rationing of cooking gas and fuel for consumers. Sapna joins us now with more details. Sapna, so for the retail consumer, unlikely to be any cuts or rationing, but for industrial users, there could be reprioritization, quote unquote, in the government's words.
Absolutely. So reprioritization of gas supplies is definitely an option that the government, kind of retains at its end. It may be required to exercise that. We are aware of the kind of force majeures that have come into place, especially with the disruption of the, the LNG supplies from Qatar. Also, however, we need to keep in mind the fact that the retail consumers are unlikely to be impacted with any kind of a reprioritization, so to speak. It's the industrial users that may get impacted. There are already some reports suggesting that. However, within that also we are given to understand, within that bracket also, we are given to understand that the farm sector is not going to be impacted. It's a priority sector. So I suppose farm sector would also, kind of entail use of fertilizers. So all of that. So of course, but these are decisions that have yet to be taken. This is just a kind of a suggestion or kind of an option that the government is retaining at its end. Sources also indicating that the administrative ministry, which is MOPNG, they will not be taking these decisions alone. They'll have to be in conversation with, say, the fertilizer department or the Ministry of Chemicals and Fertilizers. Also, GAIL is going to be the coordinator for all of this. So we'll have to wait and watch and see how that priority allocation ladder really actually works out. Coming back very quickly to the retail consumers here, as of now, at least top government sources are very clear that absolutely no question of any cut in LPG supplies, cylinders rather, or any kind of an impact on the individual consumer of CGD. So basically, you are talking of PNG and CNG. So their individual consumers are absolutely unlikely to be impacted. However, these are early days. We'll have to wait and watch and see what really happens on that in that Strait of Hormuz. There are also indications that have been given by government sources that they are in touch with all the top global crude oil suppliers. They are rather the government sources, the Indian government sources also indicate they are in conversation with US authorities to try and work something out in terms of the insurance cover available, or rather not available at the moment, but try and make it work for the transit of vessels in Straits of Hormuz. So all kinds of stakeholder discussions are on, right from the Prime Minister's level to the administrative ministries which are concerned in all of this. So we'll have to wait and watch and see how the situation pans out. One disruption has come in terms of the LNG supplies from Qatar, but none expected beyond that, at least for individual customers of CGD as well as LPG.
All right, Sapna, many thanks for joining us. Let's take stock of the market action. Asian markets recovering after a massive sell-off. South Korea's Kospi staged a sharp rebound today, jumped as much as 12% intraday. Japan's Nikkei also rose nearly 2%, and stocks in Shanghai closed marginally in the green. And back home, the Lal Street snapping the three-day losing streak, with the frontline indices gaining over 1% each. The Nifty closing above 24,750. Mid-caps outperformed, but the banks underperformed. The blue chips, except for IT, all sectoral indices closed higher today. The rupee recovered over 0.5% to end at 91.60 against the dollar. Strong dollar selling by the central bank helped the currency counter most of yesterday's fall. A weaker dollar index and strong equities aided sentiment, so a sharp pullback there for the dollar rupee. Now, the U.S. Deputy Secretary of State Christopher Landau says a trade deal between India and the U.S. is close to the finish line and could unlock huge economic potential for both nations. Speaking at the Raisina Dialogue in New Delhi, Landau said India should look at the U.S. as a strong energy source. Take a look.
We are very excited about the trade deal that is almost at the finish line now, and think that that can be the basis for really unlocking almost limitless potential. We are seeing some changes in the U.S.-India relationship, cooperation in defense and other areas that I think would have been impossible some years ago. And I hope that that's an area that we can continue to lean into. I think the energy cooperation possibilities, again, are limitless.
That is the Deputy Secretary of State, Christopher Landau, there on energy and the deepening of the energy partnership between India and the U.S. Remember, the U.S. has insisted that India commits to buying no Russian oil. In a setback to the Trump administration, a U.S. federal court has ruled that companies that paid tariffs are in fact entitled to refunds. The court added that the government collected over $130 billion in tariffs and refunds, and that could in fact amount to $175 billion. Speaking to CNBC yesterday, U.S. Treasury Secretary Scott Bessent said global tariffs will be raised from the current 10% to 15% sometime this week. He added the tariffs will be back to their old rates, that is pre the U.S. Supreme Court ruling, within 5 months. Take a look. President Trump has officially nominated Kevin Warsh as the next Federal Reserve Chair. If confirmed by the Senate, Warsh will succeed Fed Chief Jerome Powell for a 4-year term. However, Republican Senator Tillis has said that he would block Warsh's nomination from proceeding in the state until a federal criminal investigation of Powell is dropped. China signaled an era of slower growth. It has set a GDP growth target for the year between 4.5 to 5%, which is the lowest since 1991. China's GDP grew by 5% last year, meeting the official target. CNBC's Elaine New brings us more.
According to a report seen by CNBC, China has set its growth target at a range of 4.5 to 5%, so trimming slightly its growth target compared to last year, which investors say will lower the pressure for a broader-based stimulus. Meanwhile, we're also getting the CPI inflation for this year at around 2%, the same as last year, and a key metric many investors are focused on, the fiscal deficit ratio, is set at around 4% of GDP. That was largely seen as the base case and is the same as last year as well. While defense spending is set to rise 7% in 2026 versus a slightly higher 7.2% in 2025.
Well, that is the latest from China. Up next, Vodafone Idea's AGR dues to the government could drop by about 60%. That and more when we return. Morgan Stanley has laid off about 3% of its global workforce, which translates to roughly 2,500 employees. The job cuts span the bank's key divisions, which include institutional securities, wealth management and investment management. The move is said to be driven by strategic priorities and individual performance. Amazon has laid off several employees across its robotics unit. According to Reuters, this round of firing will impact at least 100 employees. This comes after the company cut around 16,000 jobs earlier this year. Now, the telecom department has almost completed the process of reassessing Vodafone Idea's AGR due. Sources say the company's license fee may fall by about 60% after the reassessment. Ashmit joins us now with more details. Ashmit, what could this now mean as far as Vodafone Idea is concerned?
Well, the latest that we're picking up from the DOT, what sources are telling us is that there is a process for reassessment of the AGR dues, which are already underway. The first leg of this process is the field offices. License fee is calculated as a part of dues that are coming in from individual circles. So the field offices of the DOT have done this initial reassessment. The license fee component of that, the reassessment has been completed as far as the field offices are concerned. This, of course, is subject to a final review and then final call being taken by the cabinet-approved DOT committee. That is yet to happen. But at least from the field officer's perspective, the reassessment for the license fee dues has been completed. We're given to understand that on accounting for various computational and arithmetic errors, the license fee dues for Vodafone Idea could be lower by as much as 60%. Now, here are the caveats which are important to bear in mind. Number one, this is not a final call taken by the DOT committee. This is the field offices that are communicating their recommendations from individual license circles back to the DOT. That's one. Number two, the process that has been completed so far is only pertaining to the license fee. Bear in mind that the total AGR demand had accounted for both the license fee as well as the SUC. And that's the third aspect to bear in mind. The SUC exercise, the spectrum user charge component of that, the reassessment for that is yet to be undertaken. The broad timeline that sources are telling us is likely the end of month, by March 31st. That's when a better picture will emerge with respect to both license fee as well as the SUC component. But for now, the field office is reporting that the license fee dues for Vodafone Idea could come down by as much as about 60%. Back to you.
All right, Ashwin, many thanks for joining us. And with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC TV 18. Stay tuned. We're back in a minute with more. idea of Ather actually happen?
So Swapnil had started this group called Ather Energy in second year of college. So we started building an electric scooter to demo our battery pack. And I remember like me and Swapnil would do high-speed demonstrations on it on the campus roads, just to try and hook somebody that बहुत अच्छा scooter है, must drive करता है. Nobody cared about the battery, but people fell in love with the vehicle.
The EV space in India is a graveyard of companies and largely startups that are either have wound up or are in the process of winding up. What choices did you make to avoid that?
It'll be very hard to beat a Honda on quality. They literally wrote the book on it. Or a TVS on manufacturing excellence, or a Hero on scale, or a Bajaj, Hamara Bajaj, Desh Ki Dhadkan Hero. What finally clicked for us is, none of them actually want to be a product-first company. They're great businesses, but nobody's trying to be a bit of an Apple here.
So what was it like getting the people to buy into your story?
If you were building a race car at college, and there were a lot of these teams building race cars, Ather's the team to join.
Your competitor, pretty much across from you in Bangalore, has a very different approach to things.
So many of us find this alien that ये क्या फालतूगिरी कर रहे हो, बस फटाफट कुछ भी निकालो यहाँ से. I'm like, कुछ भी निकाल के, you're not gonna build a monster of a product company.
What would you like the government to redo as far as PLI is concerned?
We got to find ways for PLI to support and not push startups out.
Is there a list of what you won't do?
If you find us basically announcing stuff that are super easy, super replicable, super standard, I think there's something going wrong. So that's the one to avoid. Do the hard stuff.
Hello and welcome to Young Turks Reloaded. I'm Shireen Bhan. Well, joining me on the show today, a company that was founded in 2013 at IIT Madras, Ather Energy began with a bold decision to build a smart software-defined electric scooter in India, designed entirely from scratch in India. Today, it commands an over 19% pan-India market share in Q3 of FY26, delivered its strongest ever quarterly performance with revenues of 995.7 crores, up 53% year-on-year, and sold nearly 68,000 units in the quarter, clocking a 50% growth. Nearly 90% of its key components and 100% of its software stack are built in-house, with almost half of its workforce and close to 15% of its revenue invested in R&D. Software and non-vehicle revenues now contribute about 14% of total income, strengthening margins as the company moves closer to break even, all without PLI benefits. As Ather prepares its lower-cost EL platform and expands capacity, the larger question is, can India build globally competitive deep tech hardware champions? Joining me to talk about all of that and more is Tarun Mehta, the co-founder and CEO of Ather Energy. Tarun, it's great to have you. Thanks very much for joining us on Young Turks Reloaded. Before I talk to you about the present, I want to travel back into the past. You were very comfortable with the idea of becoming a consultant. That's what you wanted to do. You decided to take up a job at Ashok Leyland, and Ather was not part of the plan or the vision board, was it?
Oh no, it actually goes beyond that. In college, we joined an entrepreneurship club, and our understanding of what entrepreneurship was quite bad at that point.
What was the understanding?
To get into an IT company, get a job in an IT company.
That was it?
That was it. Tried really hard to dress up my resume to sort of, get all the ticks to get that consultancy job. But I was really lucky.
That it didn't happen?
Didn't happen. So...
You think if that had happened, you wouldn't be here today?
Oh, absolute. Golden handcuffs.
Yeah?
No chance.
No?
No chance.
So let's now move forward to the fact that you decided to first join Ashok Leyland. And then how did the idea of Ather actually happen?
So me and Swapnil, my co-founder, so Swapnil had started this group called Ather Energy in second year of college.
Okay.
It had like a bunch of young students, bunch of first years and him like trying to do something. I joined them in the second year.
Okay.
And then very quickly everybody else left. So it was just me and Swapnil left. And we were trying.
You pushed everybody out.
No. So the two of us are the only folks stuck with this idea and who continue to romanticize the idea of starting an energy company in India. So we want to come back to this idea, Ether. We'll just figure which idea brings us back. And very quickly, we had this idea of battery packs. We figured we'll actually be an energy company. We'll just build battery packs for other OEMs and maybe sell them electricity, be a genuine energy company. Couldn't find a single OEM who would buy the battery pack because nobody wanted to build an electric vehicle.
Yeah.
So we started building an electric scooter to demo our battery pack. In fact, I remember like me and Swapnil would do high-speed demonstrations on it on the campus roads, just to try and hook somebody that बहुत अच्छा scooter है, must drive करता है. Let me understand more about the technology. Nobody cared about the battery, but people fell in love with the vehicle.
And that's how the mobility side of the story started.
Yeah, so, and that made us realize that as much as you want to be an energy company, we actually like the idea of building a product, and building a vehicle could be a ticket to that. So we decided to do that.
Getting your first employee on board, what was that like? And then building the team around the idea that you had, there must have been a lot of people who doubted the vision, which you were in the process of figuring out yourself anyway. So what was it like getting the people to buy into your story?
Actually, funnily, we didn't get people in for the first several months until me and Swapnil really believed in something very deeply. But then we started getting people. Our first intern, who's still with us as head of design, came in as an intern back then. Honestly, the first maybe 100 people that we got in, not just the first 5 or 10, I'd say the first 100 people literally came in because we gave them a very we had a very simple pitch. We're going to build a vehicle. We're going to build physically a vehicle with design is going to lead the way. So we're going to first sketch this vehicle out.
Yeah.
And then that starts the hard engineering problem of figure out how to engineer the product inside the sketch, right? So the sketch constraints are already out there. Now figure out how to package everything within the sketch. I think that was an incredibly hard and a very exciting problem statement for a lot of young engineers. And particularly in the mechanical and electrical side, we quickly realized that we were just becoming a magnet because automotive companies in India were not giving people this opportunity that, hey, you can come and at your age of 21, 22, 23, you'll get an opportunity to actually design something that could go into production and you'll get a salary for it. Your option was to stay in college and build a formal FSAE car, which is one of the race cars, and not obviously get paid for it, or join a big auto company where you would spend the first 10 years earning your right to, touch anything useful. We realized we were at the sweet spot where Ether became very quickly, and the word spread in the network really fast among all engineering colleges, that if you were building a race car at college, and there were a lot of these teams building race cars, Ether is the team to join. They will actually pay you a salary to continue doing the same stuff post. So we got a lot of really good builders.
So how many iterations of this sketch went through before you decided this is the one?
We actually had 2 different phases. The sketch was a pristine sketch phase. We actually had no engineering happening at that point. That probably would have lasted us, 6-8 months. Once the sketch was frozen, and those sketches are still up there in our offices, we barely touched the sketch. We spent solid 4 years engineering the product within that sketch. 4 years may sound long, but I think those
in today's environment it is.
But I think those are some of the best 4 years for anybody working at Ether.
Yeah, and this is interesting because your competitor pretty much across from you in Bangalore has a very different approach to things, and very often you've been asked questions about, have you been too slow? How do you respond to that? And what has it taken to actually keep those distractions, keep that need for speed, which has become almost the sort of mantra for success, or has been perceived to be the mantra for success at bay?
I think that assumption betrays a poor understanding of building physical products. Speed is built institutionally over a period of time. A keenness to just deliver something on day one, creates a very poor ability to sustain that and launch new things later. If you look at our launch trajectory, first 5 years, we had one product. In one color, by the way. Okay. 6th year, we had 2 products, 5 colors. 7th year, we had, I believe, 10 products. Today we have, I think we have 63 SKUs.
Yeah,
I think we have like dozens of variants, 2 distinct product lines. We're getting ready to launch a 3rd product, which will probably double this entire volume up.
Yeah.
We probably have the widest product portfolio among the large e-scooter manufacturers today. This is a business where you've got to invest upfront in getting your platforms right, getting your technology right. I think we've seen far too few companies in India where somebody's trying to build a product business, somebody's trying to build a platform from scratch, which is why so many of us find this alien that ये क्या फालतूगिरी कर रहे हो, बस फटाफट कुछ भी निकालो यहाँ से. I'm like, कुछ भी निकाल के, you're not gonna build a monster of a product company. Like, you want to build an engine that can keep spamming out successful products all the time. You don't want a one-hit product wonder. You don't want something that worked once, because a bunch of magicians were behind it and, disappeared. There's no ability to recreate that magic. There's no ability to sustain that magic. You want a system which for the next 30, 40, 50 years will launch something amazing every single year. We literally call this now at Aether one magical experience per year.
Let's now talk about EL, because that's the next big magical idea, so to speak. Those are I'm picking up on your words. I don't know if that is the one magical experience for you in 2026 that you're hoping to create. But what do you want to do with EL? What do you want to achieve with EL in terms of scale? Because that's clearly the vision, as you pointed out.
Yeah, so EL actually, at its root, EL is not very complex. EL is actually us generally taking a low-hanging fruit because it was available. Simplify our cost structures. Our cost structures, given that we were born in a more resource-constrained environment, our product cost was high on the mechanical items. Our frame is expensive, transmission is expensive. So find ways to cut that cost down to offer a better choice, a better cost to the end consumer. But at the same time, preserving stuff that we are actually good at. The reason people probably buy an Aether is because of the stability of a powertrain and a software. So how can we preserve these 2 things, still reduce cost and pass that benefit to the consumer? That's the context in which EL was born. For example, how we are bringing the motor controller and the charger together in a single package. And what kind of experience does that open up? I think it opens up not just, the easy answer is, yes, it opens up onboard charging.
Yeah.
So you don't have to carry a charger with you, right? So it's easy, it's convenient. But what we're realizing rapidly is it's actually becoming a fairly powerful experience, because the kind of charging and the speed of charging it's opening up. So there's something to announce there. We've just talked about it, we haven't described it, but we've been able to crack a new architecture, which we are calling as Advanced Electronic Brake System, AEBS.
Okay.
It's something that recreates an ABS-like braking control,
right?
But at like 1/10 or 1/100th of the cost. So this is a massive innovation in terms of brake technology. So, and the experience is really good. So these are some things. There are many others when we launch, but these are 2 that we've already publicly talked about.
So what is this going to mean in terms of cost for the end consumer? The expectation is, do you go sub 1 lakh? Is that going to possibly be possible given everything that you just spoke about and the many innovations that you're experimenting with?
There is a market of products below 1 lakh in our industry. Our estimate is that maybe about 20% of the industry is below 1 lakh. Again, it's our estimate today. We believe that we've got to focus. We can't go after every single segment, every single price point. Particularly when we don't have PLI. We don't have PLI, so we have this huge 15% disadvantage compared to people who don't even want to probably build electric.
Yeah.
So as people who want to probably push the envelope on electric, we are balancing a very difficult task that we are starting off with a 15% disadvantage here. So we've got to be very careful, not get into segments where there could be a there could be a lot of bloodletting that happens, a lot of cost pressures that come in. So for us, the Lakshman Rekha is 1 lakh. We will not go below that.
What
is happening in the world with subsidies? I mean, you're seeing subsidies being withdrawn world over. We don't know whether the PLI in India will continue or not. We've seen issues with the FAME scheme, which have in fact resulted in many of those companies having to shut down, as I pointed out at the start. So you've always been designed for a world without subsidies. Do you believe that eventually it'll work to your advantage as subsidies start to be wound down?
So our view is that I think it's a very powerful policy. It's worked so beautifully in so many segments, particularly when you're looking at thinking of exports. PLI has been magical there. And I think Indian electric two-wheelers are at possibly the best moment of time in its history to go global. Historically, there have been three big exporters: India, China, Japan. We know where Japan is with electric vehicles. Not really keen. China is great with electric vehicles, but not with two-wheelers. They don't care enough about two-wheelers. They've actually more or less commoditized that industry. That only leaves India. And India, as it happens, whether it's us or even our peers, there's been a tremendous investment in R&D and product that's happened over the last 5-7 years. We are genuinely massively ahead of the rest of the world on EV two-wheeler technologies, cost structures, and scale. We can flip that to become one of the biggest exporters, and this is a $100 billion market of two-wheelers in general. So I think there's a great opportunity. PLI could fix it, but PLI really needs to support innovation. We've gotten here, and we can go forward only because of the innovation engine, which is mostly been startups, mostly been new age technology companies. We've got to find ways for PLI to support and not push startups out. So if you push startups out, this entire train for it to run, yes, it needs the capacity and the capital of the legacy players.
Yeah.
But it needs the engine of startups to actually take it forward.
to go back to that statement that you made that this is the sweet spot for the EV two-wheeler business in India, and this could be a breakout moment for companies like yours to go global. Is that something that you're now committing yourself to, a global future for AFL? When do we start to see that happen for you?
I think it's in the horizon. It's still not there for me to say that we are committing ourselves to this being the next lever of growth. We're yet to finish exhausting the scooter lever. And then there are, other things like motorcycles potentially and international markets. But I do believe if you take a 10-year horizon, international could very well be the largest driver of value creation in our industry as a whole.
Tarun, let's talk about financials now. And you're a newly listed entity, so you're going to be asked that question quarter after quarter. And we've just seen you deliver some numbers that the street has liked. But how important is it for you to ensure that you're not just keeping costs down, but you're also moving the needle as far as profitability is concerned? And how do you believe that picture is likely to change? What we've seen in the last few years is everyone's been burning through cash. How does that picture change in the next few years?
Our gross margins improved. That took us from minus 36% EBITDA to maybe minus 20% EBITDA. But then our volumes went up 50-60%. And that's taken us from minus 20% EBITDA to whatever, minus 5% EBITDA. The current capacities can further grow our volumes by almost, I would say, almost 50%, 40-50%, 30-40%. And I believe that should be good enough, barring like some global commodity crisis. That should be good enough to turn profitable, at least at an EBITDA level, if not a PAT level.
The market share game, and today you're number 3, at least as far as the latest data is concerned, right after the two incumbents, TVS and Bajaj. Largely South India. You're, of course, looking at expanding your presence pan-India. But how do you look at the market share game? How important is that for you?
We don't look at the market share game. Obviously, we will talk about the numbers. We'll let people understand how it's shaped up. But we're very clear. What's controllable, modelable, and predictable on our side is monthly volume, not necessarily monthly market share. Somebody would launch a product at 80,000 rupees. I don't even compete there. And that can change the market share dynamic. So, yeah, we'll obviously always talk about it, but that's not the primary focus. The primary focus is always absolute volume and hence margins generated. I'm extremely optimistic for growth and very bullish because remember, our legacy peers are 20-30% larger than us today on the back of a distribution that's probably 3, 4, 5 times larger. So we are sweating our existing stores a lot more. And I think this is building a very strong underlying strength. As our distribution count continues to compound.
You're going to 700 now.
I got to 700 this quarter and hopefully more later this year. As the distribution counts continues to compound, we believe there is a big growth opportunity there.
As a founder who started this company in 2013 and has then taken it public, you hold a little under 6% now. You're still classified as the promoters, but you hold under 6%. The largest shareholder is Hero. What has this been like? I mean, in a way, you're giving away equity. You're no longer the largest shareholder. What has that meant for you emotionally as well?
I know. I think this. And most founders go through a very similar journey. Whether it's our business or the internet businesses or the software businesses, we are in a world where you've got to make one of two decisions. Trade off speed for higher ownership, and you may not see the desired outcome in your youth and your life, but you'll have control. You'll have ownership rather. Control comes from your ability to execute, frankly. Or, it's okay, give up ownership, share the upside with more and more investors, more and more people. But then you get to see your life's dream come true while you're still building, right? At $3 billion, Hero stake is probably worth 8,000-9,000 crores now. We wouldn't have created this value if Hero did not have the foresight to not try and take over. Like actually understand early on that, this is a different business.
Did they not want to take over? Did you not allow them to take over at the start?
Think of the journey. Hero came in as a 32% shareholder. And over a 9-year journey now, 9 years, they've been able to keep their ownership in this horizon. And they've actually always said, let's bring in more investors. Let's bring in financials. Let's make sure, there are enough investors on this cap table so that you have enough firepower available to drive your growth. And they built their own VIDA, and might I add, very successfully today. VIDA is now larger than many of the older players in the market today. I think this is incredibly rare to have a legacy company have the foresight to invest, learn from the investment, and be able to ensure that the value creation is so profound. Most investments wouldn't land up in this place, honestly.
As every industry talks about what it's going to mean, how disruptive it's going to be, how do you look at AI? Are you using AI? How much of AI are you using? And what do you see for Aether in an AI era?
So that's increasingly become a big focus for us over the last 5-6 months. Internally at the company, obviously, that's gone pretty deep now with development and just using that as an analyst across the board. But on the product side, we are starting to see some really large opportunities. And I'll talk about one pivot that we did do because of AI.
Since you don't do that many pivots.
So there's one to talk about recent times. We launched smart helmets called Halo a couple of years ago. And a lot of excitement. And we were also pretty excited about them. But at that point, in a pre-AI world, that was conceptualized as a genuine Halo product, like this really expensive 15,000 rupees smart helmet. That's a great experience, but not really meant for everybody, and it's okay.
Yeah.
But with LLMs becoming so powerful and now edge models becoming so good, and with the kind of work that Shriram is doing, for example, in India, we woke up about 6-9 months or 1 year ago and we realized that, you know what, we actually need to leverage this in our daily products with every consumer. So we had a massive pivot here. We decided to flip our smart helmet strategy from this amazing, super premium niche product to everybody needs to get a smart helmet.
Okay.
Like, my ideal attach rate for this product is 100%. Like, everybody should get a smart helmet. We need to beat prices down to like 2,000 rupees and make margin selling that hardware at that price.
Tarun, it's been an absolute pleasure. We wish you the very best of luck with Aether.
Thank you.
And we look forward to hearing more from you about the magical experiences that you hope to create through the course of the year and how you intend to keep cracking the code, as well as all your expansion plans. Thanks very much for joining us on Young Turks. Well, we are going to take a break here of this episode of Young Turks Reloaded. As always, keep your feedback coming in. We love to hear from you. Till then, from the entire team, thanks very much for watching.
Hello and welcome to our special broadcast right here on CNBC TV 18. Now, United States and Israel's joint operations have continued across the Western theater, across West Asia. Over the last 5 days, we've seen heated conflict between the two sides. We've seen how weapons have been exchanged, how ballistic missiles have been exchanged, leading to death, and of course an aggravation of the geopolitical tensions between multiple countries. It started off as a conflict between Israel and US on one hand, and Iran on the other. Now we're looking at the specter of this conflict spreading far and wide across the region. What are the implications of this going forward? What were the intentions and the motivations behind this conflict, and how will the next few days play out as this conflict progresses? To help us answer some of these questions is with us veteran economist Jeffrey Sachs, now joining us on the show. Mr. Sachs, thank you so much for taking out time on a busy day. Let me begin by asking that, depending on who one has been listening to, the motivations behind this attack, there are voices from the US administration that say that this was done for ensuring a regime change. Then there are voices which say, no, we want to check the nuclear capabilities. Then there are voices which bandy Iran as a sponsor of terror, and then that is cited as a motivation. And then there are some voices that say that we want to support Israel, and that's the reason why we went in. What, in your assessment, is the motivation, or has it not been thought out at all?
There are motivations for Israel and for the United States. Israel is led by Benjamin Netanyahu, who tweeted 2 days ago that this war fulfills his dream of 40 years to overthrow Iran. Netanyahu's objective is to permanently eliminate any state of Palestine and to bring down any governments in West Asia that support Palestine. And he has led wars across Africa and the Middle East for this objective since 1996, including Libya, Sudan, Somalia, Gaza, West Bank, Lebanon, Syria, Iraq, and now his dream, Iran. In my view, this is a malevolent, absolutely illegal, and dangerous mindset. Rather than having a state of Palestine alongside a state of Israel, which would bring peace to the world, Netanyahu is a maximalist who wants Israel to dominate the region of the Middle East. The United States has shared Israel's objective because the U.S. objective is world control, believe it or not. And Israel serves the purpose of control of the Middle East. We see that the United States has military bases all across the Gulf region, in Bahrain, in Saudi Arabia, in United Arab Emirates, and in many other places. It used to have bases in Iran, but it lost that when the US-backed police state was overthrown in a revolution in 1979. The US had brought in that police state regime in 1953 when the CIA overthrew the Iranian government. So the United States wants control of West Asia, it wants control of the Americas, it wants control of Europe, and Trump in particular wants to control the entire world oil economy. That's why he has commandeered Venezuela's oil and why he is attacking Iran as a threat to American dominance in the Middle East. So this is a project that goes a long way back. It has nothing to do with Iran's nuclear weapons because there are no nuclear weapons. The religious leader of Iran said that this was against Shia Islam, and so the US and Israel killed him, the one that said no nuclear weapons. Iran and the UN had negotiated a complete inspection regime for Iran back in 2015, but Netanyahu and Trump ripped up that agreement in 2018, the so-called Joint Comprehensive Plan of Action. This is specifically about hegemony. And of course, it puts Asia, India, China, Indonesia, the rest of Southeast Asia deeply in crisis. Israel has caused a sharp economic crisis in Asia now, and the crisis will get worse unless the countries of the world stand up and tell the United States and Israel, stop this war, stop your conquest, go back to peace, live by the United Nations. Otherwise, India, China, and others are going to pay a very high price.
Let me then, Mr. Sachs, ask you a follow-up question. Donald Trump says that this is going to be an exercise. This endeavor will take about 4 to 5 weeks. Do you buy that? Because what many analysts say is that in the lack of a very clearly defined objective, what is US going for? With that objective not being clearly defined, many are not able to buy into that 4 to 5 week deadline that the US seems to have given itself.
The US has no strategy. Trump, we know from all experience, is delusional. He's psychologically unstable. He can't keep agreements. He does not have a long-term strategy. Look at how he dealt with India during the past year. Look at how he dealt with the tariff issue when he had no legal authority to do this. He operates by bullying and by grand pronouncements that have no justification. He said yesterday, don't worry about oil and gas. The U.S. will escort tankers through the Strait of Hormuz. Almost everybody with any knowledge of this begs to differ. There is, of course, in the U.S., the biggest industry of all. That is public relations, also known as propaganda. So we shouldn't listen to Trump about any of this. We shouldn't listen to Netanyahu about any of this. Remember how Trump was going to end the Ukraine war with one phone call? Remember how the Gaza war was going to end quickly? Remember, by the way, how the Syrian government was going to be overthrown in 2011, or about how Afghanistan was going to become a US-led democracy, or about how Iraq would become a stable country. They used to say the same thing in my youth about Vietnam. It's just a short period away. These people are propagandists. They are not telling any serious analysis. This war will not end in 4 weeks. This war will create an economic catastrophe unless the BRICS countries say to the United States and Israel, you've got to stop. You have no right to ruin the whole world economy.
Sure. Let me come in there. When you talk of this conflict not ending in 4 weeks' time, the next logical question is what happens to the Gulf countries, the GCC countries who've been bearing the brunt? We've had some analysts on the channel in the last few days. What they're telling us is that hosting of the US air bases, which ideally should have acted as a safety shield, far from that, it's actually put these Gulf countries in the line of fire. How do you see the role of these Gulf countries play out? Do you see this turning into a protracted conflict where the Gulf countries too feel the need to come in and intervene in terms of kinetic operations?
Well, there's a famous adage of Henry Kissinger who said that to be an enemy of the United States is dangerous, but to be a friend is fatal. And this reality appears over and over again. I was just in the Gulf region a few weeks ago. I met with the leaders across the Gulf region. They all thought the U.S. is their security. This is not the case. The U.S. is their insecurity. The U.S. is like a magnet drawing the bombs and the drones right to their countries. If there had been peace based on the logic of peace across the neighborhood, they would be safe. But instead, Israel and the United States want control. Control does not bring security. So these countries are going to suffer badly. They have no potential for kinetic action against Iran. That's not even a thinkable proposition. Their oil fields, their port facilities, their refineries, their tankers are sitting ducks for thousands of drones that can come. There are not the anti-missile systems in number that can protect these assets. The only way to protect these assets is for the United States and Israel to stop their aggression. Other than that, there will be no protection for these countries in the Gulf.
Speaking of protection, Mr. Sachs, let me ask you, has there inherently been a miscalculation by the United States? I'd like to cite two aspects. One, Professor Pape of the Chicago University says that not once in human history has a regime change been executed through merely aerial operations. Has there been a miscalculation done by the United States? Is there a need for boots on the ground, or is there a need for a strategy to have been deployed that goes beyond mere aerial attacks against a country as large as Iran?
There is a need for peace. There is a need for the rule of law. There is a need for the end of this aggression. There's a need for Israel to live within its own borders, which are the borders of the 4th of June, 1967, and to let the Palestinians live within their borders. So there's a need for a completely different approach. The United States will not put boots on the ground because the American people are completely against what is happening right now. This is done by the CIA, by the Pentagon, by Trump. This is not done by the American people. They're completely against this. So their idea of boots on the ground is that they'll pay the Kurds or other mercenaries to do this. This is all disastrous, delusional thinking. The war could end today by Israel and the United States ending their aggression. That is the way this war will end. It requires the voices of India and China and Brazil and Russia and the other BRICS countries, which represent half the world population, to say the truth to the United States and to Israel. You must stop this aggression.
A large chunk of the Trump voter base, the MAGA movement that we've seen in the United States, they will be put to effect in just a few months from now when we have the midterm elections in the United States. What I want to ask is that the entire pitch that Donald Trump had given to MAGA is that he wants to be known for peace. In fact, that's what his Deputy Secretary of State in New Delhi said today, that Trump wants to be remembered as the man of peace. But nonetheless, he does hold now the honor of having struck the most number of countries as the US president. Does this then put him in a very challenging position come the midterm elections in the United States?
Trump will lose the midterm elections, period. He is unpopular, and his approval ratings are falling, and they will continue to plummet. He lied to the American people. He lied to his base. He lied about the tariffs. He lied about the economy. So his approval is very low and falling. He will lose. I hope that the ballots are honestly counted. If they are, there will be an outcome that will control what right now is executive rule, not constitutional rule.
let's shift our focus to oil. That, of course, has been at the heart of this conversation over the last couple of days, at least in terms of what it does to oil, the blockage of the Strait of Hormuz. Just a while back, we were speaking to a Kepler analyst, Mr. Pavlov. What he told us is that there has been a slight under-assessment of what the impact could be as far as oil is concerned. The jump in oil prices hasn't been as dramatic. What he said is that that is essentially operating on the premise that the US will not allow Hormuz to be closed for extended periods. What I want to ask you is that confidence misplaced? And if it is, where do you see the oil prices going from here?
The US, in my understanding, I am not your ultimate expert on these military issues, but in my understanding, the US cannot keep the Strait of Hormuz open. That is technically, militarily not possible. That Israel's bombing operations and US bombing operations will not do that. There will not be American boots on the ground. So that's also not going to happen. So if the war continues, that's the choice, by the way, of Israel and the United States. But if they continue the war, then two things will happen. One, the Strait of Hormuz effectively will remain closed. And second, the oil physical assets in the Gulf region will be destroyed one by one. The refineries, the oil fields, the port facilities, the LNG facilities, and so forth. So we will have a major global crisis. The price of oil, if that happens, will soar well above $100 a barrel. The markets have not assumed that this is the case because they are listening to Trump saying that this will be over in a short period of time. If that's the case, then yes, oil prices will remain only modestly increased. But if it is, as is likely, this continues because the US and Israel continue their aggression, the oil prices will soar well above $100. There will be a major global economic crisis. Asia and Europe will pay the highest costs for that crisis because they are dependent on imports from the Middle East. And both Europe and Asia will suffer enormously. Everyone will suffer, but India, Indonesia, China, the rest of Southeast Asia will pay a very heavy price.
Help us expand on that, Mr. Sachs, in terms of, first, of course, the immediate impact is likely to be felt when it comes to oil, availability of oil, and number two, the pricing of oil. Beyond that, what are the factors that will cause pain to economies like India going forward?
We know from the oil shocks of the 1970s, in 1973, 74, and in 1979, 1980, that when there was a sharp, rather sudden, significant reduction of world oil supplies, the entire world went into economic crisis. I actually did my PhD dissertation 46 years ago on that topic. We are back to that scenario where there will be a contraction of trade, of investment. There will be increased political instability in many countries if this war continues. That's not a foregone conclusion. There are two ways the war could end. One way is that the way that Israel and the United States claim, which is that they will defeat Iran. Most every military analyst disputes this, that the war will not end that way. How can a war end that way with a few weeks of bombing? Look at the Ukraine war. There's been bombing for 4 years. The war continues. Without boots on the ground, and there will not be U.S. boots on the ground, the war will continue. So ending the war by victory by the U.S. and Israel is extraordinarily unlikely. The other way that the war could end is that the world's governments tell the truth to the US and Israel, which is you must stop this now. That is highly plausible. Most countries don't want to do it. They're scared of Donald Trump. They shouldn't be. It's a lot of bluff and bluster. The fact of the matter is that he cannot command India or China or Russia or other countries the way he thinks he can. So if they stand up together and say, end the war, it actually will end. But if neither of those happens and all of this continues, then the economic costs will be enormous for India, for most of Asia, for Europe, actually also for the United States, even though the US is basically energy balanced, it will still have very significant negative consequences.
Mr. Sachs, one of the endings that you propose is that it would take middle powers, the countries, the likes of India, the kinds of Russia to actually stand up in a united position and then convince the United States to not move forward with this engagement any further. We've seen beginnings, we've seen green shoots along those lines. We've seen the French president talk about how this is a non-legal approach that has been followed by the United States. We've seen Spain disallow the United States access to their air bases. Do you see this alliance forming up? Do you see these middle powers actually standing up in the face of a Donald Trump, in the face of a tariff regime that he has deployed?
I do. My only difference is I don't count India as a middle power. I count it as a great power. I don't count Russia as a middle power. I count it as a great power. China is a great power. What we need is the major powers to say to the United States and Israel, you've done something absolutely wrong, absolutely aggressive, illegal, delusional. You can quote me. They can quote me. It makes no sense. It wrecks the whole world economy. That will get this to stop. As a bully, Trump counts on everyone remaining silent or even falling into line. But countries are not having it. You know, Spain, the Prime Minister of Spain, or President of Spain, as he's also called, Pedro Sanchez, stood up and said, this is illegal and reckless, we won't do it, and the US can't use our bases. Trump then threatened him. And you know what he did? He said, we're not listening to your threats. They're empty threats. Then other countries in Europe are saying, whoa, we can do the same thing. We need truth-telling right now. This started with Israeli grotesque delusions. This includes US delusions. The world needs to say we don't want Israel to rule the Middle East. We don't want the US to rule the world. We want actually a rules-based system under the UN Charter. That's the theme of the BRICS countries. We don't accept this kind of lawlessness. We don't accept Israel and the US killing religious leaders and heads of state in the middle of negotiations. The recklessness of this is profound. There's no point in being silent about the recklessness of it, because that will prolong the agony, not end the agony. Calling out what is an absolutely illegal, destructive, and doomed to fail effort is what's most important right now.
Right, Mr. Sachs, we'd again like to appreciate the time you've taken out to speak to us. It's been an insightful session. We continue to stay connected and to get more of your perspective as this engagement, as this conflict in West Asia continues, hopefully for not very long, but something that we'll all be keeping a very close eye on. Mr. Sachs, thank you once again for being a part of this conversation right here on CNBC TV 18.
Hello and welcome to this special broadcast. I'm Nigel D'Souza. Well, Iran's Supreme Leader Ayatollah Khamenei has been killed in airstrikes by the United States and Israel. Iran has promised revenge and launched a fresh wave of strikes. A member of Iran's Guardian Council, Ayatollah Arafi, has been appointed as the interim leader. The US and Israel have also launched fresh wave of strikes at the heart of Tehran for the second day. Iran claims a school was bombed, leading to the death of nearly 100 children. Explosions have been reported in cities like Doha, Dubai, Abu Dhabi, Kuwait, Riyadh, and Manama, as Iran fired ballistic missiles and drones at the US military bases in the region. With missiles flying around the region, the airspace has been closed and thousands of flights cancelled. Maritime route has also been disrupted after Iran shut the Straits of Hormuz. The small stretch carries a third of the world's crude oil trade. The tensions have spilled out of the region with large protests seen in Pakistan. Protesters attempted to storm the US consulate in Karachi, leaving nearly a dozen people dead and several wounded. With West Asia plunging into chaos and war, the markets are staring at a period of dangerous uncertainty. How should you navigate it? Well, over the next 60 minutes, we will analyze and also put the spotlight on the commodity markets with Manisha Gupta. Joining me on the show right now is Mangalam Malu. Hey Mangalam, Sunday, special broadcast. Well, the markets will be, looking forward to tomorrow's opening. It's going to be a bit of a tricky one.
It will be a tricky one, Nigel, and with all the, geopolitical tensions that are underway and moment-by-moment footage that we're getting and news and updates that we're getting, it'll be very important to track the impact of that, particularly on crude prices, and as a result of which, what happens in our equity markets and how this happens. Obviously, there would be very near-term panic, but as during the course of the show, we will obviously display that, during moments of panic, while war and all these situations are a humanitarian crisis and a crisis of, life, there is a lot of uncertainty. If staying the course and discipline is maintained during the markets and investment periods, then perhaps this could give good opportunities in terms of investment bets as well. But all that and more during the course of the show. Let's listen into what Israel Prime Minister Benjamin Netanyahu had to say after striking Iran.
This morning, a powerful strike was launched and destroyed in the heart of Tehran, the compound of the tyrant Khamenei. For 3.5 decades, this tyrant dispatched terrorism across the world, made his own people miserable, and worked constantly and tirelessly on a program to annihilate the state of Israel. That plan is there no longer, and there are many signs that this tyrant is also no longer.
All right, let's welcome our first guest on the show. Joining us now is Meera Shankar, former Indian ambassador to the United States, who joins us on the show. Hi, good evening, and thanks a lot for joining in on this special show, ma'am. Appreciate you joining in. Well, a quick question first. Going by all the developments that we have heard and all the sound bites that we've got, are we looking at just a limited strike cycle, or do you think we're getting into the early stages of a prolonged regional war?
Well, both possibilities are currently open. We don't know how it's going to unfold, and a lot is going to depend on whether the US is looking at a limited strike to exert pressure on Iran to be more compliant in negotiations, or whether it is really looking at regime change, because, that's what Israel has been talking about. And while the Supreme Leader, Khamenei, has been killed in the attack, the Iranian system is not a banana republic. It is a country of nearly 100 million people, and they have a framework. So Khamenei's son has taken over, with the consent of the Guardians Council. And we don't know how this is now going to unfold, because Iran has launched retaliatory attacks against Israel, and reportedly also hit Israeli military headquarters, but also against other countries in the Gulf which host US bases and facilities, including UAE, Abu Dhabi, Qatar, Bahrain, Oman. Cities in these countries have been hit, and all the airports here are closed in the region. So we really don't know if now, in response to the Iranian attacks, you're going to see another round of strikes by the US and Israel, because they had initially announced that these are limited strikes over a 4-day period. But, you know, sometimes a situation can develop a momentum of its own. Now, the intriguing thing is that the attacks took place because, you know, you've seen a lot of leaders talk about how Iran can never have a nuclear weapon. Let's not forget that there was a nuclear deal with the US, Europe, US, Russia, and China during President Obama's time, under which Iran had agreed to open up its nuclear program to inspections, including surprise and challenge inspections by the IAEA, had also accepted limits on the thresholds to which it could enrich uranium, and so on. So it had accepted restraints and curbs on its nuclear program, and it was America which walked out of it. Today, as the talks were going on, the foreign minister of Oman, who has been the intermediary between the two countries, said that there was very positive news because Iran had agreed to surrender the stockpiles of enriched uranium it had built up after Trump walked out of the accord in the first term, and B, that it would forswear a nuclear weapons program now and into the future. I think the main sticking point was Iran's insistence that it should have the right, in principle, to enrich uranium. Two thresholds which are permitted by the Nuclear Non-Proliferation Treaty for non-nuclear weapon states. Now, that was something the US was not prepared to accept, but it was a point on which further discussions could surely have taken place. And at a point where actual progress is being made, you have the attacks.
But to take this discussion forward, we do have Arun Kumar Singh, who's the former ambassador of India to the United States, joining in as well. Mr. Singh, thank you for joining us. You've heard what Ms. Shankar had to say. You've obviously, seen the developments in the globe right now, all the comments that have come in from global leaders, etc. What do you make of the situation right now, and what is your best guess of what happens immediately?
So Ambassador Meera Shankar, as you mentioned, has been a senior colleague of mine, and I value very much what she has said, agree with large part of what she has said. But let me bring your attention to the kind of global reactions that we are seeing to the developments. And what has struck me is that very few countries have come out with very strong support for Iran. Of course, in the Gulf, because Iran has reacted to the US attack and attacked the US presence in the Gulf countries, they have come out with criticism of Iran. Russia has certainly come out with a strong criticism of US and Israel and has condemned them, called also for a meeting of the UN Security Council. But I suspect Russia may not go beyond that point for really any kind of material support to Iran, because Russia's focus is more on its in Ukraine. And there it would like US support for getting some kind of a peace agreement, accommodating Russia's security concerns and pushing the Europeans in that direction. So they would not like to lose their access to discussions and negotiators from the US with that objective in mind. Similarly, as far as China is concerned, they have not even condemned US and Israeli action. They've only said they are shocked by what has happened. And I think that's because Donald Trump is going to China in April. He has invited President Xi to come to the US in October. And the Chinese are more focused on technology and trade relations with the US and trying to prevent the US from supplying major arms to Taiwan. So that's their objective. And as a result of that, despite their strong relationship with Iran in terms of energy purchases, supply of defense equipment, I doubt if they will come out with any kind of substantive or material support to Iran. So that's the challenge that the Iranian leadership is certainly facing at the moment. And but again, we have to see how far they are able to hold out, what is their own capacity, what kind of support they are able to sustain within the country. Because while there are segments of the population that are alienated from the government, there are also strong segments of the population that are very committed to the government that is there. And so how this dynamic plays out. And again, one of the declared objectives of the US is regime change here. And because they feel that the current regime in Iran has been hostile to the US since 1979. The regime in Iran has not accepted Israel's right to exist, so that Israelis see as a challenge to themselves. But we have seen over the past several decades that efforts at regime change prompted from outside have not really been successful. We saw what happened in 2003 in Iraq, and after Saddam Hussein was removed, there was high level of violence for a decade or more. We saw effort at regime change in Libya done by the US and the Europeans, and Libya has still not become stable. And then we see the effort at regime change, we saw it in Afghanistan, where it is said that it took the US 20 years to replace the Taliban with the Taliban. So an effort to do regime change by outside forces, contrary to whatever may be developing in a society organically, does not necessarily lead to stabilization of the situation or easy success. So given that, we'll have to watch how the situation evolves, and I'd hope that the escalatory phase of the conflict is brought down, at least through the effort of all countries. And you'd have seen that India's External Affairs Minister has also spoken to the Foreign Minister of Israel, Foreign Minister of Iran.
Right, Mr. Singh. That's right, Mr. Singh. You know, we all hope that there is de-escalation for the good of humanity and for the good of the globe as well. Hopefully, we can get some kind of an agreement and this entire thing does de-escalate. We appreciate you joining in, sir. We look forward to keeping in touch in the coming days as well, and we'll hear from you more often. But I'll tell you what, in terms of the financial markets, every time there has been geopolitical tensions, it's actually been an entry opportunity. We'll decode what this war in West Asia means for the large trade. On the other side, we'll have a couple of our experts who will be joining in. Stay tuned.
Welcome back. You're watching us here on our special broadcast on the West Asia war. Obviously, we've seen the impact of war on the markets in the very near term. Every time there has been a war that has broken out, there has been a fair amount of uncertainty in the period. But if you just look at data, wars actually, while they are a humanitarian crisis and a big problem for humanity, they actually end up being investment opportunities as well. All you need is discipline and focused approach. So if you look at the history, Gulf War 1 between August 1990 and Feb 1991, during that period, the Sensex was actually up by 15%. Look more locally, Kargil War as well. Between May and July 1999, the Sensex was actually up 37% that period. Remember, there was the IT boom which was underway in the world as well. The US-Afghan War, between September and December 2001, the Sensex was up 18.5%, whereas the US-Iraq War, between March, April 2003, there was a decline of about 7% out there. If you look at the Arab Spring as well, between 2011 2013, it was up 11%. More recently, if you look at some data that has come by, Russia-Ukraine war, Feb 2022, which is currently still underway. The Sensex between Feb 2022 and now has been up 39%. Operation Sindoor, yes, there were a couple of days of uncertainty where the Sensex was down 1.5%, but immediately as the ceasefire was announced, the Sensex on one day itself was up 4%. And the 12-day war between 13th and 24th June between Iran and Israel in 2025, that period as well, the Nifty and Sensex, despite the volatility, were up 1.5%. So the short point was terrible for humanity, very bad for the economy. But if the market is looked at just data points, it does give you entry opportunities.
Well, that's right. Mangalam, average drawdown has been around 10%, maximum drawdown has been around 22%. And, Rajesh Kothari of Alf Accurate, they've just put out a note. They say that maximum it's been taken around 49 days to recover all those losses. Easier said than done, but let's get in our experts. We have Gurmeet Chadha, Managing Partner and CIO of Complete Circle, who joins us, and Devina Mehra, Founder, Chairperson and MD of First Global, who joins in. Hi, Gurmeet, as well as Devina. Thanks a lot for joining in. Devina, coming across to you first. Where are you right now? I mean, are you based out of Dubai?
No, I'm in Mumbai right now.
It's good to hear. Good to hear, Devina. Well, let's get to the point then. Mangalam just put out some data. It's easier said than done, that was present this buying opportunity. Tomorrow we're going to be under pressure to kickstart trade. I think what's going to help a little bit is on Friday, the second half, only in the last hour of trade, you saw a sharp decline. And you have short positions that got added as well. So there was some sense that something could give over the weekend. What's your view? How would you advise investors to approach this dip tomorrow? Is it going to get very, very ugly? There'll be some leverage positions that obviously will sell off in the first couple of hours. So your take, Devina.
Okay, so before I come to this part, which I'm sure your viewers are interested in, as Sahil Jani said, कौन रोता है किसी और की खाते रहे दोस्त सबको अपनी किसी बात पे रोना आया. So our focus is the markets, but just first look at the broader perspective. One is that what's happening in West Asia, and I had said to your sister channel in January that if Iran is hit, they're going to strike back. It's not a small country. In terms of size, its area is more than half India's area, and it is very well protected on the land. There are deserts and mountain ranges all around, so you can't really have a land war in that country. And I think they are, in their military strategy, they are playing a very tactical economic game. So if you look at their aim is not through their bombs and drones, a shock and awe game. They are hitting at Middle Eastern neighbors and increasing the risk premium. So it is like if you shut the Straits of Hormuz, maybe, you can have military escort, but will anybody be willing to insure oil passing through those straits? Or for that matter, all the safe haven countries around them, while it is very difficult to watch it because you have family and friends there, but as far as the tactical move is concerned, they are really making it a high-cost war, which means that they are hoping that all those countries will maybe pressurize U.S. And President Trump has said, I want regime change, but how do you have regime change just with air power and asking people to rise up, because those same people were killed by the tens of thousands not very long ago, and those armed guards are still around. Coming to the markets, I mean, you've given this data. I actually had given this data right at the time of the Russia-Ukraine war, on the day when everybody thought the world was coming to an end. I was the lone voice saying that markets forget this sooner than you know. If your narrow focus is not, as you said, humanitarian, but only the markets, that's been the nature of markets. And we looked for 50 years at every geopolitical turmoil.
That's right. So Devina, yeah. So Devina, I recall that call you made, the last time we had this kind of geopolitical issue.
That is 6 months later, 1 year later, the countries which are not in the conflict, their markets forget about it.
So you believe, so tomorrow you'll be deploying when we see that a bit of a gap down that we see?
Deployed. But if you are not deployed to the extent of your equity allocation and you get an opportunity, if you were waiting for a correction to deploy, please go ahead and deploy.
Got it.
Of course, the other question is crude. And crude in any case was due for a rally. In fact, in our last global rebalance about a month ago, we went further underweight US equities and we put that money in commodities, so crude mainly, and also a bit of metals. So that was anyway something that was kind of on the cards. But crude also, let me remind you, if you look at all past conflicts, while there is, every time something happens in West Asia, there is crude spikes up.
Right.
But barring very short-term supply disruptions, the fact is everybody wants the oil fields to work. Nobody wants crude to shut down. The new ruler, the old ruler, the invader, everybody is there for the crude. That's the last thing they want to shut down, whether you are Saddam Hussein or ISIS.
Take
Both
that-
want the crude to keep
Take that
running.
point indeed, Devina, and thank you for setting that up for us. And before we go to Gurmeet and ask him specific sectors, actually, one of them which may be in focus tomorrow is the defense index. It's soared about 10% in the last 30 days, but it's still considerably off its 52-week highs. And we also have Nimesh joining us here on our special program. Nimesh, decode that for us, because when all these things happen, the one thing that rises are the defense stocks.
It does. Normally we've seen this that as and when there is a war situation, the defense stocks gets into focus. This time it's even more important because now forget West Asia. Now entire Middle East is under focus, and they haven't spent much in the last many years on defense. We saw a big defense spend by the European countries now. Now there could be a potential, big spends by the Middle East countries as well. So maybe that's the reason why, maybe the defense stocks will be in focus. As you rightly pointed out, just in the last 30 days, the defense index is up 10%. Having said that, it's still down 12% from the 52-week highs. So that's something to take a note of. It's not been like a big sector outperformer in the last couple of months and last 6 odd months or so. In terms of individual gainers in the last 30 days, MTAR Technologies is the big gainer, up 50%. Data Patterns, Bharat Fuji is up 35%. It's an FNO stock, and that's rallied 35%, largely on the back of the fact that it's a defense play now, and Dynamics Technologies as well. There are some losers as well. HAL, of course, has been a big loser in that pack, down 10%. BDL is down 13%, and SAN DLM was also down 10% in the last 30 odd days. But while we all talk about a lot of sectors will be in focus, defense, of course, simply for the fact that now the entire Middle East is in focus now, and they haven't spent much in the last many years. So maybe the defense spends will go up from those countries as well.
All right, and that's probably the question that we'll ask Gurmeet as well. Gurmeet, thank you so much for joining us on this special program. Are you exposed to the defense theme already? If not, then does this give you an opportunity, and the recent correction that we've seen from the top, despite the bounce in recent times that Nimesh pointed out? Are there any opportunities here for you to deploy?
Hi, Manglam. No, so we are overweight defense, as we've been discussing in different platforms. Solar Industries is our top holding, where it benefits from both, Pinaka rockets, where apparently, despite this conflict, even French government is interested as part of the overall Rafale deal. We recently saw Armenia buying solar multi-barrel guided rockets, and they're expanding the range from 70 is going up to 120. And broadly, so that's one product which has huge export potential. Also, solar is a very underappreciated domestic explosive business where they have 26% market share, and their export business, they're in about 10 countries present. That also seems to be doing well. Plus, it's exposed to mining and broader uptake in the capex cycle, with Coal India being the direct client. We have Bharat Electronics continue to gain. I mean, last 3 weeks, I think it's got 4 orders. The order book is about 85-90,000 crores. With 27% EBIT margin, that gives you a fair good visibility of both order and free cash flow, as their gestation periods are shorter. And then we have Zen Technologies, also, which is into simulators and anti-drone systems. So all three are positioned. We will look at more opportunities there. Also, some opportunities may come in upstream names or standalone refiners with the volatility in crude. So that's also something one should watch out for.
All right, we'll come back to you, Gurmeet. Just before we thank Devina. Devina, parting thoughts on what sector should one deploy? You said that if one isn't, invested in the equity market to the extent that one should be, it's a good time to deploy in the near-term uncertainty. Any sectors, if you could give us top 3?
Well, I mean, we are overweight auto components, autos, pharma, healthcare, and those we continue to be positive on. More selectively, also we have names in capital goods, FMCG, and chemicals. So we are of course in the middle of a rebalance, so we might make some changes, but broadly this appears okay. Also remember that Q3 earnings have been pretty good, which is what I had been saying on your channel also, that I expect Q3 earnings to accelerate, and that has happened. And the numbers don't even fully capture that, because while for manufacturing, it kind of captures it. But services, the reported numbers were a little subdued because of the impact of the new labor code. So if you kind of adjust for that, the earnings have been pretty good. The valuations, if you look at sector-wise, were not at extremes to start with. So we are overall in a reasonable position in the markets. And as I said, I would deploy, if you are keeping your powder dry, this might be the opportunity to deploy. And I expect in probability terms that 2026 will be a better year for Indian markets than 2025.
Thank you.
All right, take that point. Devina, thank you so much for stopping by and guiding our viewers through this period of uncertainty. Nimesh has something to say.
Ask Gurmeet to stay back.
All right, yeah. Gurmeet stays back, actually. Gurmeet, beyond equities, we speak about commodities, etc. as well. So thank you, Devina, and all the guests. Everyone, thank you so much for tuning in. We've spoken about the equity markets, but the most important part of this would be the commodity prices. What does this, tension in West Asia mean for the commodity prices? Stay tuned. On the other side of this short break, we have Manisha joining in with a lot of experts. Gurmeet obviously stays back.
Hello and welcome to a special Indianomics given the special circumstances. Growth rate and inflation of the Indian economy has gotten a shake-up after the new CPI and GDP series were announced by the Ministry of Statistics. And now, with the war over Iran, which has impacted crude prices and shipping through the Strait of Hormuz, there are more changes expected. The new GDP series has led a few economists to raise India's GDP forecast for FY27 by about 10 basis points. I think Goldman Sachs did that. And it's made many economists lower the CPI forecast for next year again by 10-20 basis points. But the war may put some question marks over both growth and inflation, with crude prices already about 10% higher from last week. So how is the economy poised here on for FY27? I invite my elite panel of economists, Saugata Bhattacharya, an MPC member and economist, a senior fellow at the Centre for Policy Research, New Delhi, Samiran Chakraborty, chief economist at Citi India, and Sonal Verma, chief Asia economist at Nomura Holdings. Gentlemen and Sonal, thank you very much for your time. Samiran, I'll come to the war in just a bit since we have just begun parsing it. First, the GDP numbers. Some people have chosen to say that because the current year's GDP has been revised up from the earlier 7.4 to 7.6% in the new series, there is a move to revise it higher for FY27. Anything positive, any revisions from you?
Thanks, Lata, for having me. I don't think we have made any big changes to our FY27 forecasts on the GDP based on what we have heard on Friday. But there are two distinct things here. One is about the size of the GDP and how it has changed in the new series. And the other is about the growth rate of the GDP. So what we have witnessed is that the past size of GDP has been revised down by approximately 3%. Yeah. And what we have witnessed also is that the past growth rates have been brought down by, on an average, about 50 basis points. Yes. But more remarkably, the growth rates now appear over the last 4 years to be almost flat. So between kind of 7.1 to 7.6%, rather than the big ups and downs that we had seen in the growth rate in the old series. I think that's a very important point, that we have got a much stable growth path in the past and a much lower size of the GDP than we had estimated before. None of these make us change our growth forecast materially. However, I must say that there is a better growth momentum in the high-frequency data than what the markets would have anticipated even a month back. So to that extent, there is some logic in re-looking at all the growth indicators. But as you mentioned, there's now new headwinds developing, so we have to watch and find out to what extent they act against this momentum.
Fair point. Let me get Sonal Verma's view as well, and then go to Saugato, who is the policymaker in our group. Sonal, there are a couple of things in the new GDP series which look positive. Manufacturing is far, better. It is double digits if you look at the 3 years on average, 24, 25 and 26. Plus, private final consumption expenditure, which appeared to have slowed in the previous year, has now jumped back to 7.1% from, I think, 5.8 previous year. So both consumption from the expenditure side and manufacturing from the supply side seem to be good. Is there a scope that there is at least an upside risk to GDP numbers?
Yeah, Lata, I think there are two different sort of takeaways from the GDP number. One is what it's saying about where we are, and second is where we are coming from. So where we are, the numbers clearly suggest that there is strong momentum in the economy, and the high frequency indicators essentially.
United States and Israel continue to bomb Iran as the war in West Asia enters day 6. Iran's foreign minister warns of terrorist movements along the Iraq border amidst reports that US was seeking to arm Kurdish forces. Iran's state media reports that Tehran hit an American oil tanker off the Persian Gulf. Iran's foreign minister says the US will bitterly regret attacking its warship in the Indian Ocean. The ship was a guest of the Indian Navy and was attacked in the international waters while returning from an event in Visakhapatnam. Opposition leader Rahul Gandhi questions the silence of the Prime Minister, saying the war has reached our backyard. Indian industries face disruption in gas supply after world's largest gas supplier, Qatar Energy, declares force majeure. Government sources say there will be no rationing or cut in cooking oil and fuel supply to consumers. Sensex and Nifty snap a 3-day losing streak. Mid-caps outperform. Rupee gains more than 50 paise against the dollar after strong dollar sales by the RBI in offshore markets. An interim trade deal between India and the US is close to the finish line, says the US Deputy Secretary of State Christopher Landau, who is in New Delhi. Also says that India should look at the US as a strong alternate energy source. China signals an era of slower growth, sets GDP growth target for this year between 4.5% to 5%, which is the lowest since 1991. China's GDP grew at 5% last year, meeting the official target. Vodafone Idea's AGR dues to the government could drop by around 60%. Sources say officials are in the process of completing the reassessment of the overall dues before the end of this month. Supreme Court warns against strategic litigation by unsuccessful bidders under the bankruptcy law for a second shot. Says commercial wisdom of the Committee of Creditors must enjoy primacy and cautions company law tribunals against expansive judicial scrutiny. It's official. JDU leader Nitish Kumar files his nomination for the Rajya Sabha elections, clearing the decks for a new chief minister in Bihar. Promises full cooperation and guidance to the new government that will be formed in the state. New BJP President Nitin Nabin also files his Rajya Sabha nomination. Nepal goes to polls 6 months after Gen Z-led protests toppled the government. 65 political parties in the fray for 275 parliamentary seats. 35-year-old rapper turned politician Balin Shah takes on KP Oli on the veterans' home turf. Well, the West Asia war is nearing a week with no signs of restraint from either Israel, United States or Iran. Explosions were heard across Tehran after Israel carried out fresh attacks. Attacks were reported in Israel as well, with air raid sirens going off in Tel Aviv. More than 1,200 people have been killed so far in Iran, as per the state media. Israel continued what they called their bombardment of Iran-backed Hezbollah positions in Beirut. Iran has already warned that what it called is a complete destruction of the region's military and economic infrastructure. The country's state media reported that Tehran hit an American oil tanker off the Persian Gulf. 2 people were injured after a drone attack at the Azerbaijan airport near the country's border with Iran. This is the first time a country in the Caucasus region has been targeted by Iran since the start of this war. Tehran has denied responsibility behind the attack. Iran state media reported that Tehran hit an American oil tanker off the Persian Gulf. 3 Indian nationals are feared dead in 2 separate incidents involving attacks on merchant shipping vessels off the coast of Oman. Foreign Secretary Vikram Misri was at the Iranian embassy in Delhi to offer his condolences on behalf of the government over the killing of Ayatollah Ali Khamenei. This was the first time in close to a week that India formally condoled the death of Iran's supreme leader. Back in Washington, the Republican-controlled Senate blocked a bipartisan resolution that sought to rein in Trump's war powers on Iran. Speaking at the White House, Trump said that he would rate the United States' war success at 15 on a scale of 1 to 10.
We're doing very well on the war front, to put it mildly, I would say. Somebody said, on a scale of 10, where would you rate it? I said about a 15. And we're going to continue to do well. We have the greatest military in the world by far. And that was a tremendous threat to us for many years. 47 years they've been killing our people and killing people from all over the world. And I think we have great support. And I think if we didn't do it first, they would have done it to Israel and give us a shot if that was possible. And if we didn't terminate the worst deal, one of the worst deals ever made, the Obama nuclear deal, I call it the Obama nuclear deal, where he gave everything to Iran.
Well, the United States has sunk an Iranian warship carrying nearly 130 naval personnel in the Indian Ocean near the coast of Sri Lanka. U.S. Secretary of War Pete Hegseth took credit for the attack and boasted about what he called the first torpedo strike by a submarine on a warship since World War II. The Iranian warship was sailing back from Visakhapatnam, where it took part in a naval event at India's invitation. The Indian government and the Indian Navy are yet to make any official comment on this incident.
Led by Lieutenant Jeffrey Matthew.
These are Iranian Navy personnel marching on the street of Visakhapatnam on the 19th of February. They were in India at the invitation of the Indian Navy to participate in International Fleet Review and a multilateral exercise called Milan 2026. On the 17th of February, the Eastern Command of the Indian Navy extended a warm welcome to the warship and its crew on social media, saying it reflects long-standing cultural links between the 2 nations. On the 4th of March, as the warship was sailing back to Iran, it came under attack. A torpedo attack by the U.S. submarine sunk the warship near the coast of Sri Lanka in international waters, effectively bringing the war in West Asia to the Indian Ocean.
Their Navy not a factor. Pick your adjective. It is no more. In fact, yesterday, in the Indian Ocean, and we'll play it on the screen there, an American submarine sunk an Iranian warship that thought it was safe in international waters. Instead, it was sunk by a torpedo. Quiet death. The first sinking of an enemy ship by a torpedo since World War II.
Iran's Foreign Minister Abbas Araghchi has warned the U.S. will bitterly regret attacking the warship, terming it as an atrocity. He said the ship was a guest of the Indian Navy and was struck in international waters without any warning.
We have a good relation with the Indian government. We are expected from our brothers to stand in these situations.
Sri Lankan government says more than 30 injured Iranian Navy personnel have been rescued. More than 80 dead bodies have been recovered. Opposition leaders in Sri Lanka allege the country's sovereignty has been violated by the US. They claim any military action at an exclusive economic zone is against international law. Leader of opposition in the Lok Sabha, Rahul Gandhi, questioned the silence of Prime Minister Modi, saying the conflict has now reached India's backyard. Bureau Report, CNBC, TV 18.
As the war continues to escalate, Iran has officially denied launching a missile towards Turkey. Iranian state media said that the country respects Turkey's sovereignty and rejected claims that any missile had targeted Turkish territory. Spain has pushed back against claims from the White House that Madrid was cooperating militarily with Washington in the war against Iran. The denial comes after Donald Trump threatened to use trade measures against Spain over its position. As the conflict deepens, Anthony Albanese said that Australia has deployed military assets to the Middle East as a part of contingency preparations amidst the escalating crisis. Now, crude oil prices remain elevated despite President Trump's promise to provide insurance and military support to oil tankers attempting to cross the Strait of Hormuz. The statement has come after a warning from Iran's Revolutionary Guard to attack the ships that are attempting to cross the Strait of Hormuz. Meanwhile, China has reportedly urged refiners to suspend fuel exports. According to Reuters, China has asked companies to stop signing new contracts to export refined fuel. The government has also urged the companies to try and cancel shipments that have already been committed to. Well, back home, the Indian government is feeling the jitters as Iran claiming control of the Strait of Hormuz has brought energy shipments via the route close to a grinding halt. Sonal Bhutra joins us now with more details. Sonal, tell us, what does this mean for India's energy security going forward?
You know, during geopolitical concerns, we usually speak about crude oil prices, crude oil supplies, but gas this time could be a bigger issue for India, and not only India, other Asian countries as well. Let me take you through the news first. Qatar Energy announced force majeure to affected buyers after announcing a halt in production last week. They indicated that the supplier can suspend deliveries without penalties. This is according to the contract, of course, and Qatar is one of the biggest producers of gas in the world, and this news has come in as a shock for the entire industry as well. They have formally notified the buyers that they will be unable to meet supply commitments due to circumstances which are outside their control. Now, if we talk about supplies coming in from Qatar or UAE to Asia, let's look at the numbers first up. India gets 59% of its total LNG requirements from Qatar, which is around 29% of its total gas requirements. Taiwan has 37% of its total gas supply coming in from Qatar or UAE. Bangladesh has 60% of LNG supply, 20% of total supply. China has 31% of LNG supply, 7% of total supply. The total supply percentage is lower because they do have a lot of domestic production as well. For Pakistan, it's 99% of LNG imports. And if we talk about the Strait of Hormuz, by end of February 2026, 91% of year-to-date transactions or deliveries went to Asian cargoes. So that was up from 81% in 2023 and 89% in 2025. So that particular strait is extremely important for gas passage to the Asian countries. Now do remember there has been an impact on Indian companies as well. For instance, Gujarat Gas announced that they will be cutting gas supplies by 50% to their industrial customers. GAIL said today that they are not getting any gas under contractual agreements from Qatar because of this force majeure. We did speak to Fertilizer Association of India today as well. They said there has been no problem with supplies till date, but if the conflict continues, they will see a big problem because their major raw material is gas when it comes to production of urea. And this will have ripple effect when it comes to household gases, LPG. We've not seen that yet because government could prioritize that and maybe increase allocation from domestic gas quota. However, if this conflict continues, there could be a bigger worry. So gas supplies will be the key to watch out for if this conflict continues.
Well, government sources are promising that there will be no cuts or rationing of cooking gas and fuel for consumers. Sapna Das gets us more details based on updates coming in from the Petroleum Ministry.
Well, it's but natural that after the disruption of LNG supplies from Qatar, the government, may consider or at least retains the option of reprioritization of domestic gas supplies, so to speak. But of course, the administrative ministry, which is the Ministry of Natural Gas and Petroleum, they'll not be doing it alone. This will be a stakeholder consultation, including, say, the Ministry of Power, Ministry of Chemicals and Fertilizers, and of course, GAIL is going to be the coordinator. So a bit early to say whether that's really going to happen, but that's an important option that they retain in case the situation worsens. Having said that, however, we also need to be clear, government sources rather have indicated very clearly that the individual retail consumer is unlikely to be impacted by any of this. It's the industrial users that will have some short-term issues to deal with, or rather some cuts to deal with. So individual consumers of, say, PNG,
LPG, petrol, diesel, they are not going to be impacted. That's a very clear indication coming in from top government sources. Last but not the least, the government of India is also in conversation and negotiations with a number of countries, most importantly the OPEC countries, in conversation with IEA, also in discussion with the US authorities to try and work out an insurance arrangement so that those vessels can start, transiting